Namaskara, Bengaluru. Today is very special day for us. Uh, not because it is, not just because it is 150th event or it is the first event in Bengaluru, but the biggest reason is that the place where we are sitting right now, Groww started just like, very close to this place. So it's like stone's throw away from here. So we are happy. Welcome to AIKG. Today, uh, today I want to tell you a story, uh, not about grow that you know from outside, startup, unicorn, large startup, and so on, but about a small startup, how it started from here in Kormangla, Bengaluru, and with small steps, uh, with a very simple purpose, and managed to get love of millions of customers like you. So let's so let me go back like 20 years back when I was in college. Uh, I came to know that you can buy a piece of a stock, piece of ownership in a company. And I walked into a bank, very large bank. And as obvious, they did not entertain me. I was wearing chappals. I looked very young, and I did not look like I have a lot of money. I still managed to get my my demat account. I started my investing journey, and of course, it was very crappy. I also remember this story because while I was sitting here, a lot of students came. How many students here? Like, yeah. So it's good to start early. So fast forward 2016, when four of us started thinking about Grow, and we were very convinced that customers deserve better. Uh, in 2016, financial services or investing was very complicated, was not accessible, or a lot of times it was also missold. And we asked ourselves, can we build something which is very simple, transparent, delightful, and can we change the way we think about money, right? In very few months, we realized that the biggest friction in what we want to do is lack of awareness about finance. And so here, very close to this place, we started creating WhatsApp groups with bunch of our friends, our colleagues, our relatives, and people started asking questions. And the amount of questions that we started getting in a day was like shocking. It was like proof. It was like a signal to us that how big this gap is. So we started answering questions on Quora. We started creating YouTube videos, uh, and so on. We also started building a very beautiful product, very simple and clean, and customers loved us. In the first month, we thought, by the way, that was like our deck from first investment round that we did. Um, the first month we thought, ki, yaar, if we get 100 customers, we should be good. But guess what? We got 600 customers. It's, it's a very small number if you compare today when we get like 1 million customers a month. But it was big enough for us to kind of give us confidence to fuel that aspirations that we wanted to be, right? And then uh, after that, we kind of kept building the product. Uh, every month, like number of customers was higher than the previous month. Our team, like very small team, like one of the founders would give customer support, always carry phone with him. Another one would code, another one would write videos. And the best part is that whenever we were on some outing, website will crash. And that's like a joke and Grow. Like whenever we go for outing or do kind of any kind of party, And there's like we were in Goa and we were supporting customer, but you can see we were smiling. So we were having fun while building Grow. uh, while we were doing this, people were skeptical. Like everybody around us used to laugh at us because we did not charge any commission. It was like we did not sell products. We also used to spend a lot of money in like supporting customers, building products, and so on. But then our idea was that if we can build a very solid product that customers love, we will be able to kind of build a very sustainable, enduring business. It was around January 2020. By the way, this is like one discipline that we kept where we always, every quarter, you will see an email from Grow about what we have shipped in last 3 months. Like in last 8 years, we have managed and discipline. The Grow Digest when that we started, like before even Grow started, we kept that discipline. Every day you will get Grow Digest in your email. And this is like the highest read newsletter in the entire country. On around Jan 2020 was the time when one customer called and he asked, he was from city like Indore, and he asked, why don't you have an office here? And then the leadership team of Grow, we started brainstorming, why do people want offices in, their local area? Is it because they don't trust us? So we went around, we asked customers, and we just wanted to know this simple fact. And we realized that it is not the trust that we were missing. It's just that customers wanted to talk to us. They wanted to engage with us. And that's when we realized that if we have to build an iconic brand, it's not a transactional relationship. It's a very deep relationship where you kind of, engage with people, talk to people, and so on. And that's when we have started AIKG. The first one was held in Mysore. This is the photo of that Mysore uh, event. And then COVID happened, and then we again started, and so on. So here, I think we are very grateful to that person who kind of who called us and asked us to have an office in Indore. We are also grateful to those 600 people who first onboarded on Grow and trusted a startup, which is like किसी कोने में कोरमंगला के किसी कोने में, like there's a startup there. We are also thankful to all of you who are coming here on Saturday, and and Grow is like with all your support, we are where we are today, like loved by like millions of people. uh, we are looking to kind of build a company uh, that is the kind of sustainable, enduring company that people like us would invest in, the kind of product that we will kind of use, and the kind of educational initiatives where we can change the way India think. We are also floored by the amount of love that we get from the customers. Like whenever I'm traveling and if I'm like wearing Grow t-shirt, people will stop me and ask me, oh, do you work with Grow? And then I'll say yes, and they will kind of express how much they love Grow and so on. Like you will see lots of customers wearing Grow t-shirts with pride, right? And there are extreme cases where some people kind of for their birthday celebrations, they have cakes in form of Grow, and rangoli with Grow, and 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 during Diwali, one customer said, I couldn't find that photo, but send a photo where there was a puja setup and there was a Grow app like kept there as well. Like it's like just so I can't tell how grateful we are about all these kind of the amount of love that we get. In fact, when people, like when we are 6 people team, 6 member team, 10 member team, and employees would go for like rentals or like anywhere, and they would ask, where do you work? And they would say Grow. And so what is Grow today? When they tell that they work with Grow, they get like special attention, right? And even Google, for example, now today, if you search just GROW, Google will suggest you, what is Grow. So that, again, like I can keep talking like this, but we have like very, very good set of speakers today. Again, I'm very, very thankful, and I'm sure you would enjoy the day today. Thank you so much.
Next, we have a fireside chat on a very fascinating topic: Lessons from 25 years, how to be vaguely right then precisely wrong in stock picking. All right, quick show of hands. How many of us here invest in stocks? Oh, wow. I think both hands should have been raised at this point. How many of us invest in mutual funds? Amazing, terrific. So this is the session for you because I don't know about you, but when it comes to picking stocks, I go into analysis paralysis. So why not learn from the person who's actually leading Rakesh Jhunjhunwala's Rare Enterprises, the CEO, Mr. Utpal Seth. So our speaker for this session is an investor veteran with more than 30 years of experience. He is the CEO and senior partner at Rare Enterprises and the founder and mentor of Trust Group. Mr. Utpal Seth is the protege of Mr. Rakesh Jhunjhunwala and also the manager of his fund. But first, here's a video clip to give you a little bit more insight into his journey.
An erudite gentleman who, over the last 3 decades, has researched and invested in a host of mid cap companies, which are now 8,000 point gorillas.
Wow. More energy. Good morning, Bangalore. Bengaluru. Amazing. So, moderating this chat is Jagdeep Singh, who leads the business team at Groww. You might have seen his YouTube videos on our channel, which has over 2 million subscribers. May I please invite Mr. Utpal Seth and Mr. Jagdeep Singh on stage? Big round of applause. Another round of applause for Mr. Jagdeep Singh and Mr. Utpal Seth. Uh, may I please begin by presenting this bouquet to Mr. Utpal Seth?
Thank you.
Good morning, ladies and gentlemen. Good morning, sir. First
Good
of all,
morning.
I would like to take an opportunity to welcome the audience for attending such a wonderful event. Sir, we are honored and privileged to have you on stage with us. I'm pretty sure we'll learn a lot from you in next 30 to 40 minutes from your last 25 years of experience in the investment industry.
Thank you. I'll try to share as much of my learnings as I can.
Sure, sir. So let me start with very first question. So uh, you always talk about gorilla framework for investment. So you say gorillas are rare, dominant, and long-lived. So this is your framework to select the stocks, and you have invested in very good companies in last 25 years. So we just want to understand ki how it actually works, how it helps you to invest in a very good companies.
Right. So first of all, you know the characteristics of gorillas are that gorillas are rare. So in a jungle you will have maybe 5, 10 gorillas. You will have maybe thousands of monkeys. So you are clear that you want to be invested in those gorillas and not in those monkeys. The second is that gorillas are dominant. You will not find monkeys around the gorillas. All the monkeys will be in a different area and the gorillas will be in a different area.
Correct.
And last, longevity. Gorillas' average lifespan is more than 2 times that of the average lifespan of monkeys. We are looking for companies which have that longevity. See, investing is a game of compounding. So you will want to look for not just companies which can compound at a faster rate, but companies which can compound for longer.
Correct, sir.
Most people focus on companies that can compound at a faster rate or grow at a faster rate. But we are looking for companies which have the longevity, which means they have the resilience to go through economic cycles
Got
and continue to create wealth. What are the factors which create these capabilities? So we found three important factors which um, make these companies gorilla companies. The first is what we call as mega trends. Second is leadership attributes. And the third is intangibles. Intangibles are things like the culture, the distribution model, the institutionalization of those companies,
correct.
etc. So I know it's a long-winded answer to a short question, but
No, I think it's a very good analogy ki how we can relate to gorillas and invest for a longer term. Because after the COVID, we have seen a shift in the mindset of the investors. Like now, lot of people, like lot of retail investors might look out for a shorter duration but a higher return. But compounding, they miss out because they don't invest for a longer period of time. So this is a very good framework to select a good company. But let us say you have a list of 10 stocks, and out of those 10 stocks, you have to invest in only 5 companies, and remaining 5 you have to discard. You don't want to invest in them. So what are the different parameters or the factors that will help you to avoid bad investments? Because I know ki lot of people, because of lot of biases, they end up investing in bad companies, and that bias will simply wipe out their capital.
see, resisting temptations and distractions is an important part of investing.
Correct.
Investing needs to be disciplined, it needs to be focused. You have to think of investing as a strategic um, decision rather than as a tactical decision.
Got it.
Okay. However, we talked of those gorilla companies, but when those gorilla companies become part of your portfolio, then
Okay.
it is important to understand how your portfolio evolves. So let's say you start with a 20 stock portfolio, thinking that all of these 20 are going to be gorillas.
Got it.
When you invest in them, you have no certainty that they are gorillas.
Correct.
Let's assume that maybe out of those 23 of them turn out to be gorillas. You are still not sure about 12 of them, but you are sure that 5 of these are monkeys and not gorillas.
Got it.
So at that point of time, you move out of those 5 and invest in another 5 whom you think will be gorillas. Like that, over a period of time, more and more number of stocks in your portfolio will be gorilla companies. However, those gorilla companies are growing or compounding at a faster pace as compared to other stocks in your portfolio.
Got it.
And therefore, in any case, gorilla component of your portfolio will become larger.
Got it. And it will keep on compounding and give you a better return.
Yes.
But if I talk about just like one or two parameters which you seek, if this is not working perfect, I will simply not invest in that company. It might have a very great growth potential. What is these two or three parameters?
See, if there is no mega trend,
Okay,
for example, then I'm not keen on those companies.
got it.
If there is no leadership attribute, then no point in tapping that. So megatrends create the addressable opportunity for that company and that business model to tap. However, if the right leadership attributes are not present, then though the opportunity is present, you may not be able to tap into that opportunity, right? To give you an example, in the 1990s, the whole IT services wave
Correct.
was there, and there were more than almost 100 IT services companies.
Correct. Those evolved during that time.
But how many of them created wealth? Maybe 10 of them, maybe 15 of them. Remaining 85 did not.
Correct, sir. So, sir, like you mentioned about leadership, and a lot of people also mention about management. Leadership becomes very important to drive the company because if you're sitting in a bus, the driver is the person who is taking you to the destination. So, for the retail investors, like people like us who are hugely dependent upon the annual reports, con calls, or transcripts, or the management interviews, like what is the best source for us to understand how management is doing, how we can objectively evaluate the management?
So Rakeshji always used to teach us that investing is an act of wisdom, not an act of intellect. Okay. So every investor has that wisdom and keeps evolving. Okay. You don't need to know everything about every stock. You must invest in those stocks where you feel you understand the business, you understand the promoter, and find your opportunities within that limited space, within your circle of competence, as we call it.
Correct, circle of competence.
Right? And people focus too much on just stocks. They, if you actually think about it, the composition of your portfolio is as important as the stocks that you buy.
Got it.
So, for example, if you buy the right stock, but that stock is 0.5% of your portfolio, then not much can come out of it.
Correct.
If you buy the right stock and make it 5%, 10% of your portfolio, then that is when it counts.
Correct.
So I would encourage retail investors to also think about how stocks are weighted in their portfolio.
Got it. So I think the audience, some people are not aware of if the circle of competence. So it's a very good framework to start investing. Like a lot of you new people are coming to the investment world. So for example, if you are a doctor, so healthcare industry might be the first industry that you understand quite well. So that's how you can start your investment journey. Okay, thanks a lot. That was a very interesting answer, sir. So, next question is another very interesting question, I would say. So, let us say you have selected a stock, and whenever you select an asset, you always expect some return out of it for next 10 years or 5 years. And let us say you have expected a return of 3x in next 10 years, but that stock has given you a return of 3x within 1 year. So, what should be the mindset at that particular stage?
Eric Smith has said very nicely that we end up overestimating the short term and underestimating the long term. So rather than thinking of the returns that you've already got, I would encourage you to think about the returns that are yet possible.
Got it.
Okay. So if you are standing at the base camp of Mount Everest, you can't see the Mount Everest because of, say, low visibility,
Correct.
because of clouds or whatever. Does not mean Mount Everest is not there. You don't need to know the exact height of Mount Everest at that point of time. You just need to know that it's a really very, very tall mountain out there. So always think of the potential which is yet to be captured, which we call as terminal value investing, rather than thinking of the returns that you have already got.
Got it.
So, one of the stocks that has worked out very well for Rare, in which Rakesh invested, he bought the stock at, let's say, a price X many years ago. He bought it at 1.5x, he bought it at 2x, he bought it at 5x, he bought it at 9x. But the most important part was he bought it at 30x also
30x from the investment.
from the first investment, because his conviction in the terminal value kept on rising. So you have to follow your conviction. In your mind, you must remember that investing is also probabilistic portfolio management. So when you feel that the terminal value is much higher than what I had thought earlier, you have to be able to increase the weight.
Correct.
Unfortunately, most people have fear of heights. Most people sell 30% above.
Correct.
Where is the question of buying 30x? But that was the genius of Rakesh.
I think that is the point where discipline comes. Like a lot of people are driven by the behavioral biases. Like bias will say, "Ki, okay, 100% return is done. They simply exit out of it." So you mentioned about terminal value of investment. So how frequently we should keep on reevaluating the terminal value? Because for like common people who are hugely investing on in the public listed companies, annual report is something that we normally look out for, and quarterly results come after every quarter. So what do you suggest? After how much time we should reevaluate our portfolio, and what should be the trigger points to reevaluate those things?
So, see, reevaluating portfolio is something that you must do on a regular basis. I would say at least every quarter. However, you don't have to reevaluate on an everyday basis. Things are not changing on an everyday basis, especially if you're a long term investor, which we encourage you to be. In our assessment, probably 80 to 90% of market participants are thinking of a time frame of less than 1 year. Okay,
Certainly.
maybe 10% are thinking 1 to 2 years or 1 to 3 years, and maybe 5% are thinking of 3 to 5 years. But beyond 5 years, there's probably 0.5% to 1% thinking beyond 5 years. So the competitive dynamics is very different there. And you need to evaluate those longer term impacts. And that helps you to keep your equanimity and patience with your investments. Otherwise, you are thrown off by the volatility,
Correct.
right? So your state of mind is as important when you are investing.
Got it.
So while discipline is important, your conviction in your investment hypothesis is more important.
Correct.
If you don't have that conviction, then the discipline won't help. If you have that conviction and don't have the patience or equanimity, then that won't help either.
Correct.
So you need all of those components. You need the conviction, you need the patience, you need the equanimity, and you need the discipline.
Got it. I think this is a very important point that we all should carry about. Like we all invest for a very shorter durations where we are normally wiped out by the volatility as sir mentioned. So we should start thinking about how to invest for a longer period of time because only then the compounding benefit will come in picture and we can actually create wealth. But sir, we have seen a lot of people have a lot of conviction in a stock, and because of over conviction, I would say, and overconfidence, they keep on averaging the stock. And a lot of people say, "Ki don't catch the falling knife," but they keep on catching it. And literally, I have seen in last 3 4 years, people have lost a lot of wealth in such kind of companies. So, what is a like thin line where conviction needs to be objectively thought about, and they should exit out of those companies?
So the whole point is, um, when you have conviction, you also need courage.
Correct.
right? To buy. There are people who have conviction but don't have the courage to buy. They miss out. At the same time, there are people who have the courage but don't have the conviction. They're foolhardy. Okay? Conviction is not just be thumping your chest and saying that I have the conviction. Conviction means that your conviction has to be based on what we call as a differentiated insight. Unless you have some superior understanding about a company, it's not superior information, mind you. It is a superior understanding, right? Which is why we call it differentiated insight and we don't call it differentiated information. So when you have that differentiated insight, that means you have that true conviction. And then if the price goes against you, you can be patient. Doesn't mean that you have to keep averaging. However, if the price reaches a stage where your conviction multiplies, then, but you have to test your conviction. So again, Rakesh ji has taught us one beautiful quote. It says, your patience may be tested,
Got it.
but your conviction will be rewarded. Right? So I believe in that. With the scenario that you mentioned, where you keep buying at a lower and lower price, thinking that you have conviction, it means you are not revisiting your investment hypothesis.
Correct.
At every 20% down, you have to revisit your investment hypothesis. And if your conviction and your differentiated insight still tells you to continue holding, you should continue to hold.
Got it, sir. So next question is very interesting. In the
I'm sorry, I missed one point.
Yeah.
See, continuing to hold, whether down or up, is important. But the most important part is whether you are able to add down or up.
Got it.
Okay. What we find is your initial bet is typically 1 to 2% of your portfolio. And then when the time comes to make it 5% of your portfolio, you hold back.
You hold.
Right? And when we discuss mistakes, I will elaborate more on this.
So let me move to the mistakes chapter. So this is related to late Rakesh Junjunwala sir. He once mentioned कि mistake is not a crime. Repeating a mistake is a crime. But not learning from your mistake is the biggest or the greatest crime.
Yes.
So I just wanted to understand from you, like in last 25 years, like you must have made some mistakes while doing investment. How the learning from those mistakes has made you a better investor or a better informed investor?
Sure. See, we have had our share of mistakes and we are not ashamed of making mistakes.
Correct.
There's no problem. However, we find that most people have this inherent tendency to avoid mistakes. We feel avoiding mistakes makes you avoid opportunities also. So you should not have an aversion for mistakes. Okay. What you need to learn is how to make mistakes that you can afford so that you can live to make another one.
Got it.
Right? That is point number one. Point number two is you must ensure that every time you make a mistake,
Like,
I'm sorry, every time you make a mistake, you have to have a hypothesis in place when you are making the investment decision. It could go wrong. Every wrong investment decision is not necessarily a mistake. People only think that if I made a loss, then that is my mistake. Or if I made a big loss, then that is my mistake. We don't agree with that approach. We feel that there are three kinds of mistakes, and most people who are maybe economists or statisticians or accountants will understand two of them. One is what we call as error of omission, and one is what we call as error of commission. So error of omission is where you decided that this stock is worth investing in, but so you build the conviction, but you did not build the courage, and therefore you did not buy, and that stock goes up. That is the error of omission. The error of commission is where you bought the stock, you build a conviction, but your conviction was wrong and the stock goes down. That is the error of commission. However, there is a third error. So all errors of omission, let's say in statistics, they are called type 1 errors. All errors of commissions are known as type 2 errors. But I would suggest to you that there is a third error which is not mentioned in any of these textbooks, and that is what we call as type 1.5 error. That is the error of reluctance, which means you made the bet, it is 1-2% of your portfolio, and when your conviction goes higher, you don't end up increasing the bet.
That is the biggest mistake.
And that is the biggest mistake, because this is the known devil for you.
Got it.
It's not an unknown devil. You you have a hypothesis, that hypothesis is validated, and yet you fail to increase the weight. And that, I feel, it leads to the largest opportunity cost. People only think of what was my loss. People do not measure opportunity cost. And when you measure opportunity cost, you realize that the opportunity cost is actually 10x of the actual loss.
Got it. So you mentioned about you want to take a risk, like mistakes. We always learn from mistakes, and we are discussing about mistakes. And if I have to like just start investment, a lot of people are there who have to just start their investment. So what should be the capital that they should think, okay, that is okay, that if I put out of 100 rupees, let you mentioned about 2%, कि 2% is the amount you can take a risk. अगर वो wrong जाता है तो you can increase it or decrease it. So 2%, 5%, 10%, what should be the a weightage of overall portfolio that you should say, okay, I will okay to do mistake with?
So first of all, I just gave an example. I'm not recommending
Yeah,
2%. Also, I feel it depends on each person's circumstances and their goals as to what kind of risk they are willing to take.
got it.
However, I would say that when you take a risk, the risk is not just, people think of risk in terms of only one stock. People do not think of risk in terms of the risk of the whole portfolio. So let's assume you have 15 or 20 stocks in your portfolio. And if you go wrong on your judgment of maybe a few of them, maybe 3-4 of them, then those 3-4 of them, if the weight of those 3-4 of them in your portfolio is 15%, let's say, then, and you lose 20-30% on that,
Correct.
your overall damage is still going to be 3-5%. So think in terms of portfolio construct rather than individual stocks.
Got it, sir. I think opportunity loss that you mentioned is very important that we normally miss out, and a lot of people does miss out. Like hypothesis is correct, but you are not able to put your capital, and that capital is lying down, and you completely missed out on it. So next question is कि a lot of people follow the portfolios of superstars, like those all the information is publicly available, and people who are coming new to the industry, they simply follow those portfolios and keep on investing without looking out for their own personal risk. What is your suggestion for such kind of investments?
So see, there is no harm in following portfolios of super stocks, but not to follow it blindly is most important.
Correct.
So you follow, see what they are doing, try to understand why they are doing what they are doing. And you know what they have bought, but you don't know what is the weight in their portfolio of that stock, right? So if you end up making a disproportionate weight in your portfolio of that stock and something goes wrong, that person is not going to come and tell you to sell, right? So you can follow somebody on the buy decision, but on the sell decision, you will have to take your own judgment. Even on the buy decision, if you follow blindly without building your own conviction and differentiated insight, then what will happen is that when there is volatility, you will be the first to run away. Whereas that person, because he has his or her own conviction and differentiated insight, will not run away. And if you run away, you may not be able to buy it back in time. So you will miss out on that accordingly.
Got it. So I think people normally miss out on the portfolio basis. They normally look out for each and every stock, not on the overall portfolio. That's why they miss out on the risk appetite. So how, risk appetite is another important factor that can help you to identify the stocks key, which kind of stocks you should invest in, and how to gauge the risk appetite of an individual. I know everyone has a different factors, like it is dependent upon my age, it is dependent upon my income and all. So some parameters you want to mention to the audience that will be helpful to understand or gauge their personal risk.
So, first of all, I think nobody will want to put their family at risk.
Correct.
So, leverage is something that I would say you should keep away from.
Got it.
Secondly, nobody wants to lose their peaceful sleep. So, you have to assess what is it that will prevent me from having a peaceful sleep.
Got it.
That is your risk assessment.
Got it. Got it, sir. Uh, Next question is ki PE ratio, price to earning ratio. Normally, it's a very generic term and all talk about it. And in some sectors, we have seen ki PE ratio has been very on a very higher levels. So, do you have any range that you normally look out for that is comfortable for you to make an investment in that industry or in a company, even though there are a very high growth opportunities in future?
So, investing is not mathematics based. Is it's there's no formula. And again, I'll quote Rakeshji that like beauty lies in the eyes of the beholder, in the same way, value also lies in the eyes of the investor.
Got it.
Okay. So there is no formula that this PE ratio is right or wrong, which is why we advocate this philosophy of terminal value investing, where instead of thinking about value today, you are thinking about value 10 years from now. Okay. And that value is a dynamic value. So it's not that today, if the stock price is 100 rupees and terminal value in my mind is 1000 rupees, then that remains static. So which means 6 months from now, 2 years from now, in my mind, the terminal value remains static. That's not true. That terminal value also keeps changing. So one has to keep assessing the current price versus that terminal value in on a periodic basis.
So I think that is a common mistake that we normally does. We just look out for one or two parameters and we kept on missing for a bigger picture that normally evolves into the terminal value.
See, we have all evolved.
Correct.
When I started my career, I was also doing the same thing.
Got it. So looking out just few factors and doing the investment and learning from those investments and again coming out. Got it, sir. So next question is very generic question. Ki how do you see the outlook of the Indian markets for next 2 3 years? Like how do you suggest to the new investors?
See, I think India is an idea whose time has come. We've reached a critical mass. Um, I would also say that India is on its way to earning the right to be an independent asset class within emerging countries. And third, I would say that a structural change that has happened is that the marginal buyer today is domestic capital and not foreign capital.
Correct.
So the influencer of prices is the domestic capital. Okay. And that is changing the vulnerability dramatically. So Indian markets earlier were vulnerable to foreign flows. We are now far less vulnerable to foreign flows. I think there is a structural reduction in volatility as well that we are seeing, and that reflects the increasing maturity of the Indian investors. There is also a structural change in the demand and supply of equities. So in 2016, for the first time, provident funds, pension funds were allowed to invest in equities.
Correct.
Now, since then, they have been investing 15% of their incremental flows into equities. That has become a very, very strong support and for the markets, and that has reduced the volatility. The whole SIP wave in amongst retail investors and has also been very strong, and that is reducing volatility. The third is the relative favorable taxation of equities as compared to any other asset class is also a huge motivator for increasing asset allocation towards equity by retail investors. So I think all of, and lastly, on the supply side, government used to be a continuous seller in terms of PSU disinvestment every year, which has not been happening for many years now. So there is a fundamental change in the demand supply of for equities in the country, and the supply side response is taking a long time, which means we are not getting adequate supply of equities. That will happen over a period of time. But as of now, we are in this Goldilocks scenario where it is not too hot, it is not too cold.
Got it. And even I just want to compliment the retail investors for the same. Like the quantum of SIPs that are going and that has increased in last 1 or 2 years after COVID, that is like significant. Like people are showing their trust in the market. Whenever you see a dip, people are putting more money. Like literally they are
True.
increasing SIPs and all. And SIP also improves your discipline in the market also. Like it automatically keep on buying more at a lower prices.
True.
So next question I want to take related to your legacy with Rakesh Jhunjhunwala sir. So he used to say you and Rakesh sir make 1 plus 1 equals to 11. So what are the different personality attributes that you used to complement each other?
See, I think I've had the good fortune of walking this wonderful journey along with Rakeshi. He he's an he's a absolute genius.
Correct.
Okay, so very few people are great traders and great investors. I don't have those skill sets, therefore I can't replicate that. But I've had the privilege of learning a lot from him. Um, I will just say that some of his words always stay with us, and I'll share some of those with you. One is your word is your bond. Second is that we value people for what they are or who they are rather than for what they have.
Okay.
Right? So you focus on relationships and not on net worths.
Okay.
Right? And he also said that you have to lose many a battle to win the war, where he used to quote Churchill on that. And my favorite one always, which I'm now repeating, is your patience may be tested, but your conviction will be rewarded.
Got it. Got it, sir. And any disagreements where you had with Rakesh sir, where like some constructive discussion came out of it?
Yeah, there are many differences of opinion. Our investing styles were actually different.
Correct.
And I think the blend of two opposing investing styles uh, is also something that worked very well for us.
That complemented each other and overall.
Yes. So I think he was right that 1 plus 1 um, worked out well for us. But I can tell you that amongst all the investors that I have read about globally or in India, in terms of the breadth of understanding, in terms of the adaptability, in terms of um, dispassionate decision making, I am yet to find any other investor who's anywhere close
Got it, sir.
to Rakeshi.
Sure.
Hmm.
Uh, Another question is related to financial statements. I already mentioned about the same. So this is more related to retail investors. What are the different portions of the investor presentation or the annual reports that any investor should not miss out? Like annual report only comes after a year. So if you can tell me ki these 2 or 3 things you should not miss reading after every year if you have invested in some company.
Sure. Then I would say understanding segmental numbers
Okay,
is very important. And those segmental numbers are a reflection of the quality of the business. They are also a reflection of the quality of the business model. And second, I would say would be the cash flow statement. Those two, I would say, are most important for me, because I value quality much more than I value the numbers.
Got it, sir. Uh, Last question I would just want to ask, if you have a portfolio and you always keep on churning some stocks, reducing the stake, increasing the stake. So how do you decide where to cut the stake? I know like you already briefly talked about the same monkeys. If you see some stocks are behaving like monkeys and they are not turning out to be gorillas, you will keep on reducing the stake. Or there are some other reasons also which will prompt you to cut some stakes out of it.
See, our average holding period is really very long.
Correct.
So our churn rate is actually quite low. And whenever any of our investment hypothesis is invalidated, then that is a cause for exit, irrespective of whether we are making money or losing money.
Correct.
Okay. Whenever we find that the relative opportunity cost is too high, or we find some new opportunity which is very compelling as compared to the existing ones, then that is a time for us to shift, to switch. Okay. But one thing I will say at the end of all of this is that the Rakesh used to say the greatest risk of investing in India is not investing in India. So I would say to everyone that, be clear that India is going to be in a tremendous wealth creation phase going forward. There will surely be volatility in between, but that is part of the game. And in this process, it is imperative that each investor participates appropriately.
Got it, sir. So I think we all have learned a lot from you in last 25-30 minutes, like some concepts like gorillas, monkeys, and terminal value of a stock, understanding the risk appetite, and opportunity cost that we normally don't value a lot. So thanks a lot, sir, for this insightful session. I just want to thank you from the behalf of the audience also. Thank you
Thank
very
you.
much, sir. Thank
Thank
you.
you very much.
Thank
Thank you for inviting me to this.
Thank you, Mr. Utpal Seth and Mr. Jagdeep Singh, for this most illuminating session. Terminal value of investments is definitely a concept that will stay with me for a very long time. Now, on to our next topic. Where will value creation happen in the next decade? Sandeep Tandon will share his perspective on sunrise opportunities in the next 10 years. Let's watch a quick video about him first.
That is one mutual fund from being a very small sized fund 3 years ago is now one of the giants of the industry. And with me is the man who's made all of it happen. Sandeep Tandon is founder and chief investment officer.
Right. Moderating this chat is Mr. Neil Borati, Deputy Editor at Mint. Mr. Neil Borati has been writing about personal finance for the past 8 years. He even co-authored the book The Big Bull of the Lal Street. Here's a bit more about him.
People know Neil for all things personal finance. Over the last few years, Neil has emerged as a credible advocate of the Indian investor.
May I please invite Mr. Sandeep Tandon and Mr. Neil Borati on stage for our next session. Big round of applause. Thank you for joining us today, sir. Please.
So, Sandeep, over the last couple of years, you made a lot of people extremely happy, to their surprise, and the other half extremely unhappy, usually the neighbors of the former set. A lot of people in the audience are stock pickers, and one thing that all stock pickers do at some level is to compare themselves against a mutual fund. Now, I don't know how many people here can honestly say that you've beaten Quant Mutual Fund over the past couple of years. In your show of hands, Quant Mutual Fund, any scheme of theirs, okay, one. So, so a lot of FOMO you've created, a lot of people curious to know how you do it. And in fact, I am also often asked about Quant. Um, two things. One is people don't know how it works, matlab, it's just how you do it. And that keeps people on the sidelines. People say that because I don't understand it, I will not invest. Um, the other thing is people say that it's a temporary phenomena. It's 1 year, 2 years of massive returns. This will mean revert, and that keeps people away as well. So if we can start with, if you can tell us in 3 lines, what makes quant work and so well?
So I'll put in very simple terms, like every investor chase returns. Okay. We very proudly say we are in the business of risk management. Returns are byproduct. The day you start assessing your risk and managing risk proper, things will change. The problem only starts when you chase returns. Okay. At the peak of the cycle, you are sucked in. At the bottom of the cycle, you are capitulated. And this is the one aspect which help us because we are not emotionally attached with anything. Okay. And hence we are able to generate a superior risk adjusted return on consistent basis over years.
Okay. So Sandeep, if I could go into your history a little bit, in 2022, most mutual fund houses were avoiding um, a particular corporate group. I won't name it. There are restrictions. Um, but you guys ventured and reaped the huge returns from it. And in Jan last year, there was some news about the group, and report came out, a lot of panic. At which time you exited. So what was the thought process at that time?
Again, I will link this question with the risk. So there are two types of risk which you have, both known and unknown risk. Okay. Known risk, okay, let's say people say election outcome, but it's a known risk. It's not an unknown risk. You know this risk, this particular date election will going to happen. So it's a known risk. When anything unknown came, let's say last budget, something came on the insurance sector, it was unknown. Okay. Or geopolitical risk are unknown. What is important for us to understand how you manage your risk, both known and unknown risk. When unknown risk hits you, your ability to manage and come back is very important. So let's say example with Neil talked about or corporate event happen. So we have 6% exposure to this group. Okay. The impact was not very meaningful. The collateral damage was somewhere else. The collateral damage was PSUs. We have more than 20% or 25% PSU exposure. Okay. So if you really sit back and analyze 1 year later now, or maybe more than that, we were way ahead in taking a PSU call way back in 2023 versus 2024, where we are seeing some amount of euphoria getting built. So that's first important. Now let's look at the question which he asked: how you manage the risk. So let's say with that post event, we were the worst performing mutual fund in that particular month. Okay. That particular quarter, we were the last in all the categories. Come July, March quarter 2023, we was performing. Come July 2020, the second quarter, we were the last quartile. But come January 2024, we are number one again. Okay. So what is very important is that how you manage your risk. Okay. If it's a risk off period, then you have to lie low. That was the risk off period. You lie low. You don't have to venture out. It's like you fail something and you try to take risk and then you will be completely clean bowled. When risk on cycle came in our favor in October and we said on the call the risk on rally on the horizon, we played it very well. We played on front foot. We generated extraordinary alpha what we lost earlier. And that's our thesis. Let's say in 2020-21, when cycle was in our favor, we generated superior alpha or extra alpha for difficult time. In risk off period, you lie low and just protect the capital. So that's the way you manage your risk in a risk on risk off phase, both known and unknown risk. If you manage it, then it generates superior risk adjusted return. And that is the way we say we are in the business of risk management.
And you've now transitioned from that group to another very, very large group. So, we've written about this in Mint as well.
Yeah.
Do you see that as this kind of concentration as a risk? You have it across several schemes.
So this question come quite often. Okay. I'll answer that when we take concentrated bet, it's all about conviction. Okay. I think Utpal Bhai was talking about how the conviction is important. Okay. Your patience can be tested, but conviction should not. Okay. So conviction is based on our analytics. Okay. So it's a data driven organization. When we take conscious call through data, no emotional attachment, then you are more successful. And we have demonstrated a number of times that we have taken a very concentrated bet in the past. In 2020-21, one of the large corporate company and people was that stock was in a most hated zone and people have neglected. We made tons of money. We did again in a group which Neil talked about. Now, best of the firms have a buy report on that. So 1 year back, it was a neglected territory, hated zone. Nobody wants to touch it, untouchable. Today's they are in admired territory, and this is the where our edge comes into picture purely from behavior perspective. We buy stocks where it is a neglected or hated zone. We prune our exposure when you hit the admired territory or most admired territory. That's the way it works. So as a behavior house, we are trying to capture the inflection point. We don't trade momentum. A lot of people confuse, okay, quant is a momentum house. We are actually a inflection point strategies. Extreme inflection points, we are very aggressive, whether it's a buying inflection or selling inflection.
Now, Sandeep, we are supposed to talk about value creation over the next 10 years,
Yeah.
but your portfolio changes 10 times in 1 year. Um, so given No, you call it dynamic, right? You don't have this thesis that, look, I'm going to pick companies that will do amazingly well for the next 10 years. You change your mind all the time. Um, so, can you explain that strategy a bit more? Like, how do you take that long-term horizon also into account?
Okay. So let me break this myth. Okay. We do take decadal calls also. We took long-term calls also. See, our money management style is like a treasury money manager. In a treasury, what is the mandate for a treasurer? Not to lose the capital. That's the first rule. Second thing, don't take unwarranted risk. Okay. You can't have a situation that treasurer 1 quarter can for unknown risk and negative return. If the treasury of a large corporate houses keeps on giving negative return quarter on quarter, the treasurer will be sacked because that is not his mandate. Mandate is to generate alpha quarter on quarter, month on month, not taking unwarranted risk. Now, this is the philosophy we follow through our active, absolute, and unconstrained style. What is very important to understand is that we live in a very dynamic world. So money management style cannot be static. It has to be dynamic, and hence rebalancing comes into picture. A lot of people define as a churn, the point which he talked about. Let's look at Utpal Bhai was talking about long-term investment. Their investment style and their investment is more from a private equity perspective. They have 5 years and 10-year horizon. Long accounts took a yearly, so they rebalance their portfolio on 5 yearly basis or 10-year basis. Some of the long account hedge their portfolio on yearly basis. Some of the hedge fund rebalance their portfolio on quarterly basis. And traders, maybe traders sitting in this room also hedge their position on daily basis. So what is important is that what is your need, how you define your style. When we manage money or from a risk perspective, we take the way portfolio is constructed. We have a decadal call, long term call, medium term call, short term call, hedge call, cash call, even special situation. So it's a combination. See, when you look at from a very simple risk perspective, when we everybody say I'm a long term, yes, investors are long term, asset classes are long term, stocks and sectors are not long term. Remove this myth, this stock is long term. There's nothing like that in life. Why everybody talks about long term? Because managing long term risk is very easy. Your mistakes are hidden for 10 years perspective. If you say you make 3 mistakes, 10 years it's hidden. When you manage your short term, medium term, and near term risk, you don't only protect your downside, actually generate alpha out of it. And that's what we practice. So it is very important to understand how we identify. Let's talk about the thesis we talked about, how you assess a long term. So we take a decadal, multi-decadal call can be identified through Earth analytics. So we in 2012, we have written about how from December or the end of 2019 till 2033 globally, what will happen. Okay, how geopolitical volatility will spike. We have talked about a biological war and cyber war in 2012, how this phase would be. So it's very important that how you can conclude with the help of predictive analytics. That's something which we have built, okay, for a long period of time we have been practiced. So Earth analytics can give me or data for multi-decades. If I have to take a decadal call, I can help through a cycle analyst or macro analyst. If I have to get a medium-term call, next 3 years call, we use volatility cycles. So if I have to talk about very short term or near term, we use money flow analytics. So everything has to be mathematically decoded. We are student of applied maths, applied economic, applied science. We don't have to write a white paper out here. We want to capture every moment. So we define ourselves as an unconstrained fund house. Idea is very simple, that we are opportunists. Anywhere, if I look at superior risk adjusted opportunity, we'll try to capture. So we will never call ourselves that we are value investor, we are growth investor, or I'm a techie. I'm pure opportunist. Wherever I generate superior risk adjusted return, that's the thesis of quant global research, and we will optimize that opportunity.
Now, Sandeep, over the last decade, a lot of value creation has come from banks, IT, pharma, etc. Do you anticipate a change in market leadership? There's a lot of talk about China plus one, Make in India, etc. Will manufacturing actually take center stage?
Yeah. So it's a good question. So before coming to this specific point, let me give you a larger thesis. The whole investment community talks about for earning forecasting. Okay, you forecast earnings and burst of the analyst 3 years, 5 years. However, it's obviously depending on the some amount of assumption. That's the reason you have positive or negative surprise. What we do very uniquely is about through perception analytic, we forecast the valuation multiple. Okay, so if I look at from a perception analytics perspective, India, in absolute terms, India is one of the macros, one of the best in the world right now. But relative basis is extraordinary. Relative to China, relative to US, relative to other developed market, we're in a very unique situation. So in our thesis, both absolute and relatives are very important. Now, like coming back to this question, now, when I'm talking about India perception has changed, we say that this decade belongs to India, maybe half century belongs to India. That is level of bullishness is there. Something has changed for India. And hence we all advise a lot of people don't move out. You can do sector rotation, stock rotation, scheme rotation, but don't move out from the market because a unique opportunity you will miss out. Now, looking at with this background, we think if I have to look at from purely from a perception, we believe that easy phase of banking is over because leverage economy as a concept globally is declining and the relevance and banking is a byproduct of leverage economy as a concept. That's the reason we are relatively more cautious. Okay, and hence we feel that IT boom which we have seen or the banking returns which we have seen, the next decade thesis is all about manufacturing and infra. Okay, and obviously infra is also, it's a very broad subject, manufacturing is also very broad, but these two themes can last for few decades, not few months or few years perspective. So that is the thought process we have. If I have to take next 3-4 decades call, I think these are the two areas one should invest.
So, Sandeep, if I can play devil's advocate with that
Yeah.
for a minute, we've all benefited from the boom in the Indian stock market over the past couple of years. But is it time for us in this room and throughout the country to have an India plus one strategy? Because no, in how long this can last, how long these kind of returns can last, I'm sure is a doubt that many of us have. You don't as yet have a global fund. Any plans to go there?
So, first of all, obviously, with a lot of restrictions right now, it's restricted. You can't launch any global funds right now because mutual fund as an industry has hit the limit. Okay, but I will say from a this decade, let's talk about this decade perspective. India risk profiling, if I have to look at India as a country versus US or any other China or any other country, I think the risk adjusted return in India will be very unique. You will get the best risk adjusted indicate for India. That's the level of confidence we have. But what is very important to understand, okay, what was the question I missed out?
Global diversification.
Okay, you're talking about India as an asset class. Okay. Now, the point which we are trying to highlight, yes, India is in a very unique situation. To emerge India as a asset class will take some more time. My personal sense is that maybe by end of 2025 or beginning of 2026, that's a time when global market for whatever reason start underperforming or consolidating, then India re-emerges again. So this is a game of relative basis. If US underperform, okay, for let's say for 6 months or 8 months perspective, 1 year perspective, and if I go from the, let's say, India risk appetite versus a US risk appetite, India liquidity versus global liquidity or US liquidity, and if I combine that aspect, then I can say if 10% money shift from US towards Asia centric emerging market in India in particular, there will be tsunami out here. That level of liquidity inflow will come. Okay, so one has to understand the perspective. Don't look at, lot of people give me answer, okay, what was the valuation in 2000, what was in 2018 or 7 8, we are in similar situation. I am hearing this narrative for last 1 year now. Market doesn't fall. Why it doesn't fall? Aspect, or when we do multidimensional research, you get answer. If you are looking at purely from valuation aspect, yes, well, markets are slightly stretched. Answer is yes. The moment you bring liquidity aspect, what's the liquidity in 2000 versus 2024? We are few hundred times. What was the liquidity in 2007 8? Let's say the post Lehman crisis. People know that every central bank work in a tandem and a very cohesive manner. Global liquidity was a lifetime high. Today, global liquidity is even higher than it is few times of 2007 8. What, so if I have to look at the second aspect, when you talk about valuation, is the one dimension. Second dimension, we bring a liquidity. There is no sign of any problem. Third aspect, you bring the third dimension. You bring, it's all about the risk appetite sentiment. What was the sentiment of 2007 8? India barely managed that crisis. 2018 versus even 2024, the perspective is very different. India is in a very different league. So the third dimension is not also giving any signs. So when we talk about these three dimension aspect into angle, then you realize the problem is only in one dimension, two dimension data. So two-third weightage is supporting the bull run, one-third is not supporting. And that's the reason we bring the fourth dimension, the timing. So a lot of people think timing is a risk mitigation tool. Timing as analytics is a function of all three: valuation analytics, risk appetite analytics, and liquidity analytics. When you combine as a whole, you get a very different answer. And that's the reason I'm saying, if you have a big vision, 10 years perspective, few decade perspective, India will emerge as a separate asset class, but it will take some time, maybe a year or two. Okay, and if once it emerges as asset class, what happened China in the past, how China emerged as an asset class, how US is a separate asset class. India is in that unique situation. For that, everybody has to have patience and believe India's story and don't get move out of the market, because we keep on hearing on the media narrative, okay, market valuations are stretched, very expensive, you should raise cash. If you really believe India's story, then I believe that is a finest wealth creation opportunity, both in absolute term and relative terms. India is in that unique situation.
All right, Sandeep, let's turn our attention now to mid and small caps. They've had a massive rally in the past year. Um, SEBI itself is concerned about the valuations, and they've asked the mutual fund industry to do stress tests. How soon can MFs liquidate their portfolios if there is an adverse event? Um, Now, one of the justifications given for the mid and small cap rally is that there are many sectors in mid and small cap which are just not there in the benchmark index. They're not there in the Nifty and Sensex. Um, do you agree with that? And are there other reasons also that has driven this? And will it sustain?
Okay. So obviously, when we see market as a whole, obviously regulator's responsibility is to keep on give you warning sign. Obviously, some amount of hype got created more on the SME space where liquidity is hardly anything. Everybody was chasing. I don't think there is any euphoria in a broader market. Okay, even mid and small, we don't see any euphoric signs where we can say market has peaked out. Okay, as an example, if you look at pure valuation, you have different answer. When you combine multi-dimensional research the way Quant Global Research does, then you have a different answer. Now coming back to a very specific thing, if we believe India manufacturing story or India infrastructure story, then I think all mid and small will do very well. Maybe it has done extremely well in last 3 4 years, so maybe next 1 year 2 years it can correct, it can consolidate. But if you have a decadal view, 10 years view, then perspective is very different. The problem what happens is that at the peak of the cycle the risk appetite of every investor is high, but whatever reason market correct, the tolerance levels for that risk appetite was never there. It was just a perceived value. My risk appetite is also high. If you can assess your risk appetite and your investment horizon, then I think you will be winner in this game. What is very important to understand, it's a decadal opportunity. We are not worried about. If you have that vision, then definitely mid and small will do very well, and particularly small, because the challenge with this mid cap space as per SEBI definition is between only 100 to 150s, 150 till 250. So only 150 stocks are there. The challenge is more for mid cap space, unless SEBI changes, which industry bodies are talking about. We are also harping that you should make top 200 stocks are there, and top next 300 should be mid cap, and beyond 500 should be small cap. So there is extraordinary opportunity in small cap. There are thousands of stocks are there. So if you believe India manufacturing story, infrastructure story, but don't get carried away, don't get sucked into some hype which get created, because people notice stocks when you get into this breakout sort of zone or something people are talking about, written about. But if you have patience, keep on identifying these winners, but look at from a decadal opportunity. So we remain very constructive, more on the small cap versus mid cap, because the basket itself is very unique. Okay, anything above 250, everything is small cap. So you look at out of 6,000 stock, you have opportunity. But one should be very choosy, understand the perspective, don't get carried away. Somebody has written up, you should be very thorough in your research, or you back a mutual fund house like us or somebody else where you have confidence, because they do it properly. They have edge over retail player. Their research team capability analytics is far superior than the masses.
So Sandeep, on that point of edge, you've grown from a few hundred crores in 2018 to more than 75,000 crores of
We are 84,000 now.
84,000 crores of AUM now. Um, are you too big to get into the small cap zone to continue to generate alpha there?
Okay, and this is again very important myth, because what happens, sometime mutual fund houses defined that this is the minimum market cap, okay, we will invest. So maybe it has good and both bad both, because sometime purely from liquidity perspective, and a lot of funds are launching nano funds category. The way we design our portfolio is that if you have a decadal opportunity, many stocks in our small cap are there for a long period of time, 3 years, 4 years also. Okay, so those are decadal opportunity. We will definitely allocate, but we will not allocate extraordinary money towards this. Okay, so maybe illiquid stock or decadal opportunity stock can be maximum 20% in my portfolio. That's the way we have designed. Okay, but we call ourselves as an unconstrained fund house. Okay, so we are not affected by we are, when I say we are market cap agnostic, thesis agnostic, okay, sector agnostic, we will definitely capitalize that opportunity as long as we are clear on that. Once we have a clarity of that, we do take these longer term bets, and I think we'll continue to do that. But again, it's a call depending on the mutual fund house, individual. Everybody has their internal thinking and process around that. We think we are unconstrained house, we will optimize that opportunity if that opportunity is so meaningful.
I'm assuming, Sandeep, that there are some companies that are just too small for you, so micro caps, few hundred crores, a lot of stock pickers in the house today. Is there an advantage that retail investors have there? Like, if I am a stock picker, I can't compete against you in large, mid, or even small as it's currently defined. But if there's a company with a market cap of few hundred crores that I've spotted, which you can't get into, is that the last edge that the retail investor has truly?
I will not call it a last stage. definitely there is opportunity for you, because lot many bigger houses will not look into it. Okay, but I will also give you sound of caution also with a caveat, then don't get carried away. Okay, this talks when you hear the media narrative, because today social media, on media, everybody has biased opinion. They have position and they will market your products or their opinion, their thing. So you have to keep that caveat in mind, that somebody is trying to market and somebody is telling a story on YouTube, have vested interest. Okay, and most of people are not even SEBI registered. So what is very important to understand from your risk perspective, what should be allocation, it should be opportunity. Yes, if you have that decadal view, answer is yes, but you should able to do that much research, or you have that much understanding and patience to hold for that horizon. Yes, some edge you have, but don't look this as an edge, and don't try to give extraordinary weightage in a portfolio. Let's say if a decadal opportunity, overall portfolio of small cap of quant mutual fund will not go more than 20%. Similarly, you have to define these number based on your individual risk appetite, and that you can only assess better than anybody else.
Now, Sandeep, there is a notion that the market is driven by factors. So, value, for example, or low volatility or momentum. And there is an idea that momentum does well in bull markets. Now, the bull market has aged. We don't know if it's ending or not, but it has aged. And if there is a rotation of factors, let's say towards quality, how would you position yourselves? You say you're not momentum, but a lot of people perceive quant that way. How would you position yourself?
Okay, so let me give you some perspective. First of all, we practice a very dynamic style of money management. All factor based, smart beta, whatever terminology you can use, these are all static allocations, that you give 30% weighted to momentum, 30 to value, or some 20 to quality, whatever you define, and every 6 months, yearly, you can rebalance. These are static style. Globally, this is a failed product. Okay, some people consider as a new term like smart beta. Okay, instead of saying factor based, I'm using this smart beta. This product has failed globally. Now let's go, let me give you some background so you'll understand how, why we practice dynamic style of money management, and why world is changing and moving towards that versus static. Let's say when you took like 2000, when bubble got busted. Okay, the techie bubble. Okay, from that time, that was the buy and hold strategy, and people lost their pants in that period. So then this the quant style of investment came into picture, right from 2000 onwards till 2008, when the next bubble happened. Why the 2008 then liquidity crisis emerged? Because all these models of factor based model were working, everybody was on one direction. When reverse happened, there was a reverse circuit, and globally also this problem happened, because everybody was chasing momentum, or whatever parameter they will, predominantly momentum. Okay, when everybody is on one side, now world has changed. People also launch a reverse momentum products also. That's a different issue. So that product failed in 2008. When you go back in 3 4 years, people analyze what went wrong, and the quantum, and then the evolvement of quantamental style of investing came. Okay, where you combine the sentiments data, along with the valuation or the fundamental of the companies. That's the way quantamental got evolved. And we believe we are practitioner of quantamental style of money management, where blend all these data points together, it gives you better. So I'm a not great believer of factor based model. A lot of people in their own quant fund follow these theses. I think it's a outdated technique, and it has lost its relevance globally. People do practice, that's a different issue. And hence, instead of looking at the very static, the dynamic style of money management is getting better, and we are the first, one of the first in India to bring this concept. And we have demonstrated how dynamic style of money management generate superior risk adjusted return versus static style of money management, or even you talk about the factor based model.
It's a very strong statement. So essentially, smart beta has failed, in your opinion.
Our research says it has failed.
Okay.
Globally, it has failed.
Okay. Now, Sandeep, a final question to him, then we'll open up to the audience. He has a very strict time limit, so we're going to adhere to that. So please keep your questions short and to the point. So the final question to you, Sandeep, from my end. Um, it seems that Quant AMC is essentially you. Like nobody else knows fund managers other than you. You are the brain behind it all. You are how the magic happens. If something were to not happen to you, but if you were to retire, go on holiday, whatever, you were not to be available, would we get the same performance?
Okay. So I tell you, this question has been asked. I have been working in my previous some other groups also, and the key man risk people talk about. Okay. So let me give you answer. Even HDFC Bank got evolved with one person, key man. Finally, the gentleman retired, Mr. Puri retired. Okay. So I work for Kotak also, right from early stages of Kotak. Uday Kotak was asked for is a key man risk. I work very closely there. And he retired also. Okay. Now look at what institution some of these people have created. And so is the case with Goldman, and so is the case with JP Morgan, and so is the case with things. There's an institution get built over a period of time. Somebody has to take the initiative. So within Quant, I'm a director in that sense. It's my initiative. But we have a process, we have a team. You think I, as an individual, can do everything? I always strongly believe that one individual money manager has thousands of deficiency. I have 20,000 deficiency. That's the reason we brought the concept of multi-asset multi-manager. If you see our tagline, which means multi-asset means because all the assets are interlinked. So we do research on that. Multi-manager. We are neither dependent on one individual. We are not dependent on one thesis, one philosophy. So we practice multi-asset multi-manager within Quant. We create specialists rather than saying that I do everything. There is a specialist who do something. Okay. And we try to combine. That's the reason in quant, the importance of one money manager is not there. It's a team which deliver. The team which was there was managing 27 crores. Same team managed 84,000 today. So it's all about processes we build is very, very scalable. It's not about one. So in somebody has to take initiative. Somebody becomes set up a company and over period is evolved. That's the way the globally the firm got evolved. And so is the case. So I don't think we should be looked very differently from that.
All right, we can have a couple of audience questions now. Um, I think if you raise your hands, I'll just point to you and ask. Uh, yep, we have a hand in front. Can we pass the mic or
Hello.
yeah?
So, sir, my question is within Quant, right? Your AMC itself, there are so many funds to choose from, right? So, let's say if I decide to go with Quant, how do I decide which fund among them to choose?
So it's an interesting question we generally address in the various distributor meet. What uniquely we have done in within quant, like when you talk about mutual fund, everybody says long term. Okay. We believe every individual has short term, medium term, and long term needs. So we have designed our portfolio based on that. So what we do on X axis, you have investment horizon. Okay. On x-axis, investment horizon, long-term, medium-term, short-term. On y-axis is the risk profiling of a scheme, and z-axis is the SID requirement of a scheme. Okay. So let's take example. Quant mid cap, quant small cap, high risk but long-term investment horizon. Okay, and the duration is long. So long, where large cap, low risk or low risk but long-term investment, flexi, relatively low risk but long-term investment horizon. Now, if you come to product like DAF, which manage quant DAF fund or multi-asset fund or quant quantamental fund, what is the low risk but investment horizon is medium term. Similarly, we have a momentum fund, relatively high risk, but investment horizon is short term. So what we try to give offer, think we instead of buying one scheme of quant, you buy a bouquet of quant schemes so that you get diversification from duration, long term, medium term, and short term, and you also get a diversification, high risk, medium risk, and low risk. As a combination, you combine it you get, and based on your risk appetite and your investment horizons, very important. Is a scheme investment horizon and scheme risk profile I'm talking about, it should match with your risk horizon, risk appetite, and investment horizon. Then you can choose it better.
Sandeep, if I could just add something there. So a lot of the names are common in most of your funds. Is it really diversification when I choose multiple quant schemes?
No, see, you have to keep in mind when we design a particular scheme, let's say quant flexi cap, for example's sake, we design quant flexi cap keeping the SID requirement of this thing, a unique profiling. We don't expect that one investor will be investing in all 27 schemes. That's not the way we design our scheme. What is very important that if I'm getting a unique idea, let's say let's say example, we bought Reliance Industry in our portfolio. Example's sake, I'm giving you, because Reliance a large cap can be give my stability on my portfolio. It can generate alpha for me for whatever reason. When we identify the weightage for the large cap stock will be obviously when you identify a large cap, then the weightage of large cap will be more in the large cap scheme. It will be less on the small cap. But sometimes we do take in small cap also. if I'm seeing a bit changes on the risk appetite in the market, I will increase my large cap weightage, which we did in the small cap also. Reliance is also there. I'm just giving you for example sake to understand. So I don't think it will be fair to assume like how the treatment is. If I'm getting a very unique idea, which can be opportunity for any of all of my scheme, why should I not allocate? What is very important when you look at diversification, a lot of people sometimes look at saying that I have 5 different schemes, 5 different money managers, okay, but I'm a very good perfect diversification, but mathematically it's not. The style is similar. The when you get into the cumulative portfolio, maybe 90% stocks could be common in large cap, 60-70% stock can be. So is that diversification? Mathematically it's not. So what you have to identify is that us you have to look for different style also, different thesis also, and then different portfolio also. Then it's a true diversification. Otherwise it's just on psychological comfort that you have diversification. Mathematically it's not.
Okay, next question. There's one in the third row. Yep, yep, yep.
Yeah, I'll have to ask two questions because of your last answer. What is the attributes or the traits you look in your team? Because you told your fund is more than you and like a team. So what are the traits or the attributes you look while building a team? And the question I have, another one is, I see a lot of mutual funds which are launching themselves as contrarian, you know. So would Quant also qualify as a contrarian mutual fund, or how is it different from the
Okay,
contrarian mutual funds?
I'll answer that. First of all, the trait which we look at when terms of hiring is all about analytical skill set. Okay, we very every open forum we say educate your people, your kids on the analytics side, not from the market perspective. I'm saying more from an analytic. Any business you do today, it's all about analytics. When you talk about AI, machine learning, or any new technologies coming, directly indirectly is about analytics. So the analytical skill set which we look at, irrespective of whether somebody is coming from economic background, somebody is from science background, somebody is coming from a very different background altogether. That's the point number one. Second question, you talk about contrarian. A lot of people see in terms of our action as a contrarian. We are not any contrarian. We don't take contra bets. We are a analytic house. We take data driven approach. Okay, we says we are analytic firm. Money management is a byproduct of that. So it's a purely analytic firms. We look at analytics and no attachment with any market outcome perspective. So no emotional attachment when we look at data. We say objective is a religion and data is God. No scope for subjectivity. That's the way we defined ourselves.
Sandeep, a lot of students in the audience.
Yep.
I don't know if you're hiring interns or not, but what does it take to work at Quant to get a job with you? Do you have to be from an IIT, IIM, or a CFA? What do you look for?
As I said, there's no hard and fast rule. What we look at individual passion, okay, individual attributes, okay. So like whether that temperament you have or not, because I said every it's like sometime like uh, financial market or let's say filmy dunia, what you call it, has glamour, okay. So everybody wants to be part of that glamour. In our college days, investment banking was considered a best thing if you want to, because why have, because investment banking is to give the highest salary. It's not about you have temperament, because directly indirectly everybody is working for money, okay. Wherever you get the best opportunity, there's a way interest gets built. So I think what is important for us, for any individual to understand what is your temperament. If your temperament is not like this, then please don't come to industry, okay. You will not be successful. But if you have that temperament and you have that in long term investment horizon, because it takes time, like how Utpal was doing, it takes time to learn. We have not learned everything in last 2 years. We are practicing this dynamic style of thesis or predictive analytics for last 33 years. Okay, it got built in 33 years. It's not I have whatever we talk about on the sitting on dais today. It's not something what we have built in last 2 years. Over a period of time, if you have that much horizon that you are willing to learn for next 20-30, and we are still learning, that's why we call ourselves evolving firm. If you have that mindset, then come to this industry. If you have that very rigid thing, this is a glamour, then don't come to this industry. You will not be happy.
Right. Last question. In the blue shirt, somebody can pass the mic. Yeah.
Right. So maybe we'll take up two questions, last two questions.
Okay. Quickly, please keep it.
Yeah.
Yeah, short.
Little of philosophical question. Check. Okay, my mic is working. Coincidentally, I also work in analytics. So maybe if you're opening, we'll talk. Okay. Jokes apart. So if you had to go back and tell something to 21-year-old Sandeep, what it would be, and to all the students, how to be the best fund manager.
So, if only one advice if I have to give, then I'll advise learn from your mistakes. As a human being, you will make new mistake. Ensure that you don't repeat your mistake. That is the best thing I can give advice in a very simple terms. A last question. Yeah,
Thanks for the
please.
great session.
Hmm?
So my question is
Yeah.
basically we are investing in two different categories. One is stock market, one is a mutual fund. So how we can decide like X percentage that we can put in the into the stock and Y percentage we can put into the mutual
Okay,
funds?
very simple answer. Since obviously you're learning, based on your risk appetite, 10-20% of your capital you should keep for yourself for learning. Within that, you diversify whatever you want to do. 80% of your capital give to the professional like us who specialize in that. And you measure your performance every year. If you have beaten the mutual fund, then increase your exposure towards your own thought process. If you are not, then you take more time. I'm not discouraging you. That's the reason I say 10-20% you should definitely keep, otherwise you will never learn. But from a longer term perspective, it should not happen. A lot of people come and say with the family office kids, young kids we meet, that I'm managing my dad's family office. They don't have exposure. If you get into that situation, 80%, 90% they are deploying, then it can be a disaster.
Thank you.
Okay. Thank you very much.
Thank you so much.
Thank you, Mr. Sandeep Tandon and Mr. Neil Borate for this brilliant session. May I take this opportunity to present this bouquet to Mr. Neil Borate for superbly moderating the session. Big round of applause, please. I think this conversation really gave us some insight into the quant mutual fund way of doing things, approaching investments. And while decadal opportunities are the way to go, as retail investors, one should be armed with research and a lot of patience. So thank you once again. Right. Now, we'll be taking a quick break for lunch, but please don't go too far. We have very exciting segments lined up just right after, so please be back in an hour by around 2 p.m. Also, if you capture a moment throughout the session, please make sure you tag Groww on Instagram and on Twitter with the hashtag AIKG150. The 5 best posts will be receiving some very special goodies. Also, quick announcement, if anyone has misplaced a valuable or an item, please head to the reception for this lost and found collection. Thank you. Bansal. He's a first generation tech entrepreneur and founder of Myntra and CureFit. He's also He's also an active investor in the tech startup scene and the author of two books. Also, did I mention he's a podcast host? Talk about an all rounder. Well, without further ado, let's take a look at his introductory video.
I am Mukesh Bansal, founder of Myntra and Cult. Has built out iconic businesses twice, sold them, and is now on his journey to build his next thing. And he calls himself a builder, someone who keeps building over and over again.
All right, so that was just speaker number one. Speaker two, we have Mr. Varun Dua, founder and CEO of ACO with us. Awesome, yes. That itself deserves an applause. He is a pioneer in the insurance sector. Varun's work has actually made insurance easy and straightforward for millions of Indians. And how many of us have actually seen him on Shark Tank? Say yes! There we go. Let's take a look at his introductory video.
One thing that I learned from Varun Dua is that if, as a leader, you have the ability to tell your audience or to educate your audience about something that they did not know, there's a high chance that they will want to hear it.
Awesome. And moderating this panel discussion is Ms. Chandra R. Srikanth, who is the Deputy Executive Editor at Money Control. With a remarkable 15-year career across various media platforms, Chandra brings with her a wealth of knowledge and experience. I'm sure all of us have seen her interviews at Davos, Switzerland, when she was covering the World Economic Forum. May I please invite on stage Mr. Mukesh Bansal, Mr. Varun Dua, and Ms. Chandra R. Srikanth.
15 years in print, TV, and digital media. Chandra R. Srikanth is always ready with deep industry knowledge and sharp analysis.
Send this for that.
It didn't break, thankfully. Good afternoon, Bengaluru. And, I was just telling Lalit and Harsh from Grow that this feels like a college festival because I don't remember the last time we saw so much energy in the room. So, three cheers to all of you. And hopefully we will have the same levels of energy because we have two amazing entrepreneurs on stage. They've started up, scaled up, exited, started up again, scaled up again, exited. So I want to make this a very interactive session. I'm going to bug them only for the first 20 minutes. And after that, we're going to throw it open to the audience. So please, keep your questions ready. They might also sign a check for all you know. You never know. Both of them are angel investors. Varun also appeared on Shark Tank, so he has a lot of experience.
Totally.
So, so keep those questions ready, keep those pitches ready. But thank you so much for talking to us, Mukesh and Varun. So first, a show of hands, how many of you have used Myntra? Wow. How does that feel, Mukesh? Auditorium full of Myntra users.
अब कल्ट का भी पूछो पहले.
How many of you have used Cult Fit?
That feels better, yes.
That feels better. How many of you have tried buying ACO insurance? Asha, that's not bad.
I thought many young people यहाँ खरीदा ही नहीं होगा किसी ने.
So if you want some founder discounts, you can ask both of them after this.
Cult, people need to pay premium these days. So fact. So yeah, if you are willing to offer premium, then come talk to me.
Great. On that note, this is a very wide topic, how to grow in a post-AI world. We also are figuring it out. I'm scared for my job. Maybe some AI anchor will, interview you in the next edition of AIKG. Hope that doesn't happen. But, first tell me about your own experiences with AI. Beyond ChatGPT, how do you use AI every day? Have you tried creating something on AI? And where is the human intelligence going to come, amidst all this artificial intelligence?
First of all, good afternoon, everyone. So I've
Huge
been
round of applause for Mukesh.
so I these days I have a lot of free time on my hands. So last 12 months, I'm actually looking at AI very closely and been reading lots of things. And I think I've last 6 months or so, I've gone from okay, this looks very interesting and this big mega trend to from it's oh shit, this is probably going to change the world in ways we cannot imagine. So right now, most of my focus is learning and the things that I've, is already available through various models, as well as things are getting published as research papers. A lot of prototypes people are working on. I think it's going to have dramatic impact on nearly everything we do. For me, it's all very optimistic scenario. I think at the end of the day, it's also just an extremely powerful tool. In some way, we're able to get little bit of human intelligence and scale it up. Not all of human intelligence. I think there's all the talk about AGI and all of that, and I think that's bogus. At least I am not able to see anything which even hints at anything remotely, credible in that. Jan LeCun is one of the original pioneers in this space and currently works at Facebook. He basically just recently he wrote a very long article saying the current AGIs are not even as intelligent as an ant, in some ways, which is or a house cat, which is also true. But I think when it comes to businesses, transforming business processes, um, just speeding things up dramatically, eliminating a lot of redundant, low quality work. I think that is pretty much here and now. We should see, I think, a lot of transformation, but probably not in a hurry. I also think next 12 to 18 months are probably going to be very slow because it says, that hype has overtaken the reality. Reality is very powerful, but hype is, 10 times bigger. So now the reality needs to catch up to the hype, and some people will be disillusioned for a while. So if you look slightly longer term, I'm very, very bullish. 12 to 18 months, probably not much beyond, this very exciting news will probably keep coming.
Okay, I'm a little reassured because you're saying AGI is bogus.
Only 12 months, he's saying.
Okay, for 12 months, you can give me some reassurance. Varun, what is your sense? Are you scared? Are you excited to try out some of these new offerings? I think OpenAI came out with this GPT Omni, which blew everyone's mind. Later, Scarlett Johansson obviously wasn't happy, but what is your sense?
So my sense is it's definitely going to be game changing. I don't think I fully understand or anybody in this room will fully understand how. But if you try to understand it at a fundamental level, I read this somewhere, this is not my quote, that it is not a shift from typewriter to word processor. It's a shift from the word processor now writing the novel for you. Like, so it's not a tool which is improving. It is technology was always a tool to make us efficient. Now you need to look at it fundamentally as not a tool, but something that has started to collaborate.
Hmm.
So it's going to be human collaboration and AI collaboration. I don't think it is going to be able to do everything by itself, or like Mukesh said, some AGI thing where it controls the world and every job gets taken over. I think that may happen, but at least I don't think I can foretell. But in the interim, there are two ways to look at it. You can look at it as it's something or some tool that is helping you collaborate and understand things better, move faster. Not just automation. Automation is still saying, okay, I can type faster on a word processor than a typewriter.
So essentially, instead of starting from a blank slate, you have someone to help you think.
Meaningfully, we're trying this. Okay, to take to do an internal meeting. One is everyone's excited about, okay, some chatbot servicing, bunch of these things can happen, image generation. These are all you can design, come up with designs, pictures, images, posts, social media, content generation, all of these things we've all heard about. Uh, but we've tried to actually conduct a meeting with it as a participant.
Oh, within AI
Yeah.
chatbot as a participant.
In the meeting. It was clunky. It wasn't working very well. But yeah, it can take notes. It can tell you that this document needs to be surfaced, make that document for you. All of that can happen, right? So we don't know how it's going to happen, but I do foresee that in maybe a year or two, there'll be a lot of companies that will evolve to actually using that. That's what I meant by a collaborator. Will have that. You imagine that as an employee. Do not imagine that as a technology tool. So it can do a bunch of these things, some efficiently, some not so efficiently. But fully agree with Mukesh, it'll take away a lot of the boring stuff, a lot of the repetitive stuff. Repetitive plus plus also it can take away because it can analyze. So the world's definitely going to change. And as far as um, how fast, hard to say. Is it game changing? Yes. So I do believe that while great amount of change may be some time away, uh, it's important for all of us to adapt. Otherwise, it's just jobs, companies, business theses are all going to go out of the window very, very quickly. Some companies, I think, will just cease to exist just because that one thing can do everything that company does, and it's just yeah.
So, how does one grow and thrive in a world where jobs, businesses, business models could go out of the window, in 12 months or 18 months? That's a game changer. We haven't seen such a big shift in technology in a long time. How does one prepare for it?
I think at the very least, learn everything you can about. I think they're going to be the way we will work will change. I think a lot of people will be able to derive, tremendous productivity out of it. Or you will today, let's say, you may be very good in language, just natural language, but not very good in programming. It was a big bottleneck in the past, not anymore. Just natural language is probably going to interface through which we create pretty much everything. I think we are headed towards that world. All the translation will happen. So I think we can just get extremely familiar. There are a lot of nuances to it. So I'll give you one example. I'm currently writing, my actually this is my fourth book. And in the past, the research process,
Did 3 books already?
two published, third submit to publisher, fourth I'm working on it, which will take a while.
Okay,
But
so what is the fourth book on?
we'll save it for later. Third book is about entrepreneurship. But I think the point I wanted to make is now I like start my writing session with a lot of interaction, recently with this GPT-4o, and the quality of prompts I'm able to think is gives back that much better response and result. So I'm forced to think, but if I can think better and better prompts and build upon it and give it, maybe saying think through these three things and then try to process that, the outcome is just amazing. So my no longer dependent on the research team which used to help me with my earlier books, etc. I don't need to read so many reports or books, etc. And that so just through natural language I'm able to do that. Programmers will be able to do that, creative people will be able to do that. So I think that's what people can see. How do we it's a paradigm shifting change, but still our imagination, how do we steer it, how do we shape it? So this preparing yourself for these new types of jobs, I think pretty much everyone will either do their jobs dramatically better or even do jobs that you could not have done in the past. Once these models become so good in medical diagnosis, nature of medicine will change. Maybe a lot of people who can be healthcare but don't need to have medical degrees, because medical degree part is done by this intelligence, but there's other empathy related things, just warmth, human connection that somebody needs to do. So I think those possibilities are very hard to imagine, but you can stay on the right side of technology shift by just learning. Today, for me, I feel if I'm not spending at least 2-3 hours a day learning about it, I'll probably left behind. So for me, it's the most urgent priority, and I'll probably urge everybody in the room to at least spend 2-3 hours just learning about it at whatever level of detail you can do. That will put you in much better position to kind of evolve with the technology.
How many hours in a day do you have? Because you're doing a fourth startup, you're an investor, you're writing 4 books, then you have your own podcast, then you're spending 2-3 hours learning, then you're also on social media.
I have 48 hours. I think if you want to find the answer, you can read my first book, No Limits: Art and Science of High Productivity.
So
But
he's just plugging his first book. Okay, they'll buy.
of course, yeah. Yeah, I can't do that yet, I guess, for me. Um, no, but I mean, actually,
So how do you learn
I,
this? 2-3 hours? Do you watch YouTube videos? Do you watch
so I'll
interviews?
share my
Do you
process,
read research
Yeah.
papers
So
on
there are
AI?
a lot of very popular books like AI 2041, Genius Makers, this, that, Coming Wave, and so on. So I first batch, I just went through all these popular books. Then from that, I've now moved to textbooks. I'm even trying to just fiddle with some codes. It's very painful for me, but I'm learning that, spending a lot of time with engineers. And now we have a small team, so these people go through um, papers every day. There are at least 10 to 15 papers are being published, so I'm trying to at least follow some of it. It's still a lot of it goes above my head, but trying to keep pace. So yeah, I mean, there are tools and there are tons and tons of YouTube content available, courses on Coursera. So there is no dearth of the overall AI community other than OpenAI are generally very open. They share everything. OpenAI is keeping it very guarded now because they can smell huge part of money, but a lot of resources are available.
And so, if you have to give two things, two channels that you would recommend, or 2 books, what would they be? Coming Wave was one of them. Anything else?
Courses from deep learning. So Andrew Ng, he's
Andrew
been a
Ng.
pioneer. Like a lot of his courses are amazing. It's and from very beginner level, so you can make progress slowly.
Great. Varun, how do you cope? Mukesh's way to grow and cope in an AI world is to just learn and learn and learn. But how do you do it? And is it also true that, people who are very good at, say, math and data science have an edge when it comes to learning about AI? Can non-math, non-data science people also learn as much about AI?
So I'm not as disciplined as him. I don't read many books and go through many courses. But I think what I do is that I do believe that that knowledge will keep coming. I think there has to be a certain curiosity to understand where it's going. And I can maybe some people here in the audience do it, but I know people, kids in my building who are 10, 12, 13 years old, who actually have a daily conversation with ChatGPT. They actually converse with it like a friend. They're not doing a school project. They're chatting.
That's
Okay.
a little scary
No, it is.
as a parent.
No, it is. But I do believe that it's very intuitive for the next generation to do
You
this. It
sit
is
as
not
a
very intuitive for us. It is not very intuitive. At some point, the younger you are, the more intuitive it will be for you. For us, we'll have to study a lot to. It's almost like how my mom will struggle to use WhatsApp. It's or it's the same thing, right? Our parents struggle to use even basic stuff which we couldn't imagine. For the same thing, the kids of this age, like, how can you not get this is how to use it or this is how it works? Because we've just not been wired like that. For me, I think it's just more about curiosity. I think, and to answer your question on data or math, neither am I an engineer. I have never programmed. Someone said, I think the CEO of NVIDIA said, natural language is the best programming language. There is no language. You have to tell the computer what to do. There is no better way to express this than exactly tell it what you mean in the most natural language that you can. So I think at least the way I have learned a little more about it, of course, you read some blogs, you come across something, you watch some video and so on and so forth. But at least personally, I'm excited uh, to just write up a GPT and say, hey, this is what I do. I want an idea on car insurance. I want to do this. I want to automate a meeting. And actually, I program that GPT to see what can it do. It's just pure curiosity because I'm like, this is fascinating. I cannot imagine this could happen. I have dumped a file in it and say, give me growth rates for all insurance companies for the last 20 years and tell me what will happen if this happens, if that happens. And it just spews out answers like nobody's business. So I think to me, the best learning has been just being curious
Hmm.
curious about it, not shutting eyes to it. Like it's some technology teams work to implement AI. I don't think that's how the world's going to work. It's not a tool. It's going to change your life. The way iPhone or smartphones change your life, where became your camera, it became your music device. It changed the way we live. It became my communication device. Now we have challenges, right? 10, 15 years ago, people have ADHD. They can't get off the screen. I get up in the morning. The first thing I have to do is look at my screen. So it's literally changed from 20 years ago how it was. So I think this technology, I don't know how exactly it will manifest itself. That's very hard to say, but I think it's going to become a part of our daily lives. So we can't shut it out or leave it to somebody else to, if we are inquisitive about growth, about making money, building a business, or just generally learning. I think you'll have to imbibe it in your daily life in some shape or form, maybe by reading, maybe by trying, but something will need to happen.
So I think the key takeaway is to, at this stage, spend as much time as possible learning about this new beast before you learn how to tame it, right? So, how many of you use some form of AI every day?
Quite a bit.
That's quite, I mean, 35% of them are students. So,
Can we do the same survey by age?
how many of you use ChatGPT every day for college projects? I hope your professors are not here. How many of you use Gemini, the AI? Okay, far fewer. Anthropic, Claude, see very few. So I guess ChatGPT by far is the most popular tool now. But Mukesh, apart from spending time learning, your newest startup is also AI, which you're not talking about. Tell us about that.
I think we're just figuring things out. I mean, I said like right now it's you can
You've
call it
you've
a startup. We have 8 to 10 people. I've told them just study, just learn, and every week share what.
you've come up with a name for the startup.
No, not yet.
Oh,
Yeah,
still
it's just
deciding.
yeah. I don't know if you can even call it a startup. Just hiring people saying okay, just study and just keep sharing what you're learning. I don't know if
We
that
hear you've already raised money for this also.
this is a grow event. Are you like will you able to offer people to invest in the new startup so that okay, say okay.
Crowdfunding.
Yeah, no, it's very early. I think last 12 to 18 months I've been part of this venture studio. And last year we did start one company that was announced publicly. Mohit Gupta, he's leading that. That was in the kind of premium fashion space. Second one, I think we are just kicking the tires right now and trying to figure something out. Hopefully, I mean it's very challenging. I said, it's the whole AI world is moving so fast. But right now, I think for me the assignment for self is to learn as much as I can and figure out. I mean, hopefully, I think there are a lot of AI first companies will come up over the next 4 or 5 years. So I just want to, in some ways, let's say early days of internet in late 90s. At the time, I moved from Chicago to Bay Area, trying to just be in that ecosystem, or move to Bangalore in 2007. So I'm just trying to exactly the same thing, like just get inside this world and let things happen over a period of time.
Right. One question that everyone has is there's so much of excitement in Silicon Valley on AI, right? Every day you see some exciting company. Where is India in the global AI race?
I don't know. Maybe let Varun also comment on that. Probably. Uh, so I think we have a lot of capabilities. It turns out even in semiconductor, while we don't have semiconductor factories in India, the somewhere like 15 to 20% of all semiconductor engineers in the world are in India. Lot of the data work for AI is happening from India. I think we have the engineering capabilities, and all the large IT services companies are retraining their workforce to come up to speed or whatever happening in Gen AI. So that way, I think from know-how point of view, I think we are very well positioned. But these foundation models, they require multi-billion dollars of investment. Again, things getting obsolete. I think we are far behind. I think, obviously Ola, Kritrim, and Sarvam are doing something, but they're probably feels like too little. And you know uh, just like what happened with the other platforms, today we are also dependent on all these western platform, from Google to all the Meta products to Netflix to and so on. So there is a danger of India not having both enough protection and enough investment profile for this long-term research oriented investment, which could be a challenge for the country. So I hope it changes next 12 to 24 months. But right now I'm not saying. I think we are again one more cycle of getting too dependent on all these foundational technologies from the West.
Yeah, I'll make a maybe a more philosophical point. I agree with him, and I do believe, and maybe it's our nation's evolution that will happen, and hopefully it'll happen. Uh, I don't think we still dream big, as a country. If I can just take the argument somewhere else, we are much happier with incremental innovation uh, versus saying, okay, I'm going to bet the farm, I'm going to bet something like a couple of $1 billion on some new technology because I can see it happening, whether it's chips, whether it's AI, bunch of these things. It kind of also reflects in our, and I don't mean this in a negative way. It kind of reflects in our stock markets, quarter to quarter, profitability, shit company blowing money. As part of this blowing money is when you get an open AI. There's a good and there's a bad. Is when people are willing to fund or the ecosystem is willing to fund wild bets, completely wild bets, is when India will get ahead. I don't think
We're still not there, basically.
no, I don't think we can take. Otherwise, and I don't think it's not even about India. I think it's cultural. Nothing comes out of Europe also. Every piece of technology that has changed our life has come from one country.
But Varun, maybe
Almost.
just to
While
challenge.
we have the talent
Wait, I
and
think
we're running
Mukesh
it.
has a counter.
Yeah.
Just to, maybe just to challenge you a bit, right? See, China also doesn't necessarily produce anything new, but they have enough protection. So look, even they're
They have
already
built
OpenAI
reverse engineering.
right, and they do the reverse engineering, and they're able to also support the fundamental research also now. So at least extremely fast copying, like they're, look at in the EV space. I mean, Tesla pioneered everything, but Chinese companies today, technology-wise, way ahead of that. If US does not put, 100% duty, Chinese companies will just take over entire US market. So I think that's something India can, learn from. We want to be like
Want
China.
India to be more protectionist like China.
I mean, they have an insane amount of protection, right? I mean, the foreign companies can't do beyond a point. And yeah, I mean, that they have found the right balance, which something India can also think about.
But I don't know. I think this somewhere I think India's already made that choice that it is not China. So I was not going there. Somewhere we'll have to compete in relatively more free markets, if I can, or relatively more global markets. So somewhere or the other, I think we'll be one of the, you know, countries in the forefront in terms of utilization and use cases and great companies being built on top of use cases. But the foundational stuff, tough to say now whether we can catch up. It's just gone way quickly, very tough to say. Maybe we can, maybe we don't. Looks unlikely to me. But as they say, like uh, the biggest beneficiary of refrigeration is Coca-Cola, not refrigeration. So maybe as a refrigeration, we make the Coca-Cola. I don't know what happens. But don't know. Foundationally, I find it hard. Maybe I'm being a little pessimistic, but I think we will develop crazy companies which will use it very well.
Right. Stepping away thoda from AI to your own journey as entrepreneurs. Mukesh, you're now on your fourth venture, apart from being an angel investor. And I sometimes wonder, why do you kind of keep starting up again and again and again? Because if I made the kind of exits you made after Mintra, I would have, bought some house in Mysore and retired. So what keeps you going?
I'm still very young, why do you want me to retire? I, I think that India story is getting more and more excited. I think today is a better time than ever before to be an entrepreneur. The whole ecosystem has opened up. The economy is at a point now where the amount of, let's say, GDP creation that will happen over the last 20 years, it's like 4 or 5 times what has happened in the entire history of India put together. So I think one is that attraction. Second, also, I mean, I just like the challenge of building things, just building things, learning new things. Otherwise, what else to do? I think, everything else is quite boring, and, you can do it for a few days or few weeks. But I think the real joy, at least, I feel just comes in, just learning and building things. And as long as I have energy and the environment supports that, I'll keep at it. But it is very hard also. I'm realizing that, just, each startup is a fresh journey, and nearly as hard as the first one. So we'll see.
How many of you here want to start up? Okay, not bad. I would have expected more hands, more students.
People are more pragmatic now.
What about you, Varun? This is your second, right? Cover Fox and then
So
Acco.
actually, I've done only one startup. It's just misconstrued by the media. And I've done many startups. So I have done one thing after the other in insurance, and everything has failed. So this is the final one. Hopefully, this one doesn't go down. But no, I've spent some time in insurance. I did technology for insurance companies. I did a broker business selling other people's products, and now we are manufacturing our own products. So for me, yeah, legally two, three companies happened because they were different business model, different regulations, and all of that. But essentially,
But are there days when you feel like I could have just worked in some Tata AIG instead of doing Acco
no.
insurance? No.
I think I would have been depressed, and not because that company is bad. It's just that, like Mukesh said, there is you don't feel fulfilled. Like I think every entrepreneur who gets out and does something there is generally basically looking for some fulfillment. Because beyond a point, it stops becoming about money or a house or whatever it is. Maybe initially it is, but otherwise half the people shouldn't be working as hard. They're working, or they've already made the money. So it's just it makes you want to get up in the morning, and you're always excited when you're brushing. Also, you're thinking about ye bhi ho sakta hai, wo bhi ho sakta hai. So I think that joy is what keeps you going versus saying, okay, I can have an easier life, but it's also boring.
Right. On that note, we are going to take some questions. If there's a mic, if you can just raise your hands, the mic will come to you and you can tell us about yourself. Okay, there's a lady here who has a question. Hi, Varun. Hi. Can you hear her?
No, not very clearly actually. It's not on.
Hi, Varun. I have a question for you specifically. So, as we see with time, finance awareness and education has evolved with platforms like Grow and Zerodha coming up. But as of now, insurance is very complicated for a layman. How, like with apps coming like Echo and other apps, like other products also, when can we expect this to be simplified as much for a working professional like me or many others, or a student also to understand insurance and its criticality at a very early stage of life?
Tough question. I don't know.
It's currently a very big very complex process. We don't really understand insurance products specifically. There are a lot of ifs and buts as of now. We don't
Yeah.
really know
It's
how
not
to
a
make a
question, Varun. It's a
decision.
customer feedback.
Yeah, that's what I'm saying. Like, तुम कब से क्या कर रहे हो?
Find out if she's an Acco
Uh-huh.
user or convert her to one.
No. So no, great. I don't.
The way
Sorry.
Grow is having awareness, they
Yeah.
are trying to spread awareness, and
Is Grow
there are
getting into insurance? You should
no
first.
about finance. I mean to say about finance. So, what is something as an industry, insure tech industry, what is
Yeah.
it that you are looking up to in the coming years for making it simplified for a common man?
Okay. So I'll
Basically,
actually.
make insurance interesting. It's pretty
Yes,
boring.
yes, definitely,
No, I'll
because a
tell you
very
why it is very difficult to make interesting. I'll actually agree with you, and then I'll come to what hopefully we can do. You know why Grow, and people are investing, and they're understanding more and more, and all of that is happening. Uh, because gratification. मजा आता है. पैसा बढ़ रहा है. Okay.
Huh.
Yeah.
Insurance is
Correct है कि नहीं? Okay. So because you are excited about something, there is inquisitiveness. You see a potential to make money. You want to learn. Where is the inquisitiveness towards insurance? It will never happen.
हाँ
And
उल्टा
I don't say
को पैसे देते हैं ना
नहीं,
insurance.
and I don't mean it in a bad way. And I also love it actually, क्योंकि हमारा धंधा करने आता भी कोई बहुत लोग नहीं है. Not many people want to do this business. So the reason is insurance is a very delayed gratification product. Okay, actually, there's no gratification. You're buying a PDF and then you're forgetting about it. Okay, and you're hoping I never have to use it. Okay, so that's really that product, right? You don't want to have an accident. You don't want to land up in the hospital. You don't want to die. So essentially, you will never be as interested in something which is so far out in the future. Maybe it'll help me. And that natural inquisitiveness is not going to happen because when I buy it, there's no movement of price to see. There is no shiny phone coming in my hand. There's nothing. You're getting a boring document, or by and large, some document. I can make the document prettier if you want, but essentially, it's a mindset issue, and I don't mean it in a bad way. This is the case world over, right? This is supposed to be a layer of protection. It's a boring job. I don't even expect it to become supremely interesting because that's what the category is. Every category doesn't have to have the same amount of dynamism just because, something else has it. Having said that, has the industry done a very good job of educating or clarifying or simplifying? And so now it's A and B, right? Customer is also not interested in learning. Industry is also comfortable in the way they are. So it's the nice recipe for just some complexity, broad complexity out there. I think as newer companies come up, and a big reason I'll just maybe leave, it's a long conversation. I can go on for 2 hours, but maybe I'll just leave it with this one point. I think the more digital access to insurance gets created, which is getting created with people like us, people like Policy Bazaar, even Grow's doing it, bunch of us who come and try to figure out how to digitally deliver insurance. The interpreter in the middle will go away, okay, which is the physical agent and broker will not go away, but his role or her role will reduce. A lot of people will start accessing directly. And when that happens, the product simplification will start to happen, and it's going to be a process. And the reason why product simplification doesn't happen in the agent world, and controversial statement to say, because you pack it with features and complexity so that he has something to sell. अरे ये नया कुछ आया, इसमें ये भी मिलेगा, वो भी मिलेगा, ऐसा होगा तो वैसा होगा. So there is complexity created because all plans look similar. So the agent needs something to sell. So agent needs इस feature में ये bonus हो जाएगा, वो bonus हो जाएगा. Actually, insurance fairly simple. If you go to the hospital, you'll get X money. If you die, this happens. If your car gets, like the basic insurance fairly simple. It seems complicated because there is this huge distribution chain in between, which is trying to make a fat amount of money by selling you insurance. Now, as digital access happens, the ecosystem will be forced to simplify. So it'll happen, but mind you, it is not going to happen as quickly because most of you here are not interested, and rightfully so, I would say.
Talking of insurance, you had Go Digits IPO this week. ACO का कब होगा? Do you have a timeline?
हाँ भाई, मैं बता सकता हूँ. Like I know the exact date. No, I think for us the timeline is not at least for the next 2 years. Anytime after that is what I would say. I don't know when. We've just started a life insurance business. We did not have life insurance. Health insurance also relatively new business for us. So one or two of these businesses will probably take, these two businesses will take about 18 months or 2 years to get to the point where we want them to be. So therefore not before that. And we are fairly patient. I don't think that's a goal in itself. I don't think any company should have a goal. There is shareholder liquidity, which is a different problem. But the company should do what it needs to do. So I'm not in a rush, but I can only say not for 2 years, anytime after that. Yeah.
Great. Any more questions? Okay, if we can get the mic here.
Hi Mukesh, good evening. Before asking you the question, I want to answer you is that we are building that product. So me,
This is like a parallel pitching session, but go ahead.
no, I would just like to give the overview. So same like ChatGTP, we are building an insurance kind of GPT where you ask anything about what are the insurance problem you are facing. It give you answer with the best option of the insurance which you would like to go for. It will analyze all the insurance which.
Okay, now the question. The question.
Yeah.
What the
एक
question?
पूछूं सवाल, बुरा नहीं मानो तो.
नहीं बिल्कुल नहीं बिल्कुल.
क्लेम देगा क्या? क्लेम देगा क्या जी? आंसर करेगा, क्लेम भी दे देगा.
क्लेम भी दे देगा अगर हम कंपनी के साथ टाई अप कर रहे हैं, सो ऑब्वियसली.
चलो ठीक. I wish you all the best.
Thank you so much. So Mukesh, coming to you, so like considering the
Mukesh, can you
example
give
of
him series? Seed funding, that is his next question. He finished the bill.
No.
Sorry, go ahead.
Yeah, sure. So coming to fitness and health, I mean the health and fitness industry. So I can see people are getting aware more of the health. Like we are getting a lot of podcasts saying about that. So how you are planning to implement, or you have already have something to implement AI on that for the personalized health plans, or like what would be the future we can expect or see from cult that this is gonna happen in terms of AI perspective?
See, fitness is, mostly about your physical body. So I don't think AI has a huge role to play, maybe small enablement role, but ultimately health and fitness boils down to, I mean, this sleep, you have to sleep, you have to find the time and movement. You have to somehow just move around, walk, run, go to gym and, watching what you are eating and so on. I think AI has probably some role to play, this whole idea of health coach. So a lot of us are just, we find it very difficult to do things because of habit change is difficult, lack of motivation. Sometimes we just get forget things or get distracted. So having that accountability partner, someone who can just handhold and be there. So I do expect that in next few years, AI should get to a point where one can augment a human health coach with an AI powered coach, and maybe that'll make it a lot easier for people to pursue healthy lifestyle.
Thank you so much.
Can I add to that? I think it'll go reverse. It'll make people more lazy. And only the people who are actually interested in that discipline will use the tools, the better tools. But I think it's on the whole going to make it worse because it's just going to make people
In
lazy.
that case, we'll position cult as a cure for AI. Cure fit.
Next question, yeah. Uh, one here. We'll come to that side as well.
I have two questions basically. So one is about AI. So
Can you speak up
Closer.
thoda louder?
Mic closer to you.
yeah, okay. So when we talk about AI, I'm just sorry. So AI is getting trained on existing data, and when we are looking at AI to generate content for us, so it doesn't mimic anywhere close to human creativity. Uh, so my question is basically that like if we want AI to like uh, sorry, I just keep
You can ask
forgetting.
ChatGPT to complete the quiz.
No, the thing is like my voice is echoing, right? So
No. Continue. Huh? So AI creativity. What's the rest? You complete it.
yeah. So
Yeah, I'm trying to read his mind. Yeah.
There was a mentalist, but I don't know if she's left the building.
just a second.
Take your
Right?
time.
Okay. So AI is getting trained on existing data. So for example, if I want to write an article, say about AI itself, and like few people want to read some creators who have their own personal touch in AI, like the personal way of expressing something so that people will understand. And that is the reason why we read most of the books and some authors are very popular. AI can't replicate that, right? And if what will be the timeline if AI, if not the timeline, can AI achieve something similar to that? Like it can give personalized type of content. If I say I want to write a book in the style of Ankur Warikoo about this particular topic, can AI be able to replicate that?
I think it will also have, copyright issues, IP issues. I'm not sure, Mukesh, if you want to take that. So suppose he says, I want to write a book like Mukesh Bansal's three books. Then it will be trained on your three books, PDFs of that. You'll be comfortable with that.
No, I think two different points. One is the what I think the beauty of this generative AI is that it's not only limited to the data it has been trained on. That these things called emergent properties. At some point, it is able to extrapolate and kind of understand the deeper structure behind the data it is trained on. So AI will generate a lot of output which is original. That is happening and going to happen in the future versions of models that will get even better. So there is going to be a lot of creativity there. I think there will be three types of creativity. One is pure AI created outcome. One is AI and human together kind of jamming and generating, imagining something, getting AI to enhance it. And then I think human based creativity will continue. I think chess is a great example.
Yeah.
So in 2015, the chess programs became so good they could beat world champion chess 100-0. And 2018 when Alpha Zero came, Alpha Zero became so good in just few days of training it can beat the world best program 100-0. So today the humans don't even think about competing with the chess programs, but we leverage chess programs to have a deeper understanding of the game, like build more intuition. Every chess player trains with it, and chess is now more popular than ever. So I think the creativity is also about point of view. Like most strong artists, they kind of feel human emotions and they're able to have develop a very strong point of view. I think that will be even more valuable in the world of AI.
Great. I hope that answered your question.
Yeah, I have one more question. So when we put a lot of power, we give a lot of power to companies like OpenAI and Google. So they have our data. And like OpenAI, if I'm giving some input to OpenAI, so basically our data, and I want OpenAI ChatGPT to analyze it for me. The OpenAI also stores that data, which is mine, right? So when we give companies a lot of data and company give us responses and we are so what do we call it? We are so into that we are blindly accepting those responses. What if companies start putting biases and ads? So if a company is paying, for example, let's say Acro is paying Gemini to promote its insurance and ask Gemini that which is the best insurance for me. And it suggests me only that rather and filtering out the insurance policies of other companies. What if that happens? And it is very likely that companies for profit, they can go in this path.
Yeah, 100%. I think all of these are real fears. All of this stuff will happen.
We'll take a, yeah, sorry. Mm.
All of this will happen, but uh, that's what it is. The world is not fair. It's not going to happen. Like let's take the world maybe I don't know 30 years ago, 20 years ago, Napster, right? Like it changed. You cannot change some stuff. Legal, illegal, ethical. This storm is coming. Copyright issues, all of this is happening, right? Like theoretically, all the music that we downloaded 25 years ago and was getting uploaded on Napster, this, that, whatever, was all illegal, right? But that was a much better way to consume music than to carry CDs or whatever it is. So when a storm is coming, it's coming. Legality, ethics, all of it goes out of the window. Having said that, when that storm kind of starts to settle, I think regulations will come up. I think they're going to be great careers. Personally, I believe in AI ethics. AI ethics will have careers, regulations will come up, some of these things will happen. We don't know how it's going to evolve, but I don't think there's any point now in this. It's too convenient, it's too good to be controlled. Now we'll have to adapt ourselves to it, bring in rules and regulations and clarity. But yeah, some things will go wrong, some things will be bad, but we can't do anything about it. It's just too good to shut it down. It's not going to get shut down.
Right. I think we'll take one last question.
Hello?
From this
Hello?
side.
I already have mic in
Oh,
my
he
hand.
already has a mic.
I am that
Sorry.
last person, I hope. Yeah, good evening. Good evening, sir. My question is that I have multiple ideas in my brain. I have confidence that it will going
Wait,
to work.
sorry. You have multiple ideas in your mind and
Means related to startup. I am sure that confident that it will going to work. But I'm worried about I'm not able to find any investors. I'm not getting how to raise the funds for it.
he has multiple ideas, but he's not able to find investors. You can
I
catch them after this session.
Yeah.
Then in the front row, you have
I
both
have
our
to showcase
co-founders.
Did you ask
myself. So only I ask it.
ChatGPT how to get an investor?
No, sir.
What was the response? Yeah?
Meet,
No name.
No. See, it's a biased one. Algorithm is biased.
meet CEO of Cultfit and Mintra. It showed.
All the
Acco
best.
also, Acco too.
Okay, I'm really sorry we are out of time. You can catch them on the sidelines, but before I end, I have to ask you one question to each of you. Considering the platform, tell me how you invest. Where do you invest? What kind of asset classes do you invest in? I know Bangalore founders seem to love real estate. Everybody has to have a villa in that Adarsh Palm Retreat or whatever.
I don't. Do you?
I also don't.
Maybe
Do
after
your
next
homework
round of
better,
fun.
Chandra. So come prepared next time.
But tell us about your investment mantra. What do you do?
My first serious angel investment was in Groww. So, yeah.
And and that's grown for you, right?
Yeah,
It's still growing.
it is still growing. Yeah, it's, growing very well. I think, see, all early stage investing, I don't do, first of all, a lot of it, but ultimately it's about people. I mean, anyone who has done early stage investing knows that you have to back the right people. So, if you are somebody looking for investment, you figure out, how do you become the right person, how much homework
Do
you
you
has done.
invest in the markets actively?
Not actively. I think
But you don't have Grow app then.
I have grown up, of course, right from day one. So, yeah, and just I mean, see for Grow, I think from day one, Grow made investing so easy. I think that was the pitch, when Lalit initially talked to me in first couple of years. I mean, like we talked about the friction insurance. I think the Grow's innovation was to dramatically remove the friction. I think I personally know people who are able to start investing in 5 to 10 minutes of time investment, which was unheard of in that time, and the platform is continuing to remove friction. So I think it's a great way for people to just get started and learn. Markets also have their own dynamics and cycles and sophistication, but somewhere you start, that's a learning curve can get better. So yeah, I'm huge fan. And
Angel investments and markets to some extent.
sorry,
Angel investments and markets, that's where you invest in.
what else is there?
Real estate.
I don't like real estate.
Varun, I'm
Yeah.
sure you have some five insurance,
What?
5 different types of insurance.
Insurance not an investment. देखो panel ही खराब. So anyway, so I have only one house, the one house that I stay in. I have no other real estate. That also I bought 2 years ago. Okay, for the first time in my life. So this, but I'll give you a very different answer. I'm not active investor. I have some public market portfolio which is there, some mutual fund. It's very, very passive. Something is lying there. If few of my friends are investing in a startup or a VC I know is investing in a startup and coincidentally tells me this is good, इधर थोड़ा सा पैसा डाल दो, I'll meet them. So I'm not actively investing anywhere, either personally, and I'll tell you why. Because I think time and choice of investments, what is the return that you need? You want 12%, 15%. I'm not talking about day trading and all, but just generally 12%, 15%. I think my time today, and for every entrepreneur who wants to be, your best investment is your own business, because I think I can generate a 30, 40% IRR on my own business. So I don't want to spend time. I don't want to spend time when I think my business can't generate that return for me or for my shareholders and myself. Then I'll say, अच्छा अभी अभी बाहर किधर डाल सकते हैं पैसे? अभी बन रहा है.
On that note, thank you both very much, Mukesh and Varun. That was such an amazing session. Huge round of applause for these entrepreneurs. Thank you very much, and thank you for being a wonderful audience. Thank you.
A big thank you to Mukesh, Varun, and Chandra for this most illuminating session. I think more or less a lot of ground was covered when it comes to the intersection of AI and startups, the real spectrum. And as one of the panelists said, that when it comes to innovation in AI in India, we should move from incremental innovation to something more radical. We should work towards taking radical strides, right? Next up is arguably the best deep dive for investors. This is a session called Stock Hour, and in Stock Hour, we bring to you a panel of India's leading equity research analysts. Each of the four analysts will present four different unique stock presentations, and this will be followed by a Q&A. Now, how does one participate in this Q&A? We're actually live streaming this event on YouTube. So while the analysts are giving their presentations, I would encourage you to comment on that YouTube live stream, and we will be curating all of those questions and asking the analyst at the end of their presentation. Now, let's watch a quick intro video about Stocker to understand this session better.
Welcome to Stock Hour. Four top analysts. 4 epic stock presentations, 10 minutes each. And this followed by an intense Q&A session. Get ready with the ultimate stock market showdown.
All right, I hope all of us are ready for this stock market showdown. Let's meet our analysts. First up is Natasha Jain, Equity Research Analyst at Nirmal Bank Institutional Equities. She is a CFA and a CIAI charter holder. And Natasha's experience is in consumer durables, electricals, and EMS. So her entire experience is actually quite impressive. Let's give it up for Miss Natasha Jain. CAI.
Hello, everyone. Good afternoon. First off, I would like to thank the Groww team. Phenomenal job, and the audience here, amazing. Okay, without further ado, I'll start. So today I'm going to pitch this stock called Blue Star. For those of you who do not know what the company is into, the company provides cooling solutions, both in terms of residential AC, commercial AC. Then the company provides commercial refrigeration products, something like a VC cooler, water cooler, cold storage rooms. Then the company also does something called an EMPS business, which is basically a contract-based business. So you get contracts, you execute them, need not be your own product in terms of the product that you're putting into the business. So that's broad layout of what Blue Star does. Now, just to give you a little bit of industry idea, so in terms of room air conditioner, our penetration is just 8% compared to a global average of 30%. To simplify this, what it means is India में average household का AC count है 1.5 units. In fact, that's on the higher side. And any house who has one AC definitely has two or three, which means at least 60% of Indian houses do not even have an AC. So that's our penetration level, and that's the strongest tailwind in this industry, in the room air conditioner industry. Next, in terms of geographical bifurcation, all companies across this product category is divided into all four zones in India. In terms of the market share, we have majority of players. The top 10 players command 80% of the market share here. So first would be somebody like a Voltas, which sells the highest number of ACs, followed by LG. Then in the line, you have Daikin, you have Lloyd, you have Blue Star, and all the mid-level category players. Now, in terms of tailwinds as to what really is going to drive this industry, now first is obvious global warming, rising temperatures. I don't need to, I think, elaborate on that. We're all on the same page when that's concerned. Temperatures are rising. AC will no longer be a luxury. It will be a necessity by each and everyone, be it rural, be it urban. Next is the low penetration level, which is 8%. I've already spoken. It's a very low penetration level. So we have, in terms of opportunity, almost 92% possibility to scale up. Next is the rise in disposable income, which again is self-explanatory. As GDP rises, as the middle class population rises, disposable income rises, your luxuries will start becoming your necessity. Therefore, products like an air conditioner will become a necessity. Urbanization happening very rapidly, all the real estate complexes that's coming up, houses that's coming up, everything is now a retrofit in terms of all white goods already in your house, which includes an AC, washing machine, refrigerator, etc. Another important thing in this industry is this zero cost EMI financing. You know, if you go to something like a Vijay Sales, a Chroma, a Reliance Digital, they keep telling you this, that madam or sir, आप अभी AC खरीद सकते हो, आपको payment 2 साल में करना है, आपको कोई interest भी नहीं लगेगा. That's the biggest trigger here. Because if I were a low income category and if I wanted to buy an AC now, if my spending of extra 3 to 4,000 rupees is spread over 2 years without me incurring any interest cost, that's a boost up for this industry. Lastly, in terms of availability of electricity, huge jump in power consumption, power generation now, renewable energy expected to double in this decade, so that will also give you stable availability of electricity. I have just put a data in terms of per capita consumption is 1,255. That's expected to almost double to 2,100 over the next 5 to 7 years. Biggest offtake of this energy will be all your household consumption goods, which includes AC in particular. So that's broadly touched about the tailwinds. Now, in terms of headwinds, this industry is currently at overcapacity. Why overcapacity? So earlier during the day, a speaker had said that we are in the manufacturing phase. So government has started something like a production-linked incentive, wherein you put capacities now and government will keep giving you back some incentives over a period of time. So because of that, the industry has put up capacities right now. At this stage, we do not have that kind of demand. We are still operating somewhere around 40% utilization to what the capacity stands. But as and when the consumption for AC increases, these capacities will get absorbed. So in the short term, while it may be a scenario for overcapacity, in the long term, you are essentially preparing yourself for the humongous demand for AC that's expected to flow in. Another important headwind here is probably competition. So there are approximately 65 room air conditioner brands in the market currently. I mean, I'm sure all of you must be knowing maximum 15, but yes, there are 65 brands selling ACs. So there's a lot of price competition. Now, I will touch it later, but just to give you one gist, why I like Blue Star is one of the rarest companies in the entire gambit who does not get into price discounting despite competition increasing. They have maintained their prices and therefore they have maintained their premium salience versus other players like a Lloyd, like a Voltas, like even a Daikin who have slowly reduced prices because of increased competition. And mind you, just because Blue Star has not reduced prices, they have not lost market share. So I showed you a slide in beginning. So if you see Blue Star's market share, which is the orange one, I don't know if it's readable from there, but it has consistently increased over a period of time versus a leader, Voltas, who's reduced from sharp 25% to almost 20%. Next, this is just a table showing you what is the kind of growth that's expected in the room air conditioner industry. We hardly grew at a under double-digit CAGR in terms of volume, in terms of value close to 11%. Now, from here on, there is a linear growth. Obviously, there is a risk that weather conditions might not play out, but what we saw in FY24 was despite there being rains in summer seasons, winter seasons were even hotter. So people who didn't buy ACs in the summer season actually bought ACs during the month of September, October, November, and December too. So even if there are unseasonal rains, I think there will be enough months in a year wherein the offtake of room air conditioner will increase. So now this slide is in particular to Blue Star. Now, why I like Blue Star is, see, room air conditioner is the manufacturers of room air conditioners are almost same. There are only 3 manufacturers in India. So your product is not very different from your peers. But what gets you the differentiation USP is you add, you spend, you advertise your product. Now, in terms of Blue Star, the ad spend is about 3.2% of their top line, which is the highest in the industry. Industry average is in fact somewhere around 2.8%. In terms of commission, 0.7 versus 0.5 of the industry. If your product is if you give good sales commission to the distributor, he is going to push your product. In terms of R&D, Blue Star is the highest R&D spend company probably after LG. Now, Blue Star ensures that the product is of high quality, high durability, and therefore lesser after sales complaint. And that is the reason why they do a lot of R&D spend. Now, this is one factor which means you are investing back in your business. You are improving your product line versus leaders or other players who've had a lot of after sales complaint because they do not do R&D spend. You may sell the AC today, but 6 months down the line, if there is a complaint, nobody to address it, your mouth-to-mouth publicity is going to kill that company. In terms of dealer count, while it's good that it's an increasing count, thing to highlight is the maximum extraction from the dealer is highest for Blue Star at almost 4.5 million per dealer. Now, industry average is below 4. So while his price is higher, he does not get into price discounting. He is a premium player and yet he is able to extract the maximum from the dealer. Usually it's the opposite. If your product is cheaper, the dealer pushes your product more. But in Blue Star, he's a premium player, high pricing, yet he extracts the maximum amount from the channel. The other set of business is the EMPS or the MEP business that I was talking about. So here, in terms of competition, probably Voltas is the best competitor for Blue Star again in this category. Now, the thing I like about Blue Star is it is exposed to domestic market versus the Voltas who's probably exposed to Middle Eastern geographies. 90% of his book is India based. When you are India based, if there is a problem, you have laws. Laws are not opaque like the Middle Eastern where probably Voltas is focused. When laws are not opaque, if you have an issue, you can actually reach out to the court and your issue gets resolved faster. In terms of contractor, Blue Star is a main contractor in most of his books. Now, what this means is, if there is so you have to understand this EPC business is a very low margin business. It's more about how much you turn over. So in that sense, if you are a subcontractor and for God's sake, if the main contractor or the client goes bust, you do not even have a say in the hierarchy. So you can't even go to the court directly. You have to rely on the first main contractor who will talk to the client, who will go to the court. Blue Star is mostly a main contractor versus his peer who is a subcontractor. So even in this business, I like Blue Star because it has a higher quality of order book. Just in terms of numbers, if you see his EBITDA margins have constantly been on a rise if you bar the COVID times versus his competitor who's consistently making losses. So this is about the other side of the business. Now, in terms of strength, very quickly, I'll take you through. So first I spoke about RAC. In terms of RAC, what I like about Blue Star RAC, if you listen to these, these AC players, they'll tell you that we've put up capacities and we're going to export. In room air conditioner, export is not a viable business. Why? Because we do not make AC compressors. The cost of a compressor is 20% of the AC cost. We import it. In India, we do not have that kind of scale. We consume 22 million capacity we have at this point versus China 120 million capacity. Unless we reach there, making compressor is not a feasible option because it's capex. It requires more money to put up that factory. So in terms of room air conditioner, if you're going to export by importing 20% of your cost bill, nobody is going to play the China plus one strategy. Blue Star, very clear, I will not export room air conditioner, unlike all other players in the industry who've consistently harped that they will export. Second, he is very clear that he will export commercial AC. Commercial AC compressor bhi hum hi banate hain, and the price gap between us and China is under 2%. He is the only player in India, in the Indian gambit, who has actually started commercial exports. He's already rolled out his products to American and European geography. He's awaiting feedback. 9 to 12 months down the line, he should start exporting commercial AC. India, every 1/3 commercial AC put is by Blue Star. Blue Star is a leader in Indian commercial space, so that helps him leverage that technology and use it to make the products in order to export. That is his second strength. Timely ad spend is another strength of Blue Star. So during IPL, I don't know how many of you saw, but there were 3 ads rolled out by Blue Star. Virat Kohli was in it. See, this is a very, very timely ad spend. It's summer season. It's IPL. Entire India is watching it. And then you're flashing your ad with a brand ambassador, somebody like a Virat Kohli. So you get higher visibility, higher absorption. And in fact, in the 4th quarter, Blue Star did amazingly well in terms of getting his products sold at tier 2 and tier 3 cities where probably he was not that present before. So high ad spend versus spending it at the right time is very important. In terms of focus, he's very clear. He will not get into adjacencies like a washing machine, refrigerator, any other white goods. For example, Havells is into everything. Voltas has also started Volt Beko, which is into washing machine, refrigerator, etc. It's not a bad strategy, just that Blue Star is very clear that he wants to remain a very focused RAC player, which is a good thing because there is a lot of competition in the other white goods category. In terms of commercial refrigeration, Blue Star is again one of the best players on the ground. If you walk into any dealer shop, I believe you will only see two kinds of fridges. In fact, even in restaurants, if you pick up the cola from the fridge, it is either a Voltas or a Blue Star. So in that category, both of them are doing well. In terms of channel checks, so what I do is I keep traveling on the ground pan India to understand which brand has better offtake visibility at the dealer and as well as the consumer level. I have got amazing feedback for Blue Star pan India. They are doing well in terms of promoting their product, in terms of properly incentivizing the channel, incentivizing meaning giving discounts to your dealers so that they push your products. So all in all, I like this strategy. Lastly, in terms of financials, Blue Star has not expanded as aggressively as a Voltas or a Havells. Blue Star says, I will anticipate the demand and I will increase my capacity as per the demand. So this ensures that they do not have overcapacities and therefore lesser depreciation on their P&L. Blue Star is one of the only players who has lowest absolute depreciation or even percentage-wise depreciation compared to their peers. In terms of weakness, in commercial refrigeration, Blue Star has lower capacity. However, they are scaling it up. So I would not count that as a weakness. Opportunity, obviously low penetration, high opportunity, export market, very high opportunity. In terms of threat, I already covered there are 65 players and there is lower pricing. You don't have an advantage to price up your products. However, like I said, Blue Star does not reduce prices no matter what. So that is a good strategy that keeps his cash flow rolling. In terms of competitive advantage, so the advantage that I've already spoken, high ad spend, sales commission, R&D and therefore premium player, more pricing power, focused player in terms of HVAC, that is heating, ventilation and cooling, main contractor in majority of his order book, which is again India dominated, a plus. In terms of commercial AC, he's the leader domestically. He can leverage the technology to become a leader in the export market as well. Quickly, I'll touch upon the fourth quarter results. So fourth quarter results, three players you have to look in this sector. One is a Voltas, Havells, and a Blue Star. In terms of Havells, what has happened is Lloyd incentivized the channel a lot. So what happened when you give too much discount, your product gets pushed, but it comes at the cost of your margins because you're giving a lot of your profitability to the dealer. What happens is when Lloyd cuts margins, he suffers at sales level. When he increases his margin, he does not get a top line. It's a cycle that's happening for a couple of quarters. Next peer is a Voltas. Voltas has sold a lot of ACs, but at margin level, he's been flattish. The feedback that I got from the ground is they have incentivized the channel a lot. It is a good strategy to push sales, but till when can you keep discounting? At some point, you need to stop it or else it does not flow in your PAT, your profit. Blue Star did well overall in terms of top line. Margin was again flattish. His margin was flattish because he did a lot of high cost ad spend. Now, I like this strategy. He is organically growing, plowing money back into the business rather than discounting the channel. Discounting is an inorganic style of growth. If you create visibility, people will come back the second time to buy your product. So visibility at a consumer level is more important. Blue Star is doing that. So in terms of, again, competitive benchmarking, I think I've covered most of the points. Why I like Blue Star than the peers. Lastly, in terms of valuation, now this sector is a high growth sector with high tailwinds because we are at 8% penetration. High possibility that this sector is going to continue to benefit as long as there are, very strong summers. In terms of valuation, again, I like Blue Star. I think from here on, if you hold on to a medium to longer term perspective, there is an easy 35 to 40% upside here. In terms of Voltas, there is a 15 to 20% upside in the same time frame. In terms of Havels, it's pretty much fairly priced because not just AC but many other things drive Havels. Now you may ask that I've told Voltas is also 20%, Havels is also a pretty decent company, then why not all the three? The reason is you want to be concentrated, you don't want to be overexposed in a single sector. So therefore you pick the best company which is going to give you the best return, and therefore you do a concentrated bet. And that's why amongst the three, my pick is Blue Star. So yeah, I'm done here with my presentation. If anybody has any question, they can ask.
Thanks so much for this comprehensive deep dive of Blue Star, Natasha. And just wanted to give a full disclaimer here. None of the stocks that are being discussed today are recommendations from Groww. They're not buy-sell recommendations at all. They're in fact a blueprint into what a fundamental analysis should look like of any stock before you even consider investing. So that is the entire objective of this session. Now, Natasha, we have a few questions actually that have come in from the YouTube live stream.
Sure.
First question is, what is the impact of data center farms and the market share that Blue Star can penetrate?
Sorry, what is the impact of?
Data center farms.
Data center firms.
Farms. Probably firms then, because there's a typo here.
I think probably meant something else in the question, because data center would probably be an offtake in terms of AC, yes, definitely. So they are doing contract work wherein they take those kind of work. You take huge areas where you put in commercial ACs. In terms of data center, in terms of cold storage houses, you put those cooling kind of, products. So definitely there is huge scope. In terms of MEP, there are lower number of companies who target that space. So immense scope for anybody, even for a Blue Star or a Voltas or anybody who's there in that business.
Understood. Next question is, the statement that AC penetration is 8% and we have room to grow could be questioned. This person is asking, less than 20% of Indians make more than 2 lakh rupees per annum. The potential for market growth may be less than you think. Any comments on that?
So you have to understand, when I talk about AC penetration, the highest off-taker will be the middle class. So when I say the penetration is going to increase multifold, I don't mean somebody from an extremely below poverty line coming to a below poverty line. I mean below poverty line almost getting into the middle class bar. And that shift is happening in a very, very good way. We're seeing a lot of households migrating from a lower middle to a upper middle or a middle class. So that is where the alpha is, and that traction is enough to actually take our penetration from 8% to probably a global average of 30% over the next decade.
Understood. Next question is about supply chain resilience. How has Blue Star managed to manage supply chain disruptions caused by recent global events, and what strategies are in place to mitigate future risks?
Sure. So in terms of global supply side issues, right now, not a lot of these companies, export. So in terms of export shift, in terms of the export landscape, there is not a lot of supply side challenges. Domestically, because commercial AC is completely manufactured in India and room AC, just a compressor is imported from China, we do not per se have a supply side issue. The government has encouraged PLI, which means setting up your own capacities. So that in fact will even mitigate any supply side issues that you may actually see in the future.
Understood. Sustainability initiatives. Can you elaborate on Blue Star's sustainability initiatives, particularly in the context of increasing environmental regulations and consumer preferences for eco-friendly products?
Exactly. So I had touched upon a point called R&D, research and development. So Blue Star is one of the companies that has made sure that every year they put in a good amount of money in R&D. Their R&D specifically is to ensure that electricity consumption goes lower and that you reduce your carbon footprint in terms of emission of the carbon gas that's taken out of the AC. So in terms of that, I think Blue Star is doing a fantastic job. Best R&D player, I can say, across players in India.
All right. If we look at market expansion, with the growing demand for air conditioning and refrigerating solutions in tier 2 and tier 3 cities, how is Blue Star planning to capture this market segment?
So Blue Star is a premium player. 85% of his portfolio is affordable premium and premium. What he has done now, especially in the last 2 quarters, is he's rolled out more of affordable products. And this is being married with the fact that he's doing a lot of advertisement. So when you do an advertisement with somebody like like a Virat Kohli, plus you roll out products which is on the cheaper side, you have created your inroad towards tier 2, tier 3, and tier 4 cities. This was very much visible in his fourth quarter numbers, and I think that kind of answers the question itself.
Yes. All right. Technological advancements, let's talk about that. How is Blue Star integrating IoT and smart tech into its products, and what impact do you anticipate on market share and customer satisfaction?
So this again would be related to the R&D point that I made. They're doing a lot of R&D in terms of incorporating, all this technology-based advancements. In terms of a lot of AI, probably not applicable in our product line as of now, but in terms of air condition, to be specific, if you have a 16 and a 18 temperature, in between you get a 16.5, you get a 17.5. That's advancement. So Blue Star's doing that. In his products, you can actually see the 0.5 also in the temperature controlling. And yeah, I think that's a start to getting, there in terms of technology advancements.
Understood.
Yeah.
Thank you so much for this detailed analysis, Natasha. May I please present a bouquet to you? Thanks. Thank you so much.
Thank you so much.
Big round of applause, please, ladies and gentlemen.
Thank you.
Up next, we have Mr. Amit Anwani, who's the lead research analyst at Prabhudas Leeladhar India, and he has 13 plus years of experience. Amit has been rated the Wall Street Journal's Asia's best analyst in 2013. Please.
Hi, thank you. Hello, everyone. Uh, First of all, thank you for this opportunity. And I'll be discussing one of the hottest sector in the country from past few years, the defense sector, and we'll be discussing about Hindustan Aeronautics Limited. So you have to use the screen. Yeah. So we'll be discussing Hindustan Aeronautics, one of the leading aircraft supplier to the defense sectors, Air Force in India. And so just to put some context to the defense sector, uh, we would be probably about the fourth largest defense spender in the world. So I think US is about $900 billion, then followed by China, and we would be about $80 billion. And just to put a context, what has happened in defense in past, 7, 8 years, there's a lot of policy reforms which has happened on the back of the import content which we have in defense. So, putting that in context, a lot of platforms are imported, especially the aircraft from Russia, almost 45%, 45% import from Russia. And to deal with all the imports, the government decided to come up with several policies over past few years, and then that set the context. So, including the defense production policy, uh, which highlights that you would like the any company is going to manufacture aircraft, there should be at least 50% domestic content. And on the top of it, a lot of programs are now getting inbuilt. So now coming to Hindustan Aeronautics, typically the company manufactures aircraft and helicopters, and one of the largest defense PSUs in India, with almost about 30,000 crore revenue, and the defense revenue in total in the country would have been about 1 lakh 20. So that way we can see about 25% market share in the overall defense uh, consumption in India. So having said that, you can see in the past the company has just grown by 6 to 7%, and largely because a lot of uh, aircrafts were only assembled in India, and the transfer of technology from Sukhoi, the Russian teams, and from the Israel side. So that has actually not held up the revenue growth which company might have witnessed. But past 3 years, 3 to 4 years, with LCA, the light combat aircraft, where we got the first prototype in 2017-18, we got few orders. It is a homegrown platform with co-developed with DRDO. And I think that was a breakthrough for the company. So we can see that the companies now has uh, projects including Tejas Mach 2, MCA, which I'll discuss. But LCA breakthrough, so they got 44 number of orders in FY18, and then almost 90 orders now, and 170. So collectively almost 250 aircraft they have to deliver over next 7-8 years of Tejas LCA. Now, just putting that thing in context, on a country level, we must be having around 1,500 aircrafts and fighters, and at least 600 are more than 40 years old. So, in case of a war situation, it will be really difficult to deal with this kind. So maybe we may not be in a position to fight if there is a war with China, war with Pakistan, and we saw a lot of confrontation in past 5 years. So out of this 1,500, so at least 600 aircraft needs to be replaced, which are 40-year old, or let's say next decade. And the previous governments had been quite slow. As I said, the budget allocation was quite low, which has gone up. So the allocation used to be 30,000, which has gone up to 55,000, almost 40-50% higher in budget. So out of this 600 aircrafts, as I said, at least 250 aircrafts, the order has been raised. And these are all the versions of LCAs, the homegrown aircraft, where HAL has a monopoly and, as I said, developed with DRDO. So there are 250 aircraft where the order has already come. There will be 250 more aircraft where the order is supposed to come. So this 250 aircrafts has increased the order book from 30,000 to now 95,000 for HAL. So that creates a robust pipeline for next 10 years for the company to grow at 10 to 12% CAGR. And I'll discuss the other platforms also. So now I think coming to the tailwinds, which I already explained. So there was a defense acquisition policy, which came in where the government intendedly tried to increase the local component. So what the defense faced one major challenge in the past few years is that, as I said, the lack of technology, the import component for us, including Russia, we imported about 40%, France we imported about 20%, Israel we imported about 10%, so almost 70-80% import in defense, and this through government to government deals or maybe the offsets. But now, with all these policies, the government is intending at least 60% domestic components. So, of course, the engine manufacturing, we got transfer of technologies, and many companies are focusing. But the point is, the key focus in the policies is that they would like to increase the local component in defense, and this will create huge, vendor base in the country for platform OEMs like HL to procure from vendors and complete the deliveries. And we are talking about export also. So having said that, each aircraft requires more than 2,500 LRUs, line replacement units. And this is coming, more than from 4,000 vendors, where we're creating the vendor base if you want to really indigenize and, what we are talking about, self-reliance and defense. So this is really important and critical that that vendor base has to be supported by the government. Government came up with the import list to reduce the, certain products or equipments, the import of that has to be reduced in next 2-3 years. So at least 5,000 such components are already listed where the import is not allowed, and it has to be procured from the domestic vendors. So that is one. And uh, on the headwind, obviously, as I've explained to you, we are import dependent country with respect to defense. So we need to create a robust uh, 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 vendor base to reduce the import, and also so that in future we are able to export these platforms to neighboring countries, or the countries where the competition from US, France, Israel is less in terms of selling the key aircrafts. So this is one. Second, with respect to strength, so as I said, 95,000 order book, and uh, we are talking about at least 250 aircrafts to be tendered out. And the company also makes helicopters, the Prachand and a few other helicopters. So just giving background for helicopters, we got on a country level roughly about 600 helicopters with the Air Force and Navy. And the similar situation, more than 50% helicopters are more than 40 years old. So in a war situation, we are completely unprepared. So there would be helicopter orders coming in for replacement of at least 300 helicopters in coming 4 to 5 years. So that already has been notified by the company that at least 1,75,000 crore of pipeline is there apart from the 95,000 orders which they have already won. So if I add this up for next 8 years, they can easily grow at 12 to 13% revenue growth. So that is there, and it's a debt-free company. The margins has been improving. We saw margins for the operating margins for FY24 improving by 200 bips, almost 27% margins. And the company has been constantly focusing on leveraging the employee base, reducing the employee cost to sales, which we'll see in numbers. So broadly, they're focusing on their strength, which is development of the homegrown helicopters and aircrafts, so that there will be a serial production for next 10 years and deliveries. So this is there. So with respect to cash flows, obviously they are heavily dependent on defense budgets. That is one thing, and heavily dependent on the allocation of defense towards aircrafts, which I said has increased in past 3 4 years. But that is one thing which is already watched for. And second is transfer of technology. So we as a India has been pretty weak with respect to technologies on defense, and that has been the one of the key reasons for imports. But having said that, the focus has been for the government. So recently, even HL got tied up with G141 engine co-manufacturing in India, and they already got tied up with Saffron for manufacturing engines for helicopters in India. So wherever there is a possibility to transfer the technology and manufacture, that is the objective. And broadly, the objective is to manufacture at least 65% component in India for any platforms which is going into the Air Force or helicopter side. So that has been the key focus where the company is going to spend a huge amount. So the capex lined up is about 15,000 crore for next 5 years, and 3,000 each year on the top line of 30,000. Very recently, the Defense Ministry allocated at least 15,000 for developing a prototype, the new prototype, which will be much advanced than the LCA, that is known as AMCA, the Advanced Multi-Role Combat Aircraft. So the clear focus of the government has been whatever has not been happened in past 2 3 decades with defense. They would like to completely make it self-reliant, self technology, and then replacing all the aging fleet in, as I said, more than 40 years old in aircraft as well as helicopters. So these are the opportunities, as I said, MiG 21, MiG 29, Mirage 2000. These are the few numbers which I have highlighted here. Jaguar 130 numbers. So this is collectively are going to be phased out in next decade, and definitely higher versions of LCAs, the light combat aircraft Tejas, will be introduced, and will see the serial production. So you must be aware that there's already order which is about to be tendered out for 97 more Mach 1A, which is about 60,000 crore order, which they can get. And on helicopters also, I said, there's a massive opportunity. So if you see the whatever has not happened in the previous decade, they might have supplied hardly 60, 70 helicopters. But if you see next decade, there's an opportunity to supply 400 plus numbers in helicopters, where the defense ministry is on the verge of approving, and that can come for tendering. So that is there. So it creates a robust 2 lakh crore order pipeline for next 2 3 years for HL. They're sitting already at 1 lakh, as I said, 95,000 crore. And what is different between the last 2 decade, and so I see defense decade wise. So past 2 decade went into the development of Tejas LCA, where we started the program in 95 long back, and the main things started happening from 2007. So I think there will be higher versions of LCAs which are in production for next 2 decades, as I said, because we need to really replace all the 40-year plus old aircrafts. So this production is definitely will be the golden time for HAL with respect to the top line and with respect to the delivery. So they can produce roughly 16 aircraft today, and they're going to increase this line to at least 24 aircraft in next 18 months. So they'll be able to deliver minimum 24 aircraft each year. And same for the helicopter, they got about 60 helicopter manufacturing capacity, which they would like to expand to 90 each year. So what I came across one document from I think some defense vertical that there would be at least 1,000 helicopter requirement for next 12 years. So that itself indicates we need to at least add 100 helicopters each year. And HAL is the sole supplier for aircrafts as well as helicopters. No one makes it in the country, and now they're in the sweet spot because of the government's focus on self-reliance. So revenue, as I said, going forward, we are expecting there would be manufacturing contribution. They'll start delivering the LCAs, as I said, 16 in numbers in FY26 and then 24 in numbers from FY27. So the revenue can actually grow for a very long term at 12-13% plus. And because of the deliveries of LCA Mach 1. I think we have rated 5 profits. We saw this time they're able to leverage on manpower. The manpower to sales was at one time used to be 25-27%, which is now almost at 18% as a percentage of sales. So there's a lot of leverage there. There will be a lot of leverage because of the capacity utilization also, as I said, since the deliveries are approaching. So that definitely improves the profits. The company is debt free, a pretty healthy interest income they earn on the cash flows. So the liquidity, there's ample scope despite they're dependent on the government budget for aircrafts. So growth prospect, I already highlighted. This will be the deliveries which will be coming in, which includes 12 light utility helicopters, Su-30 MKI, and there is an engine upgrade program which is going on for Su-30, which will come, and that will also ramp up the growth prospect for the company. So there are several big ticket aircraft projects which are in development, and government is already allocating the R&D budgets. That includes AMCA, which I already explained, the Advanced Multi-Role Combat Aircraft, twin engine deck-based fighters. So this will be used on the IAC, the Indian aircraft carriers. You must have seen the one which is built by Cochin Shipyard very recently, that requires a very special the aircraft fleet, which will be taking from the sea, from the deck of the Indian aircraft carrier. So there, this twin engine is pretty helpful with respect to maneuverability, with respect to easy and quick takeoffs. So all these programs are on work, and LCA Tejas Mach 2, which will be much higher version of the current Tejas aircraft, which will be there. So apart from this, I think we have mostly covered it, that there's a pretty strong growth prospect, pretty strong pipeline. They can grow at 12-13%. They can maintain 25-30% profit margins. And so now coming to valuation, when the company got, well, I'll go back when it got listed at roughly about 1,000 rupees, and adjusting for split and everything, the stock has been 10x. And this is all because of the reforms which has come in past 5 to 7 years in defense, which completely changed the face. So as I explained, Tejas and the kind of opportunities which are going to come for 10 to 15 years for the company, that itself is a lot of built-in. So I'll put it this way, the current multiples look slightly higher than the industry averages, but the inherent growth which company can deliver over next 10 to 15 years, since past 2 decades they have just grown by 6 to 7%, is quite commendable. So I think the way automobiles saw the vendor base creation, let's say in Chennai, and we saw the OEMs building, and there's a vendor base which brokers from different companies. The defense is going to see that kind of massive creation of vendor base to localize a lot of platforms. The only thing which was lacking was technology, where there's a lot of focus on development. The idea is tying up with many companies to co-develop the projects. So that is one. So in nutshell, there's a tremendous future in case there's a stable policy environment for the defense companies for the next 5 years, and HAL will be at the forefront of it. Yeah, I'll stop here for questions.
Thanks so much for this detailed analysis of HAL, Amit. And again, full disclaimer, please, iske baad HAL mat khareedna. This is not a buy and sell recommendation from Groww,
Yeah.
just a fundamental analysis. So, a few questions, Amit, that have come in. One, what are the proxy players who will benefit from import substitutions in order to support HAL critical LRUs from regions that are constrained, such as Israel or Russia?
Right. So if you see the Tejas, there were many players, including the engine which comes from GE, which is imported. The wings has been supplied by L&T, so L&T got benefited. Then few components came from UK, which we are still localizing. So there are many companies from the conglomerates which have started manufacturing components. So the name is Tata Advanced Systems, which manufactures few components, especially as I said, L&T does a lot of components. So I think in entirety, we can only go for 70% indigenous component in my view, because the engine development, which costs a lot of money, and would still not be the case that we'll be able to develop our own engine, and we are a lot more dependent on Saffron and GE, as I said. So apart from this, the government intends to localize at least 65-70% component. We might be at around 55-60%, and there are many heavy forging manufacturing companies who have opened their defense business, and they would be part of this vendor ecosystem. So including Bharat Forge, Tata Advanced System, Mahindra Advanced. We saw L&T is already there for past 20 years. Now they have been prominent in supplying components wherever possible.
Right.
So yeah.
Got it. And can you broadly provide an overview about the recent changes in HAL's executive team and the impact of that on the company's performance?
Right. So past 2 years, the team has been stable. So there were changes before that. But having said that, as I said, the main story is that obviously it will be a government dependent sector driven by government. And I think the government is leading many defense companies where the order book has gone pretty strong. And they are driving the strategy for overall, defense procurement, how to shape it up. And that is going as a order to, these companies which are going to execute. So my point is, even if there are changes in any defense PSU companies every 2-3 years with respect to management, that might not impact the way we are thinking could have impacted in a private company. Having said that, because all the policies are derived or already set, in context by the government, and that is pretty strong right now. Yeah.
All right. And HAL's management has forecasted a consistent double-digit growth rate. What are the main projects and contracts that will potentially drive this growth, to your mind?
So one is Tejas LCA Mach
Okay.
1. So they got 83 number of orders, which is going to come for delivery this year. They would be delivering 6 to 7 aircrafts FY25, and subsequently 16, 24. So for next 8 years, they'll be delivering LCA Mach 1 and Mach 1A. So at least 100 aircrafts. And then they are on the verge of getting helicopter orders pretty soon. LUH, so LUH is light utility helicopter, and LH is light uh, aircraft helicopter. So point is key. All Many of the orders are already in the book, which I expect, especially the LCA, and many will come in next 2 years, including the helicopter orders. Next 10 years, they'll be delivering LCAs and the 2-3 advanced helicopters, which I highlighted.
Perfect. Thank you for answering the question,
Thank you.
Samit.
Thank
Big
you.
round of applause, please.
Thank you. Thank you.
And also just present a bouquet. Yes, here's a bouquet for
Thank you
your
very
time and
much.
effort. Thank you.
Thank you. Thank you, bye.
Our next analyst is Mr. Rahul Jain, who is VP Institutional Research at Dolat Capital Markets. He has 17 plus years of research experience in the tech sector. Please welcome Mr. Rahul Jain.
Next slide. Previous. Okay, that is the previous. Yeah, hi. I mean, you heard about two companies so far, and I'm sure something more before that. I'm trying to tell you something which you might have used in some way or form. I don't know how much you are aware about this subject, but at least you might have dealt this thing in your experience and on your phone, on your background. This company has been working for you at some point of time. So ever wonder that when you do some browsing, you leave the browsing in between, and then you go to another app, you see the ad of the content which you were watching earlier, like something you didn't buy on Myntra, eventually comes up another app as an product ad. So what's happening out there is this company called Apple. What they do when you touch your fingertip on the app icon, uh, in that 1 nanosecond, while that app gets open, some signal goes from your phone that this person is logging into this particular app. And do anybody want to show an advertisement to him? And at the same nanosecond, because you were on app like Myntra before, somebody would buy that slot for Myntra in that nanosecond and show that ad, and it pops up the moment you open the app. So this is something very, very dramatic. It all happen in nanosecond. Company like Apple make it happen by buying the inventory and showing you a very, very contextual ad. As you know, 97, 98% of all apps in the world are free to consumer. So advertisement become their only monetization model. And that's why it is important for something like Apple to be very, very contextual and show you the ad so that you actually watch the ad. And sometime you may even end up clicking it and going into the another app which you left and close the transaction. And that is called conversion. So So this is a very, very, they have technology platform which ensures a lot of these things happen. At one end, they have the demand side, which is like brands who want their consumption to happen, like for a Myntra, for product to get sold, or for Amazon to get the app download, or anybody to get a subscription for their app. These kind of thing is called demand side, and there is a supply side. You must be wondering, there are so many content apps. They show you free content. They don't ask you any subscription, but they still survive for years because basically they show the ads on their platform. And that is their inventory, which is their revenue model for those companies. So company like Apple, which are called as ad tech businesses, they bridge this gap, show ads on to the consumer, which is contextual, helps brand do more conversion, and at the same time help the content company to monetize their content. Now, why it is relevant? It is of course relevant because the biggest and most relevant billboard today is the phone screen that you have. In the traditional way, we see that there's a lot of hoarding which is placed on the road. Nowadays, people, when they are in car, they don't even look outside. They just look at on their screen. So this is one billboard which nobody misses. So it makes a lot of sense for any brand to show this advertisement on the screen rather than anything else. Now, this is ever evolving, and the latest trend being CTV or connected TV. So many of you might be using something like Geo Fiber, and what you see is that now you even get ads when you're playing some YouTube content on that. So these things make life even more easier for brand to target a particular audience because they know that this particular connection is in this particular area. So what kind of product need to be sold and who is watching, what kind of content he's watching, and accordingly place the ad. So this is an area, if you see, there's a global ad spend of $860 billion. A lot of it is becoming digital. It's $135 billion right now. But we see the linear TV, which is $165 billion. And there is a lot of content, a lot of consumer, which are now in the cord cutting phase. So when they do the cord cutting, eventually they move to a TV called connected TV, and that becomes another avenue for player like Apple to monetize. And this red line here, though the numbers are not very visible, but you could see is growing much faster than the traditional ad spend, which is the black line, as you could see. Now, a very popular thing, what we say, what is the SWOT analysis? Some very easy thing out here for him on the strength side is what they call is the CPCU model, which is cost per converted user model. So we all see ads where you just see the ad as a banner on your mobile phone once you open the app. You can just click it, you can watch it, but you don't act on it. That kind of advertisement is very, very commoditized. But what Apple does is something special. They only get paid by their clients when they do some conversion. And what could be the conversion? Conversion could be getting an app downloaded, getting a form filled, getting an, let's say, a visit to a real estate project, getting a test drive fixed for an automobile car, or adding a product to the cart, liking a particular page. So all these things could be important metrics for anybody who is spending their dollars. So this is one form of advertisement where there can be a lot of ROI centricity involved. Because if you put a hoarding on the road, you don't know how many people actually watched it, whether those people were relevant for that particular product. Of course, it works, but there's no way to measure it. This is a more measurable way. So that is the biggest strength for this company. When it comes to weakness, of course, there is a lot of thing that happens on a vernacular side. If you talk about India's penetration, uh, incremental more smartphones would come by users which may not be native to English and they would like to work on the regional languages. So ability of advertiser and ad tech company to work on the vernacular aspect of it could be the next big thing from an opportunity point of view. And then, of course, uh, though it look very exciting from a technology point of view and data relevance point of view, one very important thing that has become relevant is the privacy. And more privacy is getting relevant. There are major fines when it comes to misuse of data that these companies might face. And that's why it become very critical for them to use your data in a very sensible and responsible manner. Any misuse of public data could be very detrimental. So that is evolving privacy law could be detrimental to this kind of business. But as I said in the beginning, 97% of apps are free to consumer. So if they don't show ad, they don't exist. That means all of us end up paying subscription for all the apps that we use. So ads are going to stay, and it has to turn more and more contextual to make it more sensible and ROI centric. So yes, they need to take care of privacy, but irrespective of that, it's going to be relevant. Now, specific to this particular company, this company has clocked 47% revenue CAGR ever since it has been public. 22% of that growth has been from organic means, and the rest has come through 6, 7 acquisition that they have done. But the beauty about this is that when they have done this acquisition, these companies they bought at a very reasonable valuation. Most of them were loss making. They turned them around, create value in the process. And that's why, irrespective of 47% growth, they've also delivered 48% profit growth in the same period. So it's not like somebody is just acquiring growth, which is just to get the scale, but also delivering similar outcome in the acquired entity, although they are loss making to start with. And then again, what is the liquidity out here? They have recently raised another rupees 7.5 billion from a Singapore-based sovereign fund, and this further adds up to the ammunition for them to drive the inorganic growth. So 20% growth is something which company has delivered on a historical basis, on the organic basis. On top of it, it has a very large pool of cash to ensure that there is more inorganic effort that may happen. So cumulatively, they have 14 billion, and based upon their benchmark of revenue multiples of their acquisition, this may add another 500 crore odd worth of revenue on the current 1800 odd crore of revenue base. So that can further add 30% of growth over and above the internal accrual that they will generate. Now, what is the growth prospect for them? As I said, vernacular, that is the biggest thing that would happen in the ad tech space. Every ad tech company is trying to create more and more solution in the regional languages, and that is where the bigger strength will come. And also the verticalization strategy, what they call is as EFGH. So they target companies in this vertical. And as we see that more and more businesses are becoming appified and digitized, so more and more areas become relevant for them. For example, no cars were getting sold online pre-COVID in India. Largely, you can say that. But once COVID hit in, companies for the first time realized that dependency on dealership was so high. So it's very relevant that they need to engage customer and potential customer on an online manner, which creates opportunity for even a traditional product like car to be sold online. And now we see some of the vehicle get sold online in the first hour of launch. For example, Mahindra XUV uh, sold their all of their fleet of 25,000 on the day of launch in the first hour of the launch. So nobody took a test drive, but they were able to sell 25,000 cars in 1 hour. What is the competitive advantage is that they work on the end to end. As I said, they work on the demand side, they work on the supply side, and they also act as an ad network wherein they buy the entire ad inventory and allow the companies to stay focused on their own core. For example, if there is a gaming company, they make a very engaging game, but they don't know how to monetize on their advertisement side. They can sell entire their inventory to an ad tech company and just simply focus on creating a very engaging game, while all the monetization on the advertisement can be done by an ad tech company, and it could be Apple also. And then guidance. What essentially happens is that the digital advertisement market is growing larger. As per some study, 45% of all ad spend now, even in India, have become digital. This will grow even larger. And within that digital pie, around 20% of it is just performance centric, which I talked about is ROI centric CPCU model. So as more advertisers become more aware about that whatever they are spending, what is the kind of a return they should get out of it, the expansion of the market from a performance side will further add up to the kitty, to the serviceable addressable market for Apple. So just like any other ad tech company which are just getting the spend will shrink down to more organized and relevant player like Apple. Now these are some of the attributes which we are talking about for Apple, that what has their been strength. They have widened their management capability, strengthened their board. In terms of leadership, they have 12 plus leader. They even try to rope in the companies who actually sell them to stay on their board for longer and try to run the business even after selling it to Apple. And they do have an earn-out model so that they skin in the game for the selling company and they come on the board of a larger company, which is Apple. And then they try to think digital inclusive growth, and they also have a lot of robust social engagement. So all these things, very qualitative factors, may look very irrelevant to a lot of investors, but these are the foundational steps required to create an organization which will be much larger organization over time. As I said in the beginning, in FY19 when they came up for their IPO, their revenue was just 200 crore. And today, in Q4, they clocked their first 500 crore quarter. So it's almost 10x in 5 years from a run rate point of view. Now, valuation, of course, all these high growth businesses comes at a PE valuation, which are generally very expensive from a pure point of view, because as a fundamental analyst, most people would like to buy the companies which are low PE. But what we try to see that it is very, very fundamental to understand that a very high growth business are not going to be available at a very, very reasonable valuation. But it's like buying uh, buying a very fantastic business which has a large TAM, which has a management which can take it to the next level and ensure a very, very high growth. Because if you're not buying businesses which are growing faster than nominal GDP of the country, essentially you are averaging out your outcomes in a certain way. So a business which has been growing at 50% CAGR is something which is rare in the Indian context. And that is why this kind of a business you would get at a slightly expensive valuation, but need to be adjusted to the growth they are delivering. So there is no immediate peer for this company in India, but there's a company called Trade Desk in US, which is almost 9-10 times that of Apple in terms of revenue, and the valuation is around 43 times its 1 year forward earning. So even Apple in India is growing at 50% CAGR with close to 16% EBIT margin. And with that kind of a business, the right multiple in our view could be anywhere between 1.5 to 2.5 times their growth. So even if you ascribe that to their organic growth rate, which is a sustainable growth rate, somebody can think of this business fair value to be, accordingly. So we think the fair value of the business fair valuation for such a business could be anywhere between 40 to 60x. But yes, that's an opinion everybody might have their in their own way. So what is the risk? I've addressed this in some manner. Apple ITFA policy, Google Privacy Sandbox, all these giants are working on technology in such a way that the consumer data is protected and the devices that we have in our hand, whether it is an Android device or an Apple iOS device, there has to be incremental safeguard so that the data which you have on your phone is not sent beyond the mean to all this ad tech company for monetization to ensure that aspect. And that's why incremental thought process out here could become a challenge for these companies to sustainably make their data relevant and contextual and give those ROI centric outcome which their advertisers are seeking. Then similarly on the scale up side, uh, our consumer behavior keep on changing every now and then. So for them, the way you used to consume things changes, right? You may be shopping less online 5 years ago versus now. You may be eating less on Zomato versus you might be doing 2 years ago. So those kind of pattern keep changing. Your behavior keep on changing. So unless and until you invest too much on reading the consumer, the scale up become challenge. And the third bit is the acquisition risk. As I said, they have done 7, 8 transactions. So far, their track record has been very, very high with 6 successful transactions, 1 moderately good transaction. But we know that doing acquisition, successfully integrating is not something which is an easy ask and always have a risk of synergy at some point of time. So that is something which will be integral part of this business. Just we have put down some points from a competitor analysis point of view. But as I told you, there's no India listed peers. You can see a name called Inmobi. They are present in India. They are as big as Apple in India, but they are a private company. And these are 2, 3 names which we have pulled out from the US market. The name is Pubmatic, Trade Desk, Digital Turbine. So these are the companies I'm just referring here. In case you want to go deeper into the peer set, you might have to look at the global peers and not any India company to understand what is the right market for them. Now, just some trivia kind of thing, how Apple could gauge into this situation and become so relevant is that because Amazon India, when they came into India, they had a very big task of getting their app download to the Indian consumer who were very, very early into the e-commerce space, and Apple was one player who helped them in that aspect, which in the process helped them creating the profile base which is required to show more and more contextual content. So that is how they have become relevant. And another way to look into this business is this is, although it is a B2B business, but this is not something like you sign a 5-year, 10-year contract. So any such companies would work with 3, 4 ad tech company to ensure that whatever ROI they are able to generate are efficient. So as I said, you can just claim that I'm the best and all the growth of a particular brand is coming because of the ad tech company, but they keep shuffling their budget with different ad tech company to see what is the right outcome coming out of it. Yeah, I think I'm done with this. Any question, if any of you have?
Thank you for this detailed analysis, sir. Due to paucity of time, we won't be doing a Q&A, but we would like to extend this token of appreciation
Thank
for
you
your
so
time
much.
and valuable insights. Big round of applause, please. Thank you. Finally, we have Mr. Sandeep Abange, who is an equity research analyst at LKP Securities with 8+ years of experience in capital markets. Sandeep specializes in mid caps. Before we proceed with the presentation, just a quick announcement as well. Everyone who's outside, I know this event is getting broadcasted outside. Please enter the auditorium as like during this presentation. As just after this, we will be having an exciting Q&A session with the founders, so you wouldn't want to miss that. Right, so let's begin with the next presentation. Please welcome Mr. Sandeep Abhange.
So, hello everyone. Hope the enthusiasm is still left. So, I'm Sandeep Abange. I'm a mid-cap research analyst at LKP Securities. And today I'm going to talk about a particular sector which is very widely known, very widely covered, fast-moving consumer goods, daily goods which we use on a day-to-day basis. And we are going to find out a company and do a deep dive into it. And just before doing a deep dive in the company, I would just like to throw a random question at you. Uh, who do you think would be the most dangerous animal in the world who has killed most amount of human beings in a year on an average? Who do you think would be the most that animal would be? Sorry? Okay, okay, sharks, snakes. Okay, I'm getting interesting answers, right? So just to further ado, I'll just so that's an also a correct question answer, sorry. So I would be talking about a company which is very closely related to that particular industry, which is Godrej Consumer Products Limited. So this is the chart where you will see that most deadliest animal is a 0.5 to point inch long, which is a mosquito. It kills 7,50,000 people on an average in a year, every year, even today. Yes, guys, this is right. Even today, 7,50,000 are dying because of mosquitoes. So just to take you the overall, if I before diving deep into the overall company, so the company is basically into home care and personal care. In home care, it has a major market share in household insecticide. It has major brands like Goodnight and many other personal care brands. And before diving deep into the overall company, I would like to talk about key tailwinds in the FMCG sector, how the overall FMCG space is kind of evolving, and what are the key tailwinds which we see right now in the overall space. So the biggest tailwind what we are seeing right now is the rural market recovery. If you see the overall FMCG market, almost 65% is almost urban market, and semi-urban and rural markets constitute the rest, 30-35% of share. And we have seen uh, quite a bit of lag in terms of the valuation as well as earnings growth of the companies, especially the volume growth of major FMCG companies like HUL and Dabur, Marico, etc. in the past 2 years, because majorly because of the post-COVID kind of phenomenon. But now we have started seeing rural market recover. In the recent quarters, we have seen almost a fair bit of jump in terms of volume growth in the rural market. So key tailwinds are rural market recovery, premiumization and innovation. Like every company is, doing innovation and trying to pitch premium products to the consumers. So, and even like the consumers are also getting more brand conscious in terms of, which products should they buy or sell. And apart from brand consciousness, I am also seeing favorable demographics. If you see the average median age of the population of India, it is somewhere around 27, 28 years. So that is also fueling growth in terms of FMCG products. And urbanization with increasing disposable is also fueling growth in terms of volumes in urban as well as rural markets. And increasing penetration. So penetration is something which every other FMCG company talks about. If you're not deeply penetrated in the rural areas as well as in semi-urban areas, you're not going to win in terms the market share what in which categories you are present. So these are some of the key tailwinds what I am seeing, and headwinds are basically inflation, competition, and distribution. These remain to be the key headwinds because, as you have seen in the past year, inflation had touched almost 7.4% in July 2023. That impacted their sales as customers started downtrading, and that resulted in lower volume growth across the overall sector. And competition is always there and will be always there in the overall space. And distribution also remains a key challenge. How they grow their distribution, that will increase their volume growth. And the reason for conviction on GCPL is basically the major strengths are category creation and breakthrough innovation. So in terms of category creation, they have launched a lot of products in terms of air care as well as in their hair care category where they are number one. So I will talk more on that on in the next slides. So if I see GCPL, what is GCPL overall? They are their majority of revenues, 90% revenues are coming from home and personal care segment. And if you see, they are present in lot of apart from India, they are present in Latin American countries, African countries, even SAARC countries, and as well as Indonesia. So if you can see, they are number one players in lot of geographies. In hair color, they are number one in Argentina as well as in India. And household insecticides is also a big market in Indonesia as well as India and the African countries, which are major the emerging markets basically. So if you see the key breakup of the company, uh, overall 59% of revenues are coming from personal care. Home care is contributing 36%, which is the household insecticide segment, which I talked about. And if I see the geographical breakup, 57% revenues are coming from India, which is kind of growing a very fast pace, as well as the international business are performing majorly Indonesia and as well as Africa and some of the other export related countries they are having. So in total, 57 to 60% of their overall revenues are coming from India. And if I just talk about the overall, which are the power brands for company. So if you these are the major power brands, 1,000 crore plus revenues in terms of GC, Godrej, Goodnight, Synthol, Godrej number one, which is in the soap category, and Darling is one of their brand in Africa, which is in the hair extension space. And there are other key brands, which is Stella, which is into locks. Godrej is also a market leader in that category. So they are present in multiple categories. They are the leaders. So if you see, the top 11 brands contribute almost 75% of their overall revenues. And if you see that their brand positioning in terms of geographies, it is quite diversified. So that is why I believe that the brands which the company is growing, the penetration is also very much low. Will as that we will see in the next slides. So if you see the growth and competitive advantage for the companies, basically increasing their total addressable market. So they are mainly focusing on increasing their markets in their particular categories. That is why they are getting more into international regions, and that has fueled growth in terms of volume growth has been over 20% in some of the categories. So that has the company which it is present in household insecticides, where it is having 57% market share. No other company, like even bigger companies, have been not able to take their market share. That is the kind of category penetration and the brand creation they have done over the years. It is almost a 125-year-old brand as a Godrej, if I talk about. So these are the overall growth prospects what I am seeing, and competitive advantage are leading market share as well as second largest player in the domestic soap category as well. And if you see the management guidance, so the management has guided for high single digit volume growth as well as mid-teens EBITDA growth for the next few years. That has been the case. If I talk about, if I compare it with other companies, the high single digit volume growth of 7 to 8% is the highest. Even HUL is growing at a volume growth of 2 to 3% only. And so that is why I like this company overall. And if I talk about financials overall for FMCG, for any FMCG company, if we say, it is a long term play. Like any FMCG company would give you a substantially high returns if you remain invested for like above 15 years or at least 20 years. So here you can find out the 5-year CAGR, revenue CAGR of this company. It is 9%, 10-year is 6%. If you see 20-year CAGR, it is almost above 2x. So it is almost 18%. That is the case for profits, 17% 20-year CAGR. And if I see the 5-year or 10-year, it is only 8%. And even the ROE, ROCE front, the returns what the company has generated overall in these years, in if I see the 20-year scenario, it is almost 44 and 32%, which is almost double what they have gained in 5 years. So if you are investing in any FMCG company, you have to remain invested. You will be rewarded, and the returns would be staggering in terms of 18%, 17%. So this is the kind of long overall space is the overall FMCG company, that it gives you stable kind of revenue growth. If you are invested, so you will have to remain invested for a longer period. And if I talk about the management, Mr. Sudhir Sitapati, he is the MD and CEO. He had taken over the company in 2021, and the company has seen good amount of turnaround in the overall operational space, as well as launching of newer categories, penetrating in newer areas, penetrating in new geographies. So the company has basically turned around after Mr. Sudhir Sudapati had taken over, and the company has a rich history of almost 125 year. And if you see the governance also, the company is AAA rated and A1 plus rated as per ICRA. And if I do the competitor analysis, so GCPL recently acquired Raymond's consumer care business for almost 2,800 crore. So if you see their big brands like Goodnight or even Hit or any other Stella, which is into lock, they have acquired those brands and they have scaled up so big that they are almost 30 to 40,000 crore of market cap of this company. So if I talk about Goodnight, they had acquired that brand in 1994, and they had again sold that particular brand to some other company, and then they again acquired. So that brand, when they had acquired for 100 crores, now it is churning out them for it is contributing their overall revenues as high as 30,000 crore. So that's how they have scaled the brands after acquisition. So I believe the recent acquisition what they have done for their deodorants and sexual wellness products, so that is also going to be scaled up the same way how they have scaled their other categories. And they are currently a market leader in household insecticides and high air care category, and they are also increasing the premiumization of their personal care portfolio. They are introducing newer premium products for the consumers which are in demand, the newer consumers. And if I see the emerging trends which I talked about, the overall rural as well as traditional trade, modern trade has been growing the fastest. It is growing at almost 20% growth in the majorly because of the retail sector presence, which you will find your products in almost every other areas. And modern trade growth has been led by that. And generally rural was lagging in the past few quarters. That caused the kind of correction in the overall FMCG space. But right now we have started seeing recovery, so we are quite bullish in terms of the overall FMCG sector. And if I talk about the risk for the company, currency fluctuation remains to be a key risk because they are present almost 50% of their revenues are coming from international geographies. So any kind of deflation or high inflation, like say suppose Argentina had a high inflation of almost 200%. So that kind of can trigger a big fall in terms of their revenues or in that particular region. That remains to be a key risk, and increasing any raw material prices remains to be a bigger risk. And competition is always a risk for any FMCG company. And if I talk about the valuations, so overall FMCG sector has been derated over the past 2 years. So if I see the overall consumer sector PE, if I take the longer term PE, 15-year, 10-year, the PE looks kind of reasonable, 36 times, 41 times, and GCPL is currently trading at around 58 times. And if I see the current valuation of the overall FMCG sector, it is somewhere around 46, 47. So there is only a 5 to 10% premium, and generally FMCG companies trade at premium because they have the advantages of growing their categories in terms of volumes as well. So uh, so we believe that current P is kind of justified. The what turnaround the company has gone through and what lies ahead for the company in their major international as well as domestic categories in terms of creating their own brands. So what I believe is the current P is somewhere around in the region of fair and mean. So I believe it is a kind of good place to enter. And overall, just concluding thoughts on the company. So if I see the GCPL as a company, they are planning to doubling their almost village coverage and as well as distribution. So and the company has big plans in terms of penetrating in the rural areas. So if I talk about the penetration for one of their category, Goodnight liquid vaporizer, this particular category only has penetration of 25% in India. And if I talk about the other geographies, Indonesia and other African region, the penetration is as low as 1 to 2%. So I see a lot of headroom for growth in terms of growth in their category. So they have the brand, they have the possibility of increasing their distribution and reach. So here on, I believe that there are good times for the company. And so yeah, if you have any particular questions about the company or any questions on the overall FMCG sector, you can definitely ask. Thank you so much.
Thanks so much, Sandeep, for this detailed presentation. Again, due to paucity of time, we won't be able to take questions at the moment. However, whichever ones that have come in, we'll relay them
Sure.
offline. Thank you so
Thank you.
much for
Thank you so
all
much.
your insights.
Thank you. Thank you.
Awesome. Once again, a big thank you to all our analysts for their detailed analysis. I know there was a lot to learn and absorb here. However, please note that all of the stock presentations that were discussed here today in this session, they're not recommendations from Grow's end. These are not buy-sell recommendations of any kind, just a blueprint to what a good fundamental analysis looks like. Right, now moving on to the next segment, we're at AIKG, and how can we end the day without giving you, our audience, a chance to actually voice your questions. So for this, we've planned an exciting Q&A with the Groww team. For this, I'd like to invite the founders, Mr. Harsh Jain, CEO and co-founder of Groww, Neeraj Singh, who's our CTO, Lalit Keshri, the CEO, and also Sunil Bisa, who leads our customer success team. Big round of applause, please.
जो लोग इन्वेस्ट करते हैं ना, ग्रो जरूर करते हैं। सर आपका पिन मैं देता हूँ। औरों का आप पे भरोसा ग्रो होता है और आपका खुद पे इधर आने वाले दूसरों की नजरों में बड़े हो जाते हैं। अरे अपने पैरों पे खड़े हो जाते हैं। बढ़िया नाम है। हाँ, थैंक यू। थैंक यू। मार्केट को समझने वाले भीड़ में ना अलग ही दिखते हैं। ये कुछ हटके करने से डरते नहीं है। ये मार्केट पेशेंस सिखाता है, इन्हें इंडिपेंडेंट बनाता है, और तो और आपके लिए स्मार्ट रिस्पेक्ट कमाता है, क्योंकि जो ग्रो करते हैं वो लाइफ में ग्रो करते हैं, ग्रो करते हैं। डाउनलोड ग्रो, SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
To keep the AMA very, very, personal, very intimate, please come forward so that you can actually ask your questions right here. This is the golden chance. Requesting everyone seated at the back, folks who are even outside, right, to come forward. That way you'll be able to actually have a much deeper, much richer interaction. Awesome. Love it. Great. Over to you.
So how do you start? Let them ask questions. Thanks to the I all the way to the respect. Yeah.
Yeah. So before we start, I mean, I will take the questions. A very big thanks to everyone. Each one of you have spent the full day with us. I think it's really gratifying, and we are truly grateful. And we want to bring more content, more such events, more events, organize opportunities for us to talk to each other. So here is question answers. You can ask whatever you want to know.
Yeah, very big thanks from audience side as well for arranging a wonderful session. This is the first time I'm attending. It's a thought-provoking session. So my question is like now with the Grow app, actually, people are earning, people are getting new opportunities and everything. So and you are also getting an opportunity to track like who is making money and what is the data analytics. Huge opportunities there for Grow. And apart from Grow is making a channel and everything, right? Grow is going to be seen as a very big source for the data for many companies actually. With them, if you're going to collaborate, you will also make a lot of money and everything. So, but I want to know as a founders actually, what is your vision? Like, you want to take Grow as a only as a this kind of app for stock trading, or you want to take it to the next level, like something like for the investors actually. So one thing is like you need to protect their money. Like nowadays, fund injections are happening and everything. So whenever they are going for a wrong thing, do you have something like how to protect the investors? So something like F&O you will be saying, right? Out of 10 people, 9 people are making the loss. losses. Something like that for equity also. If the person is going and investing in some wrong stock or something like that, would you be having some kind of analytics to protect their money, some kind of warnings or something? Or I will be asking the open question like from the data analytics, what kind of product you are planning to bring it into the market in the Groww app?
Oh, no, very good question. I think I'll take this one. The first question was about your this data, right? There were two questions. See, one thing is very clear, like when we started, Groww is for customers, and we have no plans to use that data or anything to kind of do anything else. Like Groww will kind of remain for the customers. So you will probably never see ads, or you will not never see this data going to somebody else, or I mean, or be used by us or anything like that. It will never happen. Yeah. Second thing is on responsibility part. I think Groww has started a lot of things on responsibility side. I'll just name few of them, and then and we'll keep talking about them. In all our updates going forward, you will see something about responsibility. Number one thing is anti-nudges. How many of you know about nudge? How many of you have heard about behavioral psychology, or how many of you have heard about Richard Thaler here? Nobody? So anti-nudge is like if you are trying to place an order which is very risky or something, right? So Groww warns you about that. It's already happening, by the way, for a lot of the cases. How many of you have seen a nudge, anti-nudge? So a lot of you are already seeing, right? So that is, and there's a lot of work we are doing there to figure out, okay, what are risky trades. Number two, we introduce safe exit. How many of you know about safe exit, right? People who do FNO, they can kind of, it's a simple way of kind of limiting your losses. Third thing is we just launched is like pause FNO. FNO is risky. Not everybody should do trades. But sometimes people who trade, they also go through bad phases of, losses and so on. So you can go and pause it, controlling yourself basically. Right? So the philosophy of Groww is that we don't want to preach anybody. We don't want to kind of, tell you, advise you, and so on. But we want to enable all the tools so that you can take the calls. We fundamentally believe that customers are very smart, and it's just that they need the right tools to make the right decisions, right? So this is one. Then we are in future we would be launching a lot more things, and again, a lot of these features also come as feedback from customers. So please keep sending us your feedback, and we'll keep building them.
Hello. Hello. Just to add on top of that, purely from tech perspective, do you think how many people, four of us standing here, how many have access to data?
No one?
No. No, that's the, none of us will have access to data. We might have access to data which is collective. So collective intelligence could be used for the betterment of the product. Let's say if anybody who just started doing FNO and coming underprepared, I will know. So the anti-nudges which Lalit is talking about as those kind of products where we can build intelligence and suggest you that this is something not right, and these are the steps which you should do, which you should consider before taking such a huge risk. So we will enable you from intelligence perspective, and lot more on those responsibility side is coming up, and we have to work on that. Another reason we do all these kind of events is to spread that kind of awareness as well. So a lot of people, whenever we go to these events, we see customers. I personally feel very proud. We had lunches today. I can see, and Sunil was also telling me that a lot of people who couldn't find space were sitting down eating their food. That shows that people here who come here don't have any kind of entitlement, no arrogance. People are just like us. All Groww employees are like that only. No entitlement. Very, very customer focused. In Groww, we say that you people call us financial services. We say we are also into hospitality. So that's a lighter part of it. But yeah, a lot more is coming, and data is definitely very, very protected. In coming versions, we might work on the personalization, which is your data used for your benefit. It is very, very protected and will be used building those things, which enables you, empowers you to do better. It's mostly downside protection. You don't make mistakes. So avoid that, and we will help you doing that.
Hello.
So next question.
Yeah, I have one question. Uh, Hi.
Yeah.
So ग्रो के सभी फाउंडर्स एंड सदस्यों को मेरा प्रेमपूर्ण नमस्कार। मेरा प्रश्न ये है कि हम इन्वेस्ट करते हैं, ग्रो पर करते हैं, यूज़र इंटरफेस काफ़ी अच्छा है, और ट्रस्ट भी बिल्डअप हुआ है काफ़ी ज़्यादा, और हमें लगता है कि हम काफ़ी इन्वेस्ट करके ग्रो कर रहे हैं ऑलरेडी। और एक क्वेश्चन माइंड में आता है कि हम तो इन्वेस्ट करना सीख गए, हमें कंप्यूटर से परिचय कराया गया टाइम के साथ, बट हमारे पेरेंट्स उतना ज़्यादा आज भी नहीं जानते हैं। तो हम इन्वेस्ट करते हैं, हम मे बी नॉमिनी में उनका नाम डालते हैं, बट कई बार ऐसा लगता है कि हम पासवर्ड शेयर नहीं करते। हमें लगता है क्या वो ओपन कर पाएंगे, वो समझेंगे। दूसरा लगता है कि व्हाट इफ अ चाइल्ड डाइज, तो वो डिसीज्ड कस्टमर का जो नॉमिनी का जो हाउ मतलब वो कैसे अपना क्लेम करेगा, उसकी फैमिली कैसे क्लेम करेगी, उसको कैसे सिंप्लीफाई कर सकते हैं, ये एक बहुत बड़ा कंसर्न रहा है। एज ए इन्वेस्टर मेरे लिए भी बहुत बड़ा कंसर्न रहा है, शायद बहुतों के लिए रहा होगा। तो इसको कैसे सिंप्लीफाई कर सकते हैं, एक मेरा क्वेश्चन ये है। दूसरा है कि जब कोई मरता है तो आज आधार सबके पास है, ये एक सजेशन की तरह मैं शायद रख रहा हूँ, मुझे लगता है कि आप लोगों के सामने रखना एक बेहतर अपॉर्चुनिटी है। तो आधार सबके पास है, डेथ सर्टिफिकेट सबका बनता है। आधार जब लिंक हो जाएगा तो आधार के पास डिटेल होगा कौन कौन मरे हैं, आधार पैन से लिंक है, आप सबको पता चल जाएगा कि कौन कौन मरे हैं, कौन उसके नॉमिनी थे। उस परिवार के पास जाकर, उसके पेरेंट्स के पास जाकर आप पूछ सकते हो, या कोई आपकी टीम जा सकती है कि सर आपके बेटे ने इतना इन्वेस्ट किया था या आपकी बेटी ने इतना इन्वेस्ट किया था, आज हम उनके साथ खड़े हैं, आज हम आपके साथ खड़े हैं, जैसे हम कल खड़े थे उनकी ग्रोथ में, आज हम आपके साथ खड़े हैं आपकी ज़रूरत में। तो कैसे इसको सिंप्लीफाई करेंगे आप, एक बहुत बड़ा चैलेंज है, बहुत बड़ी ज़रूरत है। और मैं देखता हूँ कि आप जैसे भावी और काफ़ी विजनरी एंटरप्रेन्योर्स ही इसको सॉल्व कर सकते हैं। भारत के लोग आपकी तरफ एक बेहतर और बहुत ही ज़्यादा उत्सुक, और ऐसा लगता है कि आप सॉल्व करेंगे, हमें उसका सॉल्यूशन मिलेगा। क्योंकि हम इन्वेस्ट तो करते हैं तो हमें ये भी लगता है कि हम इन्वेस्ट किसके लिए करते हैं, खुद के लिए नहीं करते हैं, क्योंकि हमें पता हम चले जाएंगे, कोई पीछे खड़ा है जिसके लिए हम इन्वेस्ट कर रहे हैं, पैसे उनके पास पहुंचने चाहिए। और हम इंश्योरेंस करते हैं, हमें लगता है वो मरने के बाद है, बट वी नेवर सी इंश्योरेंस एज इन्वेस्टमेंट, वी सी इट एज एन एक्सपेंस। हम इन्वेस्टमेंट करते हैं क्योंकि हमें लगता है रिटर्न मिलेगा, हम जीते जी जाएंगे जिएंगे, बट हाउ कैन वी सिंप्लीफाई? I just wanted to get an answer. If you could do something for it, thank you so much.
I'll answer in Hindi only. पहली बात तो आप कहीं जा नहीं रहे, so don't worry, and आपने सबको डरा दिया. But question is valid, happened with my family friends also, and that's life, and that happens. Lot of case, I think Sunil takes care of customer success. He helped me with that case, and apart from that, I think lot of these situations comes. But you understand this entire ecosystem where we provide a platform, but there are underlying companies, there are exchanges, there are other participants, there are AMCs, a lot of other. So it's like end to end. This is like not just one person in between this entire chain, and of course has to be simplified. And today, how we do it, I think we can talk about that. Sunil can talk about that more.
पहले तो हम ईश्वर से कामना करते हैं कि कभी आपके साथ में ऐसी सिचुएशन ना आए, बट आई अंडरस्टैंड कि परिजनों को पैसा पहुंचना चाहिए एंड इट इज़ वेरी इंपॉर्टेंट। सो द मोस्ट इम्पॉर्टेंट थिंग इज कि अगर आपने नॉमिनी डिक्लेयर किया हुआ है ऐप में, तो 90% ऑफ योर प्रॉब्लम इज सॉल्व्ड। दैट्स फर्स्ट थिंग। अगर नॉमिनी है तो जितनी भी अभी रिसेंट रेगुलेशंस आ रही हैं, रेगुलेटर भी बहुत इस चीज को दे आल्सो एम्पथाइज अ लॉट कि ये सिचुएशन कभी भी किसी को आए तो इट शुड बी अ वेरी इजी प्रोसेस, एंड दैट्स द रीजन दे आर मेकिंग नॉमिनी का एडिशन वेरी इंपॉर्टेंट इन ऑल योर इन्वेस्टमेंट्स। तो प्लीज 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 नॉमिनी जरूर एंटर कर लीजिए, और अगर उसके लिए कोई भी सवाल है तो वी वुड टेक दैट एंड वी कैन हेल्प यू आउट। नाउ इन एन अनलाइकली इवेंट और गॉड फॉरबिड्स कि अगर ऐसा कुछ हो गया है, तो you can reach out to us. What we have done is we have simplified the process to quite a deal. It is very painful when somebody dies and then you have to transfer that money to
to parents, to the near and dear ones, and it's a very, very painful process in certain ways. But we have tried to simplify it by creating examples, by creating documents. In a lot of cases, our team has gone ahead also and made help people making affidavits so that they can come and get the money reimbursed. And if anything like that happens, we can do that. But the most important thing in all this is to have a nominee. If you have a nominee, process is very simple. If nominee is not there, process gets complicated, but don't worry, we are there for you. We would help you in terms of all the documentation. We have created a lot of content around this, which can help you. And we have created content on this particular piece in vernacular languages as well. And just to add one last point to it, that a lot of states, lot of locations have a specific regulation around it. So we have created set of documents and set of folders according to the state, according to that particular city or of jurisdiction, and we can help you with all those possibilities. So that's how we can do it.
I had a question, sir. Regarding the future, I'm asking now.
Can we take it afterwards? After we can. Please go ahead.
I'm asking regarding the future. As we heard before, for international market, any transaction happening to India like a cryptocurrency, so government is charging some tax like that. Okay, in future, maybe our banks going to be privatized. So there is a taxation between this investment app and also the government. Then how can you charge? I mean, in future, if you charge anything extra taxage between the bank and Grow, otherwise, we just try to launch any Grow banking. So it will directly connect with the investment app, right? So maybe in future, if it is privatized, right? So taxation will be negligible, I think.
So if I understood the question correctly, you're saying if in future there are some new taxes introduced by government between the banks or the money movement between banks, can we provide our own bank or some services where the taxes will not go to the customers and users
Yes.
like each one, right?
Yes, sir. Correct.
Yeah. So see if the like practical, it's a good situation that if we are able to save any money that is being paid by users, then we will try hard to save that. So that is how we build, right? We want to reduce the friction, and one of the friction is the costs. And these costs that keeps on coming by any other regulation or rules or laws that obviously hurt us in different ways. But two parts to your question. One is, see, if government puts a tax, then it will be applicable on any bank, whether we launch our own bank in future or there's another bank that is providing a service, because that's a regulation. So just having the same regulation license within our ecosystem will not help the tax part of it. Yes, there can be some frictional costs, there can be some margins that can be solved. And second is, see, I mean, taxes are good, right? Ultimately, we have to pay taxes to get all the infrastructure that we enjoy. So let's not shy away from paying taxes, and there will not be any corners that will be cut, but there will be optimizations that we will ensure that we are able to bring to everyone if there are possibilities.
If those taxes are burden for people, then
all taxes are burden. All taxes are burden on people.
yeah, means privatized means completely under the private control, right?
No, so tax, any kind of tax is not in control or a choice of uh, a player like us. Like we as a platform, Grow doesn't choose which taxes to charge and which taxes not to charge, because these are the rules, regulations defined by government. And they are not about us as a platform. That is more about the service that end customer enjoys, consumes from a regulated entity. So it is.
It's like private banks, we need to hold some amount, right, sir? So minimum balance charges will be there. So if you start a bank means, so we no need
Yes.
to maintain some.
So very
those
good
balances,
suggestion.
right?
So between the two kind of charges, one is the taxes which government defines and regulators or the entities, market intermediaries, they charge, and we have to uh, charge them and pass through. But there can be optimizations on these things which you are suggesting. So yes, we will continue thinking on providing services where there is an efficiency, and there can be some optimizations or some benefits that can come to you, because we are fortunate to have a lot of users who are using Groww, and in that way, if we are able to save some costs, we'll pass it on. Yeah,
Yes,
that's a
sir,
good
because
suggestion. Thanks.
in all over the India, if you compare, means a middle class are more in number compared to. That's why, sir.
Yeah, absolutely. We'll definitely look at it.
Thank
Thank
you.
you so
So,
much.
Thank you, sir.
sir, hi. So first of all, thank you so much for building such a user-friendly app. And because of Groww, I have started my investment journey because I was not, I mean, I did not like all other apps or your competitors. So my question is like from the day one to till now, what is the biggest challenge Groww has faced and how did you overcome?
Yeah, first of all, I love your t-shirt, man. Uh, a lot of challenge, I think. So I'll just quickly so for us, always been the challenge to understand what customers want, because it is not a B2B, or it's not an opportunity that we can sit across every customer and understand. So it's always a challenge to understand how millions of people want and compress that into a platform on an app or a website and offer it to the users. So that has been the challenge on day one, to understand small group. Now it's a larger group. Of course, we have a lot of people to understand and kind of convert that into product features, content, everything that we do. But that the one for like I can count that has been always constant challenge from day one to day two, and probably in 100 years also that will be the challenge.
So we have, so we, so
Yeah, so
yeah.
thanks for the lightning session today. So one of my questions is when can we invest in Grow on Grow? I mean to say, I do have any plans of going public. Also, I have one more question. So,
You don't want to answer, okay, fine.
no, follow. Yeah. So in the mutual fund, we have this portfolio analysis section in the app, but we don't really have it for the stock section. So is there any particular reason for it, or do you have any plans of getting it in the
It's
future?
coming. It's
Yeah.
coming. It's in the pipeline.
Okay, thank
See,
you.
a lot of things. So, see, Groww
Is that the
started.
answer for first or second question?
No, no, no. The second one. See, the thing is that see, Groww started like 8 years back, right? And you every quarter you would see that we keep shipping something, but there is still like a big backlog, like the stock analysis, for example. I think hopefully it would come in next quarter or something.
Thank you.
So,
Yeah.
but then there are a lot of other things also that are in the pipeline. Yeah. And that's the fun basically, right? Because there are just so many things to build, we can continue building.
Yeah. And the first one?
So
The
we have,
first question.
so
See, first question, like, I think there is still some time, but it will happen. One day it will happen, but still there is some time. Sorry, I don't have a date.
So we have shares in our older demat account, which is using NSDL, okay, and we want to shift to Grow, which is in CDSL. So can Grow have that that dashboard where we can easily transfer our shares from our full-fledged brokerage to discount brokerage? So can we have that in future? Can we expect that? And so second question, like from Indian Clearing Corporation, which settles down all the settlement when we invest in mutual fund. Okay, so from Indian Clearing Corporation, we are receiving emails from which is 2 years older. Okay, like your units was allocated, and your units was allocated, and we have transferred that fund to your bank account also. Okay, so in that case, what we should do, sir?
I think looks very specific.
Yeah.
Might have happened. In general, it doesn't happen with everyone. But if it is something where you can share with Sunil and our team. We look into it. Generally, if the issue is directly with us, we immediately resolve. But it is with somebody underlying we work with. For example, transferring your something from NSDL to CDSL or vice versa, or working with ICCL. That is where it takes time because we go back, we connect with them, we understand, we figure out the issue. Those might be one of the cases also. Sometimes few issues are very common where everybody is impacted, very easy to highlight, understand, and solve. A specific case takes time. Do share the details with us. I think Sunil will take care of it. Yeah, thank you.
Thanks.
Yeah, regarding your
Yeah, first one.
yeah,
First one
regarding
we
your
have.
regarding your first question, currently NSDL to CDSL online is not possible, but we can do it offline. If you require more details, I'll be happy to connect with you and kind of share all the details with you, and we can get it done. We will try to make it as seamless as possible for you. That's what we commit to you. Currently, we can build this feature, but it is also to do with the NSDL and CDSL. So that's the reason it is offline, but we can help you in terms of converting and getting your shares into CDSL accounts as well.
There is a blog. I was just
There's also a blog, correct?
how to transfer shares from one Demat account to another.
Yeah.
On group.
मेरा थोड़ा शेयर है जहाँ पे शेर खान में है और आस्था में है, तो इस तरीके से जो शेयर्स है उसको हम यहाँ पे ट्रांसफर कर सकते हैं क्या, मतलब सेम उसका ही क्वेश्चन।
यस सर, हाँ कर सकते हैं। क्या आपके पास, सॉरी एक बार आप रिपीट करेंगे?
मेरा थोड़ा शेयर्स है, शेर खान में है, आस्था में है और दूसरा सभी ब्रोकर्स में है, तो उसको हम क्या यहाँ पे ग्रो के
आप कर
अंदर
सकते हो, आप कर सकते हो।
उसके लिए क्या प्रोसीड्यूर है?
उसके लिए पूरा डिटेल प्रोसीजर है, हमारे पास ब्लॉग भी है। आई कैन कम बैक टू यू एंड एक्सप्लेन यू इन डिटेल। आप सपोर्ट पे भी अगर हमारे ईमेल लिखेंगे तो भी हम कर सकते हैं। अभी अगर आप गूगल पे भी टाइप करेंगे ना, हाउ टू ट्रांसफर शेयर्स इन ग्रो, आपको पूरा ब्लॉग मिल जाएगा। यू कैन फॉलो ऑल द स्टेप्स देयर एज
ओके
वेल।
ओके। और एक चीज है, ग्रो के अंदर वो कस्टमर केयर का जो नंबर है ना, वो यहाँ पे अवेलेबल नहीं है। वो जस्ट खाली मतलब ऑप्शन मिलता है, कस्टमर केयर का ऑप्शन, मतलब कॉल करने का ऑप्शन नहीं है।
वो नंबर अभी आपको विद इन नेक्स्ट 30 डेज आपको टॉप पे दिखेगा, ग्रो का कस्टमर केयर कनेक्ट करने के लिए।
सर मेरा और एक प्रॉब्लम है, मेरा वाइफ का अकाउंट में एमटीएफ का ऑप्शन है, मेरा एप्लीकेशन के अंदर एमटीएफ का ऑप्शन नहीं है, वो क्या है?
तो एक्चुअली सॉरी,
मैं एक्चुअली इसमें समझाता हूँ। सो क्या करते हैं हम लोग, प्रोसेस है। आई थिंक it makes sense to tell you how do we launch features. So let's say we think about something MTF. अभी जस्ट इमेजिन हमने एक फीचर बनाया है और इमीडिएटली वी हैव 10 मिलियन प्लस कस्टमर्स, 12 मिलियन कस्टमर्स, मतलब एक करोड़ 20 लाख कस्टमर्स। जस्ट इमेजिन उसमें से मान लीजिए कोई छोटी सी गलती निकल गई तो कितना बड़ा इम्पैक्ट होगा वो, राइट? सो हम लोग क्या करते हैं कि पहले हम इंटरनल टेस्ट करते हैं। हम लोग हमारे 10 कमांडमेंट्स है, उसमें से एक कमांडमेंट है बी द पावर यूजर ऑफ योर ओन प्रोडक्ट। तो पहले सारे एम्प्लॉइज ग्रो के जितने वो खूब करते हैं, सब उसको यूज, लाइक वो कई महीने तक उसको यूज, पहले तो क्यूए टीम करती है। क्यूए टीम मतलब जो इंटरनल क्वालिटी टीम होती है वो बहुत कई महीनों तक करती है। फिर ग्रो के इंटरनल एम्प्लॉइज करते हैं। फिर हमारे जो बीटा टेस्टर्स है, लाइक अराउंड 10,000 लोग जो कस्टमर्स है जिन्होंने खुद साइन किया है कि अच्छा वी आर ओके टू डू टेस्ट द न्यू फीचर्स, तो वो करते हैं। फिर हम 1% को करते हैं, फिर 5% को करते हैं, 10% को करते हैं। तो इसलिए हमारी फीचर पाइपलाइन, जैसे MTF 6 महीने पहले तैयार था ग्रो के अंदर, हम लोग 6 महीने से यूज कर रहे हैं उसको। ग्रो स्टॉक्स भी आप देख लीजिए, ग्रो स्टॉक्स हमने लॉन्च किया था जून 2020 में, पर मैंने जो पहला ट्रेड किया था वो सितंबर 2019 में किया था। इट टुक लाइक 3 + 6 like 9 months to launch it to like end customer. So your wife is a part of that.
मेरा अकाउंट पहले से बना हुआ है, मेरा कोई एमटीएफ नहीं है, मेरा वही बाद में मिला है मेरे से लेके
मे बी
उसको मिल
ग्रो आपको आपकी वाइफ ज्यादा पसंद है। और
ओके ओके, थैंक यू सो मच।
सॉरी मजाक कर रहा था, बट इट्स लाइक आ जाएगा, लाइक मे बी few months and you will have the feature.
Hello all. I was wondering if there could be a feature addition of stock ideas in Groww. I mean, the other competitors have that, and it really helps the customer if we're blank. Closer? Yeah. Yeah, I was wondering if there could be a section in Grow app for stock ideas. I mean, some of the other brokers have stock ideas like subjected to market risk, of course, with stop loss and potential target value. I mean, if I am I can't do my own analysis and I'm blank, completely blank, it gives puts the investor on the right track, you know.
See, the biggest problem with this is that it's very tough to stay unbiased if you start giving advice, right? And then Grow has a very long-term vision of being like the most unbiased platform for our customers. And we are not yet ready to kind of give any advice to the customers, right? Because everybody has different need. Like my risk profile would be very different from Neeraj's risk profile, or your risk profile, and so on. So we try to stay away from it, but we try to provide you all the research. So we might set up a research division, for example, which can tell you, like, how do you analyze the stock, and we are already educating, like we have channels and everything. But it's very tough for us to tell कि ये stock है, इसका buy अभी current value ये है, इसका target ये है, और इसका whatever that, right? Tips,
Right.
basically, right?
Yeah, stock tips.
I seriously wonder, how do people come up with price targets? I've been investing for like 20 years and I have not figured that out. The primary purpose of those targets is to make you trade.
Right. I mean, you do have a mutual fund team and it does deep analysis. So maybe they could give a few tips to the new investors.
See, so part of it is research, part of it is advice, and part of it is content that will help you do this on your own. So we have so far invested and we've been building a lot of content that helps you understand. Like, for example, last 4 sessions that we had was actually an attempt to tell how people really go deeper. So if you really are passionate about investing, which obviously it looks like everyone here is, then that is the approach we should take over time. On the research side, yes, we do have research in mutual fund AMC, but one that's a very regulated and its own business. And second, they also take risk, but they have a collective risk because they are investing in multiple companies. They're diversifying. Now, picking just one stock from there and putting it out as a advice will not be justice and it will not be correct. So we will definitely do more work on the research part. We'll talk about different frameworks, probably talk about certain companies also, but not in a way where we will say, this is a buy it at 350 and sell it at 370. We'll never do that because that's very difficult to manage, right?
Yeah. Hi. I think.
Sorry, can you just have a question for me?
Thanks. Yeah, my name is Vishwa. Actually, I started my journey from February. I don't know, can I ask this question? Because I wanted to invest in US stocks. So I see that it was not there, but my bad luck is one of my friend forced me to use one of the app, which I don't want to say, but I'm not comfortable with that even after investing. So is there any chance in future that we can also use Groww app for US stocks, international market?
So I don't know. Yeah.
Indexes are there.
Do invest. Yeah, you can see them. So we did have uh, ways to invest in the US stocks on the website before. But there's certain things that are happening from a regulations point of view. Like, for example, moving money from your bank account to a US broker or a US account is very tedious. And we were working for the last 2 years with the regulator, with some payment companies, with international brokers to simplify that process. So that process is one, complicated, second, offline, third, very expensive. So for retail investors like you and I, it's very difficult to do that very often. So it was becoming a challenge. That was part one. Part two was that money, the whole concept of money moving from India to outside has had now TCS on it. So 20% of TCS government put on just sending money outside. And this was also covered under that. So this was becoming even more difficult for people to do that. So all those things made us focus, like, can we build more better focus on the Indian equity, and Indian equity market is obviously, more popular amongst the larger part. So far we have paused that and we don't offer that. But in future, if any of these things get solved, which we are working on anyway, we will get to it in the app, in the web, everywhere. We'll bring it back.
Okay. And the last question is on the SIP. So as of now, we have SIPs monthly.
Oh, sorry. By the way, we have the indexes already on the app, which you can track to understand the trend and what's happening. Yeah.
Bunch of indexes. So bunch of indices are already available that you can buy as well. ETFs are there, mutual funds are there that invest in US equities, even China, even like other countries and so on. So these are Indian mutual funds who are investing outside.
Thank you. Yeah, the last question.
Welcome. Yeah.
So the question was on the SIP. So as of now, we have monthly SIPs, which is actually getting deducted. So do we have any daily SIPs, like a small amount, then it gets into, at the end it ends for some amount, and later on it gets invested in any other mutual funds which we select. Is there any option on daily SIPs? I'm not talking about monthly.
How many of you guys would like to have daily SIP?
Daily.
Nice, very good. So it's very good suggestion, and there are teams who are working on building and thinking about what is the right way to build it. But don't wait for such events to have the suggestions. I think bunch of good suggestions we heard, and luckily few of them we are working on, but few of them we will start working. But keep those ideas coming through emails or through any any media that you want.
Thank you so much.
Thank you so much, sir.
Yeah.
We don't have currency right now on the platform. Still a little far in the process. You can show.
Okay, sorry. So I work in an investment bank, and we are not allowed to have brokerage accounts with everyone, and they have specific set of like Zerodha, ICICI, HDFC Securities and stuff, and there is nothing for Grow. So like we've been asked to transfer all our holdings from Grow to the registered ones. So is there any way that Grow can work out and get it in the registered list of brokerage so that I don't have to do the whole thing? And they also have this thing of dual reporting where every time I make a transaction, they are notified. The investment bank is notified of what I'm doing. So that way, I think that option is not also not available yet, where they have this thing of dual reporting where the company is also tracking what I'm doing, because we need to seek permission to place any buy or sell or do anything. I have to seek permission from them.
Yeah.
So there it becomes very difficult because the registered ones, they don't really have to go through a lot of issues. But if Grow can work on getting that sorted.
So glad, and it's painful when people go out of the platform because of this. And keeping this in mind, our team is already working. Very soon, you would see this feature. We are collaborating with a lot of these companies to ensure that we can have a seamless, way wherein you can invest through us. You Grow can be a registered broker with your companies as well, and then the data part, the reporting part can also be taken care of. So we are working very, 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 on very advanced stages, and we would be out soon. And we will
Don't worry, you won't have to change jobs for this.
Yeah.
I had a second suggestion. Just it's a general tendency that I see that female and finance, there are very few females that I see in the financial industry, and also if you talk about the financial literacy aspect of it. So I just wanted to give this out as a suggestion. If we could have something specifically for the females financial literacy, or any program that you can run, like you have this, of course, where we are educating people about the financial literacy, but just to motivate and encourage more females to take over and like get into the industry, that would be great. I'm not yet sure how we could do that. If I have any suggestions, I'll definitely send an email, but if we could look at that aspect too.
Yeah, sure. Would love to have those ideas, and I think we have a team who keeps thinking and working. You should collaborate. You should give suggestions and maybe just work with them and solve this. Thank you so much.
Good evening. Yeah. Yeah. Hi, everyone. So, I'm someone who has a lot of allocation towards equity, and I want to balance my portfolio. So, I'm also looking at gold. So, Grow did have Digi Gold for a very brief period, and it was taken out briefly. So, why did that happen, and do we have any plans to get it back?
Sorry, I was thinking we should take few more questions, but can you just repeat your question? I missed it.
Yeah, Grow did have digital gold for some time, and it was taken off for some reason. So, why did that happen, and do we have any plans to get it back?
Multiple reason, but as a user, if I say there was a time when I don't know if I can share this, but uh, few of the schemes of Franklin low duration was closed, and I was one of the investor there, so I was impacted. Uh, Many time, I feel, let's say if you buy digital gold from us, and that gold is gone, Do you see that as a risk? Because you just see a number on the app, but where is the gold? Who is holding that gold? It's not with Groww, right? So there is a risk. We sense that risk, and we don't know how to handle that, how to manage. Uh, Also, there are a lot of other assets which are available equivalent to gold. If it comes to Indian household, a lot of people want to see physical gold. Like my own family, my own parents, they don't believe in digital. They want to go to a jeweler, want to see real gold. So there were few takers, but not much of a demand which we saw. People were during the same time when Diwali comes, people were still going to Flipkart and other apps where they sell printed digital gold. They were perhaps doing more business than the digital gold at that time. Uh, few of our customers I know personally, they wanted to convert digital gold into physical when they go to jeweler and buy the jewelry. And I received a call. Uh, I helped that person also during that time, but it was very tedious. You imagine you are standing with the jeweler, you selected the jewelry, time came for the payment. पेमेंट है नहीं क्योंकि वो तो मैं ग्रो के डिजिटल गोल्ड से पे करने वाला हूँ, वहां पे मेरा 10 तोला पड़ा हुआ है, उससे पे कर दो. अब वो फोन कर रहा है मेरे को. So a lot of these experiences we realized personally we were not ready to give those experiences end to end. And as a user, I think I also did not enjoy much. So it is still there. Whoever has the holding, it is visible, but we stopped giving new one.
It's also not a good product, by the way. You know, right? Gold is digital gold has GST. So you lose in just buying, selling, you lose a lot of percentage. There are other ways to buy gold. SGB. You know about how many of you know about SGB, right? You get yield, it's government bond. Second is ETF. There are gold ETFs available. How many of you know about gold ETFs? There are Groww mutual funds. How many of you know? There are EGRs also traded, which are like electronic gold. These are all regulated products. What does it mean that are regulated products? That there is a regulator taking care of there are no bad actors in the system, right? Be it Groww or be it anybody else. Digital gold is a consumer product. It's not an investing product, right? So the first criteria is what Neeraj told, if we as a user kind of don't feel like doing it, then we don't want to offer it to our customers. So that's how we kind of just, and we also ask customers like, they were, the the numbers also tell us, if our customers are very smart. Like the number of customers who raise for SGB, like you can tell Groww customer is very, very aware, very smart. And if we see that customers are not picking, that gives us a signal, this is not a good product.
Good evening. One thing that I was about to ask, one which
Last
he
thing will
asked.
come to you. Sorry, we'll after.
So one was about the US stocks that already you have answered, but recently while answering some question, you said that Groww has a kind of warning system to new investors who are jumping into a risky thing or like that. Okay, so for the new investors or the beginners, so who has taken care of all the systematic long-term investments like the SIPs, gold, everything is balanced. But apart from that, if he or she is having some lump sum or that he is not using it in the coming 2-3 years, but he wants like ये बहुत अंधा ग्रो करे, तो उसके लिए मीन्स आपके एक्सपीरियंस से क्या सजेशन होगा?
वेकेशन पे चले जाओ.
हाँ, वो जाने के लिए भी तो ग्रो करना चाहिए.
आपके पास जब भी ऐसा मन करे ना कि अच्छा अब अंधा कुछ करना है, just take a break, go on vacation, spend time with your family. Serious advice.
No, in general also, apart from coming to FNO or trading or maybe thematic.
No, my advice stays same.
Hello, sir. Yeah, I have two questions. The first question is, how do you see yourself with the other competitors, and what do you see? I mean, Groww is into investing, mutual funds, and everything. So, what do you want Groww to know? I mean, to be known for? This particular thing is good. I mean, this particular thing is the best in the Groww. And the second question is, will there be an app for Pond and Forex? I mean, separately, or will it be integrated into this Groww or anything like that? Yeah, that's it.
So I'll answer the second part first. Ultimately, Grow's objective is, so you are customer and there is Grow, and we want to fulfill all the needs that you have on Grow. So that includes everything, which bonds will come soon, everything basically, right? And whatever we do, we want to do it in the best way. So we don't look at competitor. Your first question also, like, we don't consider or think about them. We think about customer, what they want, and our goal is to build the best for our customers. That's how we want to do it. Yeah.
Sir,
Sorry.
can I
Return as in each fund, or so every scheme?
Grow mutual fund, how much return annually?
That depends. Like there are different funds, and that is all available on Grow app. So if you look at the Grow app, it will show the returns of each product, each scheme, including the Grow mutual funds.
So an example.
Hello.
I'll give an example. We have a fund called Grow Total Market Index. How many of you heard about Grow Total Market Index? It's like the fund that invests in like all 750 top 750 stocks. Now that tracks the index. So your returns will be as good as your 750 total market index. That's like a passive fund, right? Then there will be other funds who are actively managed funds. So think of Grow Mutual Fund like basket of multiple schemes, and every scheme will have its own strategy. And then you will have to see whether, okay, does this make sense for me or not, right?
hello? One second, sir.
Can we? So he's waiting for, but he's not getting the mic actually.
After
So
that, sorry.
yeah,
sorry,
but
thanks.
that's last question then.
Yeah. Thank you.
Hi, sir. My name is Trishula. I am Grow customer since 2021.
ये तुम्हें लिख के दिया क्या किसी ने?
Sir, एक feature add करना है sir. Verified P&L sharing. It's not there in Grow. In other brokers they have.
What does that mean?
We can share our P&L to others.
Oh yeah. Grow, it's verified, right? If you're doing it on Grow, then it's fine.
We cannot share, sir. Verified. In Zerodha we can share.
You're saying shareable, not verified. तो है जो भी वहाँ दिख रहा है वो verified है. You can download and forward the.
No, sir.
No.
If you share the link, it will open in Grow website only.
It's like
Acha.
extending that.
Download.
It's like an invite, and that person can come and see.
In Zerodha, sir, we can file tax.
You want to share it with your friends. So very few people come. Like this is a unique ask, and I didn't know until now that it's. We'll think about it.
So by the way, verified. So if I've understood correctly, verified, it is all verified what you're seeing there. But you want to have it shareable.
Okay.
Right? You want it for others to see what P&L you had.
And what do you think? One way is that you take a screenshot share. Nobody's stopping you.
Nobody is believing, sir.
So he want to make sure कि उसके login में दिखे.
Got it.
वो चाहिए.
Sir,
This
sir,
is
I think
good.
your question.
Thank you.
रहने देते हैं. Sir, my question is little important. So
we can do it offline. Maybe this guy has one question, right?
So Sunil sir has already answered it. Sir, मैं माफी चाहूंगा. मुझे लगता है कि इसका आंसर important है. So मैं
So open offline. I think after the event we can take the offline questions.
Sir,
Because first एक सबको opportunity मिल जाए.
Yeah, it's unfair. Like a lot of people there, and I still energy is high.
Same question जो पूछा था.
चलिए बोलो.
Same.
पूछो.
Sunil sir, you have already answered. Sorry, थोड़ा खींच रहा हूँ. Sir, problem statement ये नहीं है कि आप help करोगे. मैंने जो नॉमिनी क्लेम्स के बारे में बात किया था, मुझे पूरा विश्वास है कि आप हेल्प करोगे, इसलिए मैं इन्वेस्टर हूँ, बाकी भी इन्वेस्टर्स है, पूरा इंडिया इन्वेस्ट करता है, ग्रो कर रहा है. क्वेश्चन ये है कि सर आपको पता कैसे चलेगा कि दैट पर्सन हैज बीन डिसीज्ड. ये एक प्रॉब्लम स्टेटमेंट आपके लिए कितना बड़ा है, आप इसको एज प्रॉब्लम स्टेटमेंट देखते हो, कितना बड़ा प्रॉब्लम स्टेटमेंट देखते हो, इसको कैसे सॉल्व करोगे, क्योंकि ये इंपॉर्टेंट है मेरे लिए. क्योंकि आपको कैसे पता चलेगा कि मैं नहीं हूं या इन्वेस्टर अब नहीं है, उसके परिवार को पैसे जाने चाहिए. आपको पता है कि किसको जाने चाहिए, लेकिन अभी जाने चाहिए, ही इज नॉट देयर. वो आपको कैसे पता चलेगा? इज इट योर प्रॉब्लम स्टेटमेंट, एंड हाउ बिग इज द प्रॉब्लम स्टेटमेंट इट स्टैंड्स फॉर यू? As an investor, I'm asking, how does the Grow team sees this as a problem statement?
See, I think I get your point, and you suggested earlier also when you were asking this question ke Aadhaar se connect karke there would be debt certificate, you can pull that. So a lot of this, if you see, is dependent on the underlying infrastructure. If today there is an API or there is an access to this information, which as any registered entity with the regulator can access, I'll give it to you tomorrow. I can be that fast. But today this underlying infrastructure, I don't know if it is that ready. आज पता करना भी है, किसी को भी पता कैसे चलता है, वो एफिडेविट बनवा के ला रहा है कहीं से, तब जाके लोग यकीन करते हैं. अनलेस यू शो दैट पेपर, इवन अंडरलाइंग लोग एएमसी, अगर आपके 5 एएमसी में पैसे पड़े हुए हैं, नन ऑफ देम विल बिलीव, राइट? सो इवन इफ वी से, दे विल आल्सो वेरीफाई. So today, even if we do KYC, they also do KYC, right? So everybody have to ensure, because they all are equally liable to the asset of that customer. And unless they are very, very sure, they cannot hand it over to any, just like anyone else. Today, a lot of frauds can happen. Impersonification happens. Anyone can represent, like you, Aadhaar clone karna, fake documents banana, like people are, all type of people are there. So they have to make sure that it is going into right hands. But to answer your question कि पता कैसे चलेगा, वो तब तक नहीं हो सकता जब तक underlying infra ready नहीं है. Today you can do digital signature using Aadhaar. थोड़े दिन तक possible नहीं था, वो बन गया, हम use कर रहे हैं, right? Account opening में. Same way, if this comes as an infrastructure, I think not just Groww, everyone else will provide this.
Sir. Yeah, we are already, I think we are.
Oh, we do a lot.
Because see, so there are not too many cases, and of course, but every such situation is very painful for us to even figure out what the family or the person will be undergoing. And we make all the efforts, even giving feedback to the regulators, to the MIIs, which are market intermediaries, to streamline the process, to kind of identify those signals where this will happen. And to your question, in a very short way, we will continue doing it because it's very important for us. But thanks for asking.
Hi, sir. My name is Vivek. I am investor from the past November 2022. I am happy to come today here. And my question is, before 2000, there was a paper format of shares. Now it is enabled in online. How we can convert it paper to online format? And another question, sir. As small case is providing portfolio investment of a different stocks in a single investment, is Groww entering into future in that sector?
So you take the first.
So first question, it is possible. We can do we can dematerialize the shares, and then it can be, वो paper से आपके demat form में convert हो सकते हैं. If you require help on that, after this, I'll help you out, and we can give you entire thing. Regarding the second question, you want to take?
What is that?
So there are baskets of, you're saying group of, right? There's one, obviously there are mutual funds, right? The mutual funds, if you want narrow focus funds and then large cap, small cap, there are a lot of mutual funds which actually are doing bunch, but there will be a lot of ETFs also that, no, I'm just saying like so if I understood your question correctly, a group of stocks you want to buy together, but you want a already created basket. So one regulated product is mutual fund, which is a basket of stocks, which is investing in all those stocks anyway. And then there are ETFs. So we are also working on a lot of ETFs that can help solve a smaller niche baskets of stocks that you can invest in. Otherwise, I think there are a lot of stocks that you can just buy as a watch list, and then you can invest in those also.
Sir, good evening. Sir, why does the stock price falls despite the good quarter result? Like, sir, like recently,
एक की वजह से
sir, recently we can see the Tata Motor result.
मेरे एक लाइफ टाइम में तो नहीं समझ आएगा, इसको बहुत टाइम लगेगा.
Because recently we can see the Tata Motor result, the net profits are rise, but the stock price become down.
The answer to that cannot be explained.
The next day of the result, almost 100 to 150 rupees down, sir.
I'll tell you one thing. See, the answer to this cannot be kind of explained, but one thing I will tell you, things work on expectation. I'll see, he will get first rank in the class tomorrow, right? But I think, I expect that he will get first rank in the class, and he comes first rank. Does it change value, his value? But he is like a 10th ranker. And I say he'll get 10th rank, but he gets first rank. Then his expectation value will change, right? So stock market works on future expectation. That is number one. Number two, stock market has, who are the participants in stock markets? Here. And is everybody rational? You can't like, so you are trying to model a system where the system that is working on future expectation, second, which has got lot of participants, third, and bunch of them are irrational. How can you predict? That's why one advice that I always give you, if somebody is trying to predict the stock market or price or giving target, you know what is the best thing to do? Run away. Fast.
Go on a vacation.
Run.
And last question, sir. What is the best way to start studying the stock market, sir? Because here 20 to 30% are
studying
beginners.
Sorry, what? Studying stock market.
Yes, sir.
Use Groww.
Yes,
Yeah,
sir. Thank you, sir. Groww
yeah,
is
thank
the
you so
best
much.
platform to invest in, sir.
Thank you
Thanks.
so much.
Some of the team members are here. They can start answering questions, but thank you so much. You have a great week.
See, I just before we have the question, so we will be like closing this session of question answers, but we'll soon be having an AMA, live AMA on YouTube, also on Twitter and different platforms, and happy to have a lot of these questions and being answered there. In the meanwhile, you can always write to support and write with your suggestions that you have. And very good suggestions have come. Fortunately, we have had those suggestions before, so we are already working. But I'm sure there will be some ideas which will come from you guys only, which we can work on, and that will become the most loved feature next launch. So we can have just last one question, and then we can close it. Sir, who was saying sir? Okay, yeah. You're ready.
Your voice is loud. You can.
डेली ट्रेड करता हूँ। पहले से भी करता था, मेरा दोस्त लोग मेरा देख को अभी भी कर रहा है वो। पहले से तो भी मैं लॉस में था, अभी तो 6000 लॉस है, वो भी भर जाऊंगा। और ये एक बात है, अभी जो वो मेरे साथ ग्रो कर रहा था, अभी वो छोड़ के दूसरा अभी जो मार्केट में आ गया ना, जो कोटक है और है, उसको ब्रोकर चार्जेस कम है बोल के उसमें कर रहा है। आप सोचा है क्या दूसरा मार्केट में कम ब्रोकर चार्जेस है, आप भी उसमें चार्जेस कम करना बोल को सोचा है क्या? और एक क्वेश्चन ये है मेरा, अभी तो 115 सेलिब्रेशन कर रहा है आप लोग, जो हम लोग कस्टमर्स है ना, उनके लिए कुछ ऑफर छोड़ा है क्या? नहीं अगर और एक सर ऑफर छोड़ा है क्या? और एक अभी ग्रो में कुछ अपडेट कर रहे हो क्या बोल के पूछ रहा हूँ मैं। अभी तो 115 सेलिब्रेशन है ना, सेलिब्रेशन के लिए कुछ नया वाला स्कीम तो चाहिए, अपडेट तो चाहिए, कुछ तो कुछ चाहिए ना। सुबह से देख रहा हूँ एक भी नहीं बोल रहा है उसके लिए, इसीलिए वो
क्या नहीं हो रहा है सवेरे से? सॉरी।
हाँ सर,
इसका सुबह से आया हुआ कुछ भी नहीं मिला।
कुछ भी नहीं मिला।
स्कीम का कोड चाहिए
यार एक एनालॉजी देता हूं मैं आपको। बहुत अच्छा क्वेश्चन है, पर है ना कुछ चीजें ऐसी होती है ना जहाँ पे it makes sense to buy the cheapest. There are some things where you can buy the cheapest, but there are some things there where you should not compromise, and I think that will answer your question. So I hope कि तुम्हारे जो दोस्त ये कर रहे हो, maybe someday they will kind of realize that and come back.
दूसरा क्वेश्चन सर, अपडेट
4 क्वेश्चन
ऑफर सर।
यार ग्रो में ना, ग्रो में like customer obsession है, like we want to serve the best and everything and so on, right? Ask us more from providing the service कि हम ग्रो को और कैसे अच्छा बना सकते हैं, प्रीमियम कैसे बना सकते हैं, लाइक ऐसा कैसे ऐसा लगना चाहिए कि फरारी चला रहे हैं, राइट? ऐसा लगना चाहिए कि मजा आ रहा है टाइप्स। आस्क अस दोस्त, तो हमको ज्यादा मजा आएगा। लाइक हम इतनी कोशिश करते हैं आपके लिए बनाने के लिए, हमको भी मजा आता है, राइट? तो उसमें ज्यादा फन है। और अगर कभी आप if you're thinking about this 20 basis point or whatever 5 bips and 20 rupees and so on schemes and so on, I think पता नहीं मजा नहीं आता मतलब
short term
I think we should build wealth. We should build like इतनी वेल्थ की क्या टैक्स का भी क्वेश्चन था कि गवर्नमेंट इतना टैक्स करती है तो अपने को विश करना चाहिए कि यार तुम बहुत सारा टैक्स पे करो तुम बहुत सारा ब्रोकरेज पे करो क्योंकि तुम बहुत पैसे कमाओ राइट दैट इज आई थिंक द वे वी शुड थिंक एंड विल एंड हियर within next quarter.
Yeah, next
quarter
in the analysis section it will come, which is due in next quarter.
Next quarter it will be there.
Yeah. बता दो
DDPI GTT आप DDPI कर दो तो फिर you will not need TPIN. Do you know what is DDPI?
To sell. There is a, if you go below your holdings, there is a process. I can show you.
I'll show you some
now.
Yeah.
Abhi, see, all these questions are very good questions, and you should just write to us. It's a very easy way for us to answer and send you exactly where this problem is solved, or take a feedback and build those features. Very happy to receive as much suggestions, as many questions that you have. We'll be very prompt in answering. Don't wait for such events.
I have one more thing, guys. So one more thing. Sorry. If all these questions, right? If you feel that you don't want to write and so on, I think what we will do is we will arrange these meetups for and this I can say only in this AIKG because we are in Kormangla and our office is in Sarjapur. So what we'll do is we'll arrange meetups. Maybe Sunil will do that.
One more thing is that we are open 24/7. कोरमंगला में आपके बहुत पास में ही है, ठीक है? तो you can come anytime to our office. We'll be very happy to host you there and solve all your queries as well.
A big thank you to the Groww team for answering all of these questions. I'll take this chance to announce the AIKG 150 hashtag challenge winners. So the founders and Sunil can present the goodies to them. The 5 users or the 5 participants who won this are Prajwal, with the handle Prajwal002900 on X. Bharat S, handle is Bharat89727. Vijay Hande underscore on X. Rahul Nidagundi, the Instagram handle is Mazdoorpreneur. And Ujjaini, handle is Ujjaini on Instagram. If any of you here, you can collect your goodies on stage. Otherwise, we'll send it over to wherever you are. Okay, we have one participant. Big round of applause. As we wrap up today's event, I hope you found it fun, insightful, and even exciting. The AIKG events are all about bringing financial literacy to everyone, and today was a real testament to that mission. We've learned some invaluable lessons from our industry leaders and dive deep into the intricacies of stock market analysis. We hope these insights will help you in your investing journey. Remember, this is just the beginning. We'll continue to host all such events, so keep a lookout for future announcements on Groww social media handles. If you like this event, then please drop a line on social media. Don't forget to tag us. Thank you for being here today. Happy investing, everyone.